absolutely nothing I can say to make them happy or to make them stand or smile or applaud. Nothing I can do. I could find a cure to the most devastating disease, a disease that would wipe out entire nations, or announce the answers to the greatest economy in history, or the stoppage of crime to the lowest levels ever recorded. And these people sitting right here will not clap, will not stand, and certainly will not cheer for these astronomical achievements. They won't do it, no matter what. Five times I've been up here. It's very sad, and it just shouldn't be this way. So Democrats sitting before
very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Morning, you're watching India Market Open, and it's a day that the world is watching with close trepidation. So much happening, Alex. Right now, President Trump in his first address to Congress, joint address to Congress, and we have some hint of what he's speaking.
Very bombastic statements, but that's Trump.
So it's all about tariffs. Retaliatory tariff war has begun. Overnight, important notice coming in that expiry for NEC will now be on Monday instead of Thursday. So that's going to be a bit of a shake-up as well. We'll talk about that. And of course, well, Neeraj right here on cue. For once, I watched the match. So I'm feeling very proud of myself. And that's something to cheer about.
It was an easy win, no hiccups.
Yeah, no hiccups almost, except for Kohli. But yeah, if you watch the match, it was terrific Tuesday, but otherwise it was a tariff Tuesday, trade war Tuesday, turbulent Tuesday.
I like the alliterations.
Would we look at a pullback Wednesday? That's the key question.
Yeah, it's a Trump world in any case. That's the biggest T right now. All right, we're going to keep updating you on what Donald Trump is speaking about, but quick recap till then for you as we set you up for the morning in terms of global news flows. US stocks have plunged as tariff war kicked off. So the Dow dropped nearly 700 points overnight. The NASDAQ hitting bearish levels, recessionary levels as well. You've had some pullback, about 0.5% up on the Dow that you're seeing is because of one statement by the Commerce Secretary. But meanwhile, here's what's happened. Mexico, Canada and China have prepared retaliatory tariffs to the US. It's not a tit for tat, but a tariff for tariff kind of a war going on. So Canadian Prime Minister Justin Trudeau announced a retaliatory tariff of 25%. He says further tariffs will come into effect over this 25% in the next 21 days. Mexico has also announced retaliatory tariffs, but they've said it'll come in from Sunday, maybe trying to negotiate or finding room for negotiation. China, meanwhile, has responded with tariffs of 15% on US goods. The Dow did ease. We looked at the Dow futures. I'll pull that up for you again. After Commerce Secretary Howard Lutnick indicated in an interview to Fox News that there may be negotiations on tariffs, but the way this whole situation is moving, pretty difficult to predict where it will go. So what is the street watching out for? Traders will be watching out for ADP data, which tracks private payrolls. That will be out today, give you some sense of the economy. Everything else is in a funk. The 10-year has settled at 4.22% after a volatile session as uncertainty mounts. Crude has slid on reports of OPEC plus output increase. Brent is nearing the $71 mark. And interesting statements from China. So much happening today because you have a key parliamentary meet in China. They set a 5% GDP growth target as their annual parliamentary meet begins. But meanwhile, the big story this morning remains Trump. And I'm wondering if you can cut in just for a couple of minutes before we get Edward Yardeni in and get a sense of what the world and the Indian markets and all of us should make of what Trump is saying.
We have removed the poison of critical race theory from our public schools, and I signed an order making it the official policy of the United States government that there are only two genders, male and female. I also signed an executive order to ban men from playing in women's sports. Three years ago, Peyton McNabb was an all-star high school athlete, one of the best, preparing for a future in college sports. But when her girls' volleyball match was invaded by a male, he smashed the ball so hard in Peyton's face, causing traumatic brain injury, partially paralyzing her right side and ending her athletic career. It was a shot like she's never seen before. She's never seen anything.
So Trump being Trump and laying out what his agenda is, both political, global, etc. Edward Yardeni, President Yardeni Research, joining us this morning. Pleasure speaking with you as always, and thank you for your patience as we've set the context to this conversation. So much to unpack. Let's start with the big T, the trade war, the tariffs. Is it going to get uglier than here, or is there some hope? Are you taking heart from what Secretary Lutnick is saying that maybe we'll find a middle path?
Well, clearly, there's a lot of different messages coming out of Washington. Today, we started out the morning with a very tough message of 25% tariffs on Canada and Mexico and a total of 20% on China. And all three of the countries announced retaliation. Market took a dive on that. Then it recovered some, and then it took another dive. And then after the market closed, as you said, Commerce Secretary Lutnick indicated that by tomorrow, there might be negotiations that resolve some of these issues, which is mind-boggling. I mean, this is really creating a lot of uncertainty, a lot of chaos in the financial markets and in the economy. And I think we're all going to start learning to tune it all out. This is the art of the deal, but deals done in public, and it looks pretty messy. And I think we just have to kind of wait to see how all things settle out. I don't think that it's going to get much worse on the tariff side, but I don't know that for a fact. But I do think that Trump will get a lot of pushback from a lot of special interest groups, and that instead of seeing tariffs go up at the end of the day, we may actually see some negotiations that bring them down.
Dr. Yardeni, hi, morning. So if you tune out all of this, and there's so much to tune out, therefore, then what do you focus on? Because ultimately you'd be waiting for some time, and whether we like it or not, there are going to be implications for the United States, for its consumers, for its companies, because of these tariffs. So what do you focus on?
Yeah. Well, all I'm saying is, instead of starting out with the headlines of what's coming out of Washington, start out with the economic and financial indicators that the economy is generating. And admittedly, the latest batch of economic indicators for January looked quite weak, and there was a downward assessment of real GDP growth from over 2.5% to under to minus 2.5%. But a lot of that was January data. January was the coldest January month that we've had since 1988. So I think a lot of the weakness in the consumer was that related to that. And we will, in fact, see a nice rebound in retail sales and consumer spending in February and March. In addition, a lot of importers decided that before the tariffs are coming, they might as well bring in more of the goods that they typically order. So we had this huge surge in imports in January, and that, from a mathematical arithmetic standpoint, lowers the growth rate of real GDP. That was the big drag on real GDP in January. And I think a lot of that's going to be reversed in February and March. So rather than expecting a negative quarter for GDP, I'm expecting plus 1.5%, maybe even better than that.
Well, and I believe Dr. Yardeni will add a line to this, that we reserve the right to change our minds as often as the President of the United States does, because that was the line. That was the line in his quick takes that came to the mailbox as well. But Dr. Yardeni, at the start of the year, you were in the camp of seeing the S&P 500 reach substantial highs. This morning, the mail that I've received says that, are the odds of a bear market rising? So I have a two-part question. One, are the odds rising for the US markets to give sluggish returns or negative returns? And perversely, could that be constructive for EMs or maybe just China? Because China has just laid out a 5% GDP target. They are, even if they're not throwing the kitchen sink at the economy, they are certainly trying to do what it takes, and the private sector is helping that.
Absolutely. I think starting with the United States, I'm counting on earnings to drive the stock market higher this year. I think we have started to see some real improvement in productivity growth. I think the technology revolution, including AI, but other things like robotics, automation, et cetera, there's a lot of technology that I think is boosting productivity, and companies are spending money on technology that does that. And so I think earnings are going to be surprisingly good this year. I'm not expecting a recession, but again, I have to take that hedge clause depending on what the president says tonight and tomorrow, I suppose. But with regards to emerging markets, I think the prospects are actually reasonably good, especially now that China has decided that, well, if the United States is going to slap a 20% tariff on China, that threatens their export model. So they are going to do whatever they can to stimulate fiscal spending. And by the way, Germany is doing the same thing, and the Europeans are going to start spending more on defense. So there's a lot of fiscal spending, a lot of stimulus going on around the world that I think will continue to drive growth. But it's not going to be red hot growth. It's going to be decent growth. I think commodity prices, including oil prices, are going to stay relatively low. But all in all, I think it's going to be a growth year for the U.S. Economy, for the global economy. I think India has already demonstrated that the growth rate is solid there. Bit of a sell-off, obviously, in the Indian market over the past couple of months. I mean, that's the price you pay for having a great bull market. Sometimes you have a little profit taking. But I think all in all, the outlook is generally good for stock markets around the world.
Dr. Yardeni, thanks so much. Pleasure as always speaking to you this morning. You bring some semblance of understanding to this madness that we're facing on a daily basis. Thanks so much for joining us this morning.
Thank you. Bye-bye.
All right, let's talk about what happened in trade yesterday. You had net flows out from the foreign institutions once again, and to the extent of about 3,400 crore rupees, domestic institutions lapping up about 4,850 crore rupees worth of equity on a net basis. This is something that is par for the course. But take a look at what happened in the equity markets yesterday, because you had the benchmarks that ended lower but climbed off the lows, and quite considerably so. The bulls have once again staunchly defended that 22,000 mark. Let's see if that gets defended in trade today as well, because the initial indications are for a negative start for the benchmark Nifty 50. Reliance Industries once again weighed on the benchmark, losing about 0.8%. It is now trading at very close to 52-week lows, having lost over 20% over the course of the last 6 months or so. Two-wheeler makers, Hino Motocorp, Bajaj Auto, as well as Eicher, all lost ground in trade today. Bajaj Finserv also cooled off somewhat after what has been a red-hot rally in the recent weeks. Oil marketing companies on the other end were standout gainers after starting a little wobbly but ending with sharp gains and having risen quite substantially from the low point of the day. The broader markets have seen buying, with the market breadth turning positive over the course of the session. The mid-cap 150 index gaining about 2% from the lows, and the small-cap index gaining about 3% from the intraday low. PSU banks, energy, oil and gas stocks gained. On the other end of the spectrum, auto, IT, FMCG companies remained under pressure.
Yeah. So, I mean, one, that the global news flow will dominate trade today. So I think it might be very difficult for individual traders to take a call on the session today, because while we will start off negatively, if indeed there is some reconciliatory mood comes in the second half of trade, you might well see a bit of a perk up there. So got to be a bit careful about that. But the short-term outlook, I mean, much as everybody thought that we'll have problems, the short-term outlook, the US futures are in the green. So the short-term outlook may not be as grim because of this whole compromise possibilities, right?
Yeah. So just to add one news flash just now, that Trump will be speaking with Trudeau, who he keeps calling Governor Trudeau, in a few hours from now. So, maybe after all of that browbeating, if something comes out of it, that's a maybe.
Yeah, and which is why it's a bit uncertain. So I doubt that very large positioning could be done, and smart people shouldn't. The conversations with all people, I mean, over the weekend, etc., just reiterating that everybody seems to be betting on safety right now, and the safety is seemingly in financials. Maybe that's why we saw the bank Nifty do what it did yesterday, right? We started off flat, and then the banks really drove the markets higher, while some of the others were a bit tepid. So probably that's the bucket you got to watch out for. What works for India maybe amongst all the other things is this underperformance that we've seen thus far, right? MSCI India has underperformed MSCI EM index by 8% TTM. Remember, history of the last 10 years, MSCI India has outperformed MSCI EM by 124%. This year, we are underperforming the EM index by 8%. At some point of time,
something's got to give.
Something's got to give. And if Indian growth comes back, which leads people to believe, chalo, sab theek hai, then you might see this happen. Now, we're just waiting for data to come. I don't think, Manish Dangi used this very lovely line yesterday, that valuations don't have the muscle to pull markets higher. They are the lubricant. The muscle comes in from data, from earnings, from etc.
But you've just had growth data coming in. Some time before your next lot of earnings, corporate earnings come in, and if they show a good view. So now there is no.
So maybe March 15 to March 30, the corporate commentary that will happen on our channel might help.
Or even before that, some business updates could come through that could have a bearing.
That's March 15th, right?
Possibly from April 1st.
Yeah.
I mean, Godrej Consumer was an outlier last quarter. Otherwise, April 1st onwards, they come in. But yeah, it's the last 15 days. I'm looking forward to the conversations the last 15 days of March, really. I mean, all media platforms.
Yeah.
Particularly NDTV Profit.
Only NDTV Profit. IDs of March, they say. So anyway, a tough month to look at. But let's quickly go through stocks that could be on your radar this morning, and so much to unpack. I want to actually start with BSE if I can, only simply because we want to address what has also been announced yesterday. in terms of changes in derivatives expiry day for NSE from Thursday to Monday. This is something that was announced yesterday by the National Stock Exchange. Will position it right ahead of BSE's expiry on Tuesday. So if BSE does not move its expiry date, then it can affect premiums by 15 to 25%. That's why you might see some pressure today. Revenue also could be impacted by 8 to 12% and earnings by 10 to 15%. This is as per Jefferies. However, if BSE can move its expiry date to Thursday, it might mitigate the impact that we could see. Now, what's Jefferies saying? Jefferies saying over past 10 days, BSE has corrected by 20%, largely due to concerns around new intraday limits that could come in the F&O segment. We told you about that earlier this week as well on Monday. So change in F&O expiry date does raise some risks. Watch out for BSE's stance and outcomes on market share and earnings. Still in the near term, valuations at 37 times FY26 PE may face overhang is what they say. Clarity on impact of tighter open interest limits and market shares in derivatives will be key to re-rating BSE. So BSE might see some pressure today. The other story that we could talk about is, of course, Power Grid, the other stock that is in focus this morning. That's a thumbs up. The company has been declared successful bidder for 3 projects to establish interstate transmission systems under build, own, operate and transfer basis. This is for a Rajasthan project. It's called the REZPHV project. They've won the Kurnool 4th phase transmission project and won an augmentation of transportation capacity at Banaskantha. So an increase in their project there as well. So watch out for Power Grid, could be a thumbs up in trade today. Not so much for Ola. So IFCI Limited has sent a letter to Ola Electric on non-achievement of milestone 1 under the PLI scheme. The company seems to have missed the deadline to start commercial cell manufacturing operations at its gigafactory in Tamil Nadu. So that could be a bit of a downer today. And remember, the stock was up yesterday in trade. Just speaking about Ola and Bhavesh Agarwal taking a leaf out of Elon Musk's book. He's tweeted that he's going to start sending a mail to all his employees who have to tell them what they've done in the last 5 days or in the last week.
It seems he's taken a few pages out of Musk's book.
Yeah, but this one, so he's tweeted it out. I'll say, "Kya chal raha hai" is how he's saying all the mails will be titled, and without exception, everyone working at the company has to write back.
But and also that he mentioned in one of the conversations that, Elon seems to be taking a few cues from him. So no, he did. I have seen this on record. So
okay. Let's just say okay. Okay, so I've got 2 stocks from the healthcare space, and one of them, of course, Apollo Hospitals. This is, first of all, this is a thumbs up. There's more conversations about treatment of or oncology-related treatment that healthcare providers are getting into, and hospitals no different. It plans to start a comprehensive oncology center, and it will launch India's first Proteus 1 proton system along with ancillary equipment. If you're wondering what this means, it is essentially proton beam treatment, which is considered more precise than the traditional radiation treatment for cancer. The facility is going to cost 250 crore rupees and is expected to be added in Hyderabad and commissioned by FY28. That's financial year ending March 2028. This is a positive and another vertical that the company, that the hospital is adding and building. Let me take Biocon first before we get to GVTND. The arm has gotten US FDA approval for 2 cancer-related drugs. One that I will talk about first is dasatinib, and the potential apparently is $20 to $25 million in the first year. It has also received approval for generic Revlimid, and you've probably heard of this brand. It is a popular one, and it could yield as much as $50 to $70 million for Biocon, according to the estimates. It has also gotten a tentative US FDA approval for deep vein thrombosis drug, and this is Rivaroxaban. Okay, I'm horrible with these names, but ultimately the revenue potential could be $10 to $15 million. All of this is positive for the company. Remember, however, that there are a few brokerages out there that are not so positive on the pharma space, particularly because of what you're hearing in the US, and Goldman Sachs is one of them. We'll talk about the fact that they've cut target prices on a number of pharmaceutical companies. Last, GE Vernova T&D, this is a thumbs up as well. There's another order win for this company, 500 crore rupees, this one from Power Grid Corporation of India. The orders are for supply and installation of transformers and reactors under a bulk procurement. And along with this order, you have a total order book that stands at over 11,000 crore rupees, which is quite considerable. This is something that will be delivered over the course of the next 3 years. Remember that the stock was active in trade yesterday, gaining quite substantially, 3.7%, and it has fallen in 2025 itself, Neeraj, 34%.
Interesting, yeah. So should be interesting to see what some of these do. It was almost a day of order wins with a lot of stocks, one order. So I'll start off with maybe two of them. One of them is an order win, one of them is a pact, right? So Coforge, and could very well be the mid-cap IT stock of the morning. Could well be the IT stock of the morning. It's in pact with Sabre Corporation for a deal worth $1.6 billion at a point of time when IT companies are not quite announcing large deals. This one is a shot in the arm for Coforge. It is a deal to accelerate the pace of product innovation and delivery. Now, as a result of this, and we'll talk in detail about what the brokerages have to say, but net Jefferies has hiked the target price to 10,350, saying that the mega deal improves the growth outlook. Morgan Stanley maintains overweight with the target price of 11,500. I mean, times when people are actually skeptical about what could happen to IT companies, this one is clocking in a large deal, and people who track it closely have high target price. I would suspect that the stock, which is about 25-26% off from its recent highs, could well do well today. So keep an eye out for this one. Keep an eye out for RVNL, has received an LOA for a 729 crore order from Himachal Pradesh Electricity Body. The current order book, as a result of which, is now about 97,000 crores, and the company says that in FY26 they expect the order book to be 1.5 lakh crores. So they expect orders to keep on coming in even as they execute, and they've given some numbers for what they will do likely in FY26, 6 to 8% growth in FY26 over FY24. Margins could be slightly better, so on and so forth. So let's see. This is not the pocket that people are fishing in right now, but it's getting the orders, which is important. Last but not the least, Mahindra & Mahindra. From amongst a slew of brokerage notes, somehow I chose this because of the language on the note, but the key point from UBS is that they've upgraded the stock to a high conviction buy. So watch out for M&M. Could be an interesting one to watch in the session
18%
today.
in 1 month. When's the last time it happened, right? I guess COVID. We'll have to check.
Yeah, I'm sure COVID it fell more, but yeah, I mean.
But that was a one-off incident. That's what I'm saying.
Exactly.
You don't, not every month that you see Mahindra & Mahindra drop 17-18%.
There's a good note on M&M Finance as well today. So you might see both.
JP Morgan, right?
I think JP Morgan. So there's a good note on M&M Finance as well. So you might see both group companies fire. But more stocks that are on our radar. Mahima is joining in now, talking about a note by Goldman Sachs on SBI cards. In fact, that was a management meet, and some of those takeaways quite interesting. What is Goldman Sachs saying?
Right. So the note is a summary of key management takeaways, and also they've given a target price of 912, and they've maintained buy on this counter. The management expects credit costs to improve starting Q4. Various portfolio measures undertaken to improve quality is something that the management has guided. The market share is stabilizing for SBI cards, and in terms of cards that are credit cards acquisitions, the overall spend growth is muted. Though realty is healthy, the retail segment is healthy. Growth will recover, though cautiously going forward, is what the management has guided. And RuPay cards are gaining traction. In terms of margins, the management has said that they see tailwinds in the near term. But lastly, they've also mentioned that profitability to see some respite next year, starting FY26. So these are the key takeaways of the management meet, and of course, the Goldman Sachs note is a summary of the key takeaways.
Okay. Yeah, and you know, kind of figures, because Goldman Sachs is the latest in the list of a lot of companies, including Citi, I remember, which has gone ahead and upped SBI Card's targets as well. The numbers seem to be okay, and in a rate cut cycle, you probably expect a credit card issuer to be a key beneficiary as well, presuming that we get rate cuts, of course. So time to slip into a break now, though. On the note that the implied open still suggests a red, but the day might be different than what the implied open might suggest any which ways. On the other side, we get you top trading strategies for the day, a quick picture of what the derivative space is showing, and more. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Back, you're watching India Market Open. Let's quickly pull up the implied open, and there's going to be quite a few factors putting pressure on the markets today. Tariffs, fear of a global tariff war, one of them. The other one also could be this change in expiry days from Thursday to Monday. NSE has done it. What are the implications? Agam is joining us for more on that. Agam, so the weekend in the middle also will skew a lot of plans for options traders, isn't
Yes,
it?
they will. They certainly will. So let's firstly apprise our viewers of what's happened. Firstly, for the first time ever, expiries will not take place on Thursday. They will take place on Mondays. And this does change a lot of things, because all the back tests done over the past 10-15 years, all the systems that are in place over the last 15 years will be rendered redundant at this point in time. And this means that a lot of these traders will have to go back to their drawing boards, and a lot of algorithmic traders particularly will have to go back to their drawing boards and recalibrate their trading systems. Do remember that every single day of the week, when it comes to seasonality trading, well, every single day of the week has a different algorithm that a lot of traders place and deploy. So an algorithm on Monday would be very different from that on a Tuesday or Wednesday or Thursday, Friday, depending on the expiration. And this is taking into account how far the expiration is. And when it comes to weeklies, particularly when you change it from Thursday to Monday, a lot of things do change. Why? Because, as Tamanna said, that the weekend factor comes in. One of the factors is that traders will have to borrow for a longer period in time. That means that they will have to borrow over Friday, Saturday, and Sunday, instead of just borrowing on a Wednesday and then squaring off on a Thursday on account of expirations. The other aspect here is that earlier we had about 2 or 3 days between two of these key expiries, that is the Sensex and the Nifty expiries. If they come so close to each other, we already had the Sensex expiry on Tuesday, and now we will have the Nifty expiry on Monday, that the BSE will stand to lose at this point in time in terms of the premiums that it does garner. That's because all the traction and all the, so at the moment, we do have a lot of traction with respect to trading 1 day before expiration in both these very important contracts. But if you do see the Nifty come on Monday, that means that a lot of the interest will then focus to that particular expiration, and the 1 day before the expiration for the Sensex will not gain as much traction. And under those circumstances, there's a chance that BSE could potentially lose a little bit in terms of its revenues too. So these are some of the aspects that we need to grapple, and we already know that BSE has seen a little bit of correction of late on account of the way in which open interest will be calculated and F&O bands will come through. Well, that said, again, it's going to be a wait and watch. Can we expect, the final question perhaps is, can we expect further temperance in volumes for F&O? There's a possibility in the near term, but in the long run, volumes always catch up. But when that happens is going to be a wait and watch.
Agam, I have a question on BSE, right?
Yeah.
What is the possibility of them shifting their expiration day from Tuesday to a Thursday?
Okay, so last time what happened was that the NSE and the BSE had clashed their expirations, and which is why the NSE relented and said that, okay, you know what, we're not going to clash the expirations on the same day. We're going to move our expiration day to another one. Under those circumstances, BSE had in fact put in a request saying that please, you do need to do that, and NSE had relented. This time around, if BSE does feel like it's going to impact the revenues, then the two options here are that it once again can go back to the NSE and as the SEBI and put in a request, or the other option, of course, is to move their expiration to another date. And that's the easier option to take on at the moment. But again, a lot will depend on the estimation of losses, if there are any at all. Because we do know that over the last 3 or 4 months, the algorithmic traders, a lot of them have moved out of the system, or rather they have changed their systems dramatically because of the change in the environment. So a lot of that also depends on volumes. So a lot of these questions are still up in the air, and we'll need to wait for more clarity from the exchanges themselves as to what they make of this particular move by the NSE and the implications and the estimation that they have on account of this.
Yeah, Jeffrey's currently estimating that if BSE does not move expiry day, then it can affect premiums by 15 to 25%, revenue by around 8 to 12%, earnings by 10 to 15%. So there clearly will be an implication, I guess, to the extent that they have to come out and say what they intend to do about it, I guess. Agam, what are the key levels heading into today? Because we should talk about that as well.
Yes, yeah, certainly. So when it comes to the Nifty 50, again, it's been listless of late. We haven't seen any recovery whatsoever. There's been a lot of expectation with respect to the Nifty moving higher from current market levels, about a short covering, but that just isn't coming through. In fact, yesterday we saw the Nifty again move marginally lower, and this time, it was testing 22,000 as well. And while it remains a psychological level, it's not necessarily a support at this point in time. It's more of a fulcrum, because of late, the round numbers behave more like a pivot more than a support and a resistance. Moving on to the Bank Nifty as well, again, we saw about a 0.25% up move, very little change in open interest. In fact, unwinding coming through there. As far as optional markets are concerned, on the Nifty, 22,500 remains ever more strengthened in terms of a little bit of a resistance zone on the lower end. Again, we are keeping an eye on a 200-point range between 22,000 and 21,800. And finally, in terms of stocks, again, we watch out for some of those names, which would include something like Tata Technologies, Eredar, or Marico, which have seen shorts, longs for CESC and Titagarh Rail, and short covering for SBI, Polycab, and something like a Godrej Properties. But all in all, a listless market. Even in terms of stock futures, we really haven't seen too much traction in terms of underlying movement or, for that matter, change in open interest. I reckon that there is a lot of uncertainty, and that's also indicated by the India Volatility Index, which remains around the mark of 15 at the moment.
Okay. Thank you for that, Agam. So that's the F&O setup for you. Now let's talk about some more stocks which you should have on your radar. And Coforge is an important one. There's been a whole slew of views on the big news from Coforge, and Puneet is joining in for more on that. Puneet, start with telling us why Coforge is in focus and what our brokerage is saying.
Well, we have a brokerage note from Morgan Stanley specifically on Coforge, where they're seeing a 59% upside with a target price of 11,500 on a stock. That's not cheap by any measure, but they've signed their largest ever transaction and deal of roughly $1.6 billion, and that could be one of the key ones going forward, because we've seen a time where the Nifty IT has seen a lot of correction purely because of tariff concerns having an impact on inflation and consumer discretionary spending going lower, and all these IT stocks, especially the mid-cap ones, have seen a lot of correction. So definitely a very big update in terms of the order. What Morgan Stanley is saying is 3 key points. They see roughly this particular deal could add $80 to $120 million in terms of revenue going forward in FY26, and that's roughly seeing a 5 to 8% growth going into FY27 as well. The second key point that they're making is that management has flagged that some of the deals that the company is pursuing is disproportionately larger than they have in the past. So that's another key positive. And finally, the deal size, even on an annual run rate basis, could be much higher than expected. Finally, they mentioned that it could pose an upside risk to their estimates going forward, and they'll watch out for any commentary in Q4. But it's a big update, a big deal, and a big brokerage note.
Okay. All right.
This could be interesting. Yeah. This could be interesting because, as Alex, as you pointed out, that and as Puneet enumerated as well, some brokerages are very constructive. Some are saying that it's a good deal, but valuations plus IT not in favor. Who knows?
Frankly, for Coforge and that whole cohort of stocks, all IT stocks, the big overhang is what's happening in the US. Yeah. So you might have, if there is some peace and lack of turbulence, then maybe someone will say, okay, Coforge has got this great order. But all things considered, there's much bigger problems out there.
Yeah, imagine if Mr. Trump were to say, no H-1B visa renewals, please come and hire in the US only.
So IT has been under tremendous pressure yesterday as well, right?
Yeah.
So the point is well made. It may not get the big thumbs up that you expect.
Yeah, the green over here is because the news is good for them. So let me go through that watch list on that note. Coforge, we've given a thumbs up because they have a contract worth $1.56 billion. So the news is positive. That's why the green. But the fact is that all things considered, and the global space, what Donald Trump is saying, IT may be under pressure and Coforge may be in that boat as well. So don't be confused with what you're seeing there. M&M Finance is also in that list because of an upgrade by JP Morgan. They see a 20% upside. In fact, we'll get you more details on that interesting note there from them. RVNL has an order for 729 crores. Welspun Specialty has won a contract for 231 crores. GVT&D is got an order for 500 crores. It's actually nice to see those order flows coming back, though the amounts are, I don't want to say fiddly, but the amounts are not the biggest. But yes, at least the tap has started. So that's good. But more stocks?
All right. So Bharti Airtel, let's talk about the next one. Bernstein has hiked the target. 20% upside is being looked at this juncture. The stock was under a tad bit of pressure in trade yesterday. Let's see how it reacts to this latest update. Mahindra & Mahindra. And this stock has dropped 17% in a month's time. UBS has upgraded this to a high conviction buy. We spoke about this. It was on Neeraj's list this morning. Let's see how it reacts in trade today. ICICI Lombard, and this is a thumbs down, and it's likely to react negatively. Citi has cut its target on this company. Pharma companies all under pressure, and this is again that pall of gloom or at least a dark cloud that you could see on account of what's happening in the US and the protectionist measures that have been announced by Donald Trump. Maybe the pricing pressures for pharma companies not going anywhere. They might be exacerbated. Goldman Sachs has gone ahead and cut targets on a raft of these companies. Maybe only just a couple it has kept unchanged, and even those have a cut rating.
Yeah, I mean, they have said that on the CRDMO, they prefer Syngene and Newland. They don't like the others. So Lotus, they have a sell. One or two others, they have a sell too. So point well noted. Well, in fact, let's talk about all of that and more with Mayuresh Joshi, HOR, Market Smith India, Johnson right now on the show. Mayuresh, thanks so much for joining in. And before we talk about the macro, just come in on the micro. We were just talking about, a company like Coforge or some of the others, right? In the IT space, which have this big overhang of what will happen because of AI, because of what US policies might be. A lifetime high deal struck today or overnight, can it really mean a big thumbs up? Or do you think even if it starts off higher, it may eventually drift lower because IT is not quite finding favor these days?
Morning, Neeraj. I think there are arguments both in and against the as a whole, right? So I think what happens with this order is that it's incrementally positive because it's a large order and they will be executing this over the next few quarters and years, which means that incrementally the revenue stability and the margins from this order should reasonably support balance sheet growth. On the other hand, all the headwinds that you probably discussed right now, including what Trump might do with the H-1B visa, what might probably happen in terms of discretionary budgets as far as clients are concerned, specifically for the North American markets, is going to be extremely critical in terms of determining the dollar revenue growth, specifically for a large pool of IT companies, Coforge included. The third aspect, obviously, Neeraj, has also been the fact that Cognizant has deferred its salary hikes to August this year. So I think there is some element of fear getting creeping in terms of whether order books are holding up, why is the delay in salary hikes, so on and so forth, is discretionary spending holding up as well. And last but not the least, I think in terms of expectations of EBIT margins holding up, I think they should relatively be better off as we speak for the next financial year. I think with these ifs and buts and with valuation still at elevated levels, I think a re-rating from these levels seem to be on the low side.
Mayuresh, good morning. When we talk about Coforge in the context of tariffs, I'm just wondering how heavy this is weighing from an Indian market sentiment, and not that we didn't have enough things to worry about, but now that he has made it clear he wants to come in with retaliatory tariffs. Even in his speech just now, in his address to Congress, he's talked about high tariffs from many countries, mentioned India by name as well. How big a concern is that? And if that were to play out, which are the pockets that will be most hit in your view?
Morning, Kamala. No, again, I think this is something which is an unknown at this juncture. Whether that imposition happens in the proportion that the Trump administration is speaking about, or is he going to get everyone on the negotiating table and then probably ensure that the US gets a better deal from all the reciprocal tariffs, even if levied on the US as well. And therefore, I think this large unknown is what is creating a lot of flutters across global markets. And that uncertainty is something which is pegging down global growth as well. Individual economies might be hit very, very hard. But let's also not forget that with such tariff impositions across sectors, the US consumer is going to get hit the hardest. And therefore, I think it has to be measured. And Trump is trying to probably get everybody on the negotiating table so that the US gets a better deal with its negotiating partners as well. Having said that, again, I think a large part of our pool, including pharmaceuticals, which have a major chunk, which get exported to the US. There's obviously textiles, which also has a large component, along with our neighbors as well, to the likes of China, Vietnam, Pakistan, Bangladesh, as far as the textile sector is concerned. I think if there is some element of reciprocal imposition that probably comes from these elements or these sectors itself, there might be some element of pain that can probably come through as far as reported numbers are concerned going forward as well. But again, I think it's a large unknown as we speak at this juncture, but I think these sectors might actually feel the pinch.
Okay, on that note, let's just listen into what President Trump has said. When he speaks on tariffs, he's referred to India as being one of the countries imposing highest tariffs on US goods, reiterating that tariffs would be met with tariffs. Listen in.
India charges us auto tariffs higher than 100%. China's average tariff on our products is twice what we charge them. And South Korea's average tariff is 4 times higher. Think of that, 4 times higher. And we give so much help militarily and in so many other ways to South Korea, but that's what happens. This is happening by friend and foe. This system is not fair to the United States and never was, and so on April 2nd, I wanted to make it April 1st, but I didn't want to be accused of April Fool's Day. That's not, just one day was cost us a lot of money. But we're going to do it in April. I'm a very superstitious person. April 2nd, reciprocal tariffs kick in. And whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth. Whatever they tax us, we will tax them. If they do non-monetary tariffs to keep us out of their market, then we will do non-monetary barriers to keep them out of our market.
They tariff us, we will tariff them. April 2nd, not April 1st, in case people think that he's not serious about it. Yeah. So which is why when we hear one statement saying that we're negotiating and think it's a relief, I don't know. It's too early. He seems pretty sure that he wants to come in with reciprocal tariffs.
But he seemed pretty sure yesterday for Canada and Mexico, and now in less than 24 hours, he's probably thinking of a compromise. So
he's just talking to them.
Yeah.
But the compromise is always from the other end.
I thought what Dr. Yardeni said this morning, the art of the deal is playing out in the public space and it's messy. These are his words, and I think it makes so much sense. This is how you crack deals in the corporate world. It's just playing out everywhere.
You're running a nation.
Yes.
It's
like a corporate.
Like a corporate, my God. And it's everyone's money on the line. Because look at what's happening in the market. Sudeep Shah with us this morning, Deputy Vice President, Head Tech, Derivative and Research at SBI Cap Securities. Sudeep, very good morning to you. Pleasure as always to speak with you. Let's get your take on... first, let me start with what you think of this NSE change of Thursday to Monday. Do you think the BSE will follow? What is going to be the impact in terms of strategy for anyone looking at the derivative space?
Morning, Tamanna. Morning, Neeraj. Tamanna, I feel, this is frequent chopping, churning now. Now BSE had changed, now NSE has changed. Now, once again, if someone else changes, I hope for the better it does not change, because it's going to create more and more fuss, more and more confusion of changing all these days of expiry. And what I feel is one thing which will have an impact is a lot of option writers who used to write their positions on Thursday from a weekend perspective, from eating that theta decay for the weekend, might be in some kind of trouble, because you don't know what Monday morning will have in store, and those will be the hardest hit. So from a writer's perspective, I feel it's going to be a bit difficult. Let's see how the volumes pop up, because Thursday also was not bad. Now, let's see, there would be some strategy behind Monday, but we'll have to take it as it comes.
Morning, Alex here. I'm wondering what you're thinking of that 22,000 mark on the downside for the Nifty 50. Does that get defended? And do we see a relatively narrow range for a short while? What is the direction that you're seeing for the benchmark?
Morning, Alex. Alex, I feel we are pretty close to a short-term bottom. And with short-term bottom, I mean we might see a relief rally on cards. And there are a few indicators now. One is that the index is approaching its 100 weekly moving average. Along with that, it is at its 38.2% retracement of the entire move from 15,191, which was the low in June 2022, to the recent all-time highs. So these are two data points which are very crucial. And apart from that, there are some quantitative data points also. Like there is a data point that we study, percentage stocks that are trading above the 200-day moving average. And this is in probably the third or the fourth time where the number of stocks which are trading above the 200 DMA within Nifty has slipped down to 20% or below. So generally when this happens, there is always some kind of a pullback into the markets, or the downside gets defended. So that's the reason we feel that the downside momentum might get limited, and we are staring at some kind of a short-term bottom. Although it might consolidate here for the next few days, it might not be a V-shaped recovery, but definitely 21,800, 21,900 mark would act as an important support. See, 22,000 is a psychological number, so might be that it can get breached once, trap a lot of fresh bears, and then you may see a recovery back. So we feel not 22,000 but 21,800, 21,900 would be a safer support zone. Until this holds, there could be a pullback up to 22,600, 22,800 on cards within the next couple of weeks. So that is our view on Nifty.
Okay. What about individual stocks then? Any ideas that you're seeing this morning, Sudeep?
Yeah, see, we've seen Brent crude prices slipping with a huge downside momentum. So here are a couple of stocks which could get benefited by that theme. The first one is Indigo. Indigo here, if you see the charts since Jan 2023, right from 1800 2000 zone, the stock has been on a consistent uptrend. It made a high of 5,000 zone in September 2024. Thereafter, it slid into a period of profit booking, consolidation. But in the last 7-8 weeks, where a lot of mid caps and large caps were finding difficult to hold on to their highs or they were slipping down, this stock was on the contrary showing higher relative strength. Higher weekly bottoms. So here we feel that there's a breakout even on the daily chart in the from a 15-20 day perspective, and yesterday it had given a good long build up also. So the signals are positive. 45.30 could act as a stop loss. The upside targets could be in the region of 47.30, 47.50. The second stock is Castrol. Now, generally, we don't advocate this because this is a slow stock, but such markets warrant some slow stocks, non-volatile stocks. So we feel that from the current levels, Castrol, which has given a good breakout, it's trading at its highest level post December 2024. So we feel here the stock has crossed its 200 DMA, closed above that yesterday. And with a stop loss of 217, this can be bought for a target of 232, 235 on the upside.
Okay, some interesting ideas there, and you know, it'll be interesting to figure out how Sudeep thinks about some of these post 9:15 as well. So interesting point. Now let's try and talk about some of the companies in focus. You know, Tata Steel in focus for multiple reasons, including a serious bout of underperformance related to some of the others. The stock has ended with minor gains yesterday, and while it has outperformed Nifty by and large over the last 6 months, consistently underperformed its peers. Now, Mihika joins in with more on this. Mihika, what is causing the stock to lag against its peers? I want you, Mihika, at the end of your piece to also mention that if there is some bit of safeguard duty that comes in for steel at large, do companies like Tata Steel benefit, or would companies like SAIL be the biggest beneficiary? But first, Tata Steel and its underperformance.
Yeah. So if you look at from a 1 year, 10 year, 15 year, even a 20 year, time period, Tata Steel versus its closest peer, which is JSW Steel, Tata Steel has consistently underperformed. In the 1 year, shares are down 8%. JSW Steel, on the other hand, have risen 19%. Even if we take a longer term, 15 years, Tata Steel shares have gained 144%, but JSW Steel shares have gained 749%. Now, one of the key draggers are Tata Steel's European operations, which it entered the market by acquiring Chorus in FY8 with an initial cash outflow of around 30,200 crores. And the acquisition has always struggled in yielding positive results. It's been a problem child of sorts. Now, in terms of the total investment Tata Steel has made, over $19.3 billion or around 1.69 lakh crores as per today's rate in Tata Steel PTE over 2013 to 2023. And Tata Steel PTE is the holding company of Tata Steel Europe Limited. Now, they've also infused $2.9 billion into the holding company in FY25 so far versus the approved infusion back in May 2024 of $2.1 billion in FY25, and the use of the funds is yet to be clarified. Now, in terms of historical results, well, the aggregate net profit after taxation for Tata Steel Europe Limited as per the annual reports over FY9 to FY24 only stands at 290.45 crores versus the investments made so far. Even the aggregate cash flow from operations over 2013 to 2023 stands at GBP of negative 130 million, and negative cash flow usually indicates more cash is being spent on the business rather than what it's generating. Even the FY24 reserves and surplus accounts for Tata Steel Europe Limited stood at negative 43,430.5 crores. This means that it has accumulated losses which have exceeded the retained earnings. One of the key reasons why Tata Steel Europe has not worked, one was the high cost of maintaining the aging aging blast furnaces. Second was the 2008 financial crisis, which not only impacted demand and prices, but it also tightened liquidity worldwide, which impacted financing. Even with China dumping the cheap steel that it made into other European, other countries, including European markets, and UK's exit from the EU also lowered the demand for UK steel. Lastly, why is Tata Steel still investing in Europe? Well, the company did shut shop at its UK-based Port Talbot plant because of the high carbon dioxide emissions, but this also meant laying off 4,000 people. So the current aim is to turn the old blast furnace into electric arc furnaces. Even with government support from the UK, it still costs around 1 billion euros for the company, and they're also planning such plans in Netherlands as well.
Got it. Mika, just stay on, because post the break, we'll try and understand if the safeguard were to come in, what happens. But we need to slip into a break. Come back with more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Okay, back with India Market Open, and you know, we did this lovely piece about how Tata Steel has underperformed just before the break. I would urge you to think it through. But Mika, just a very quick perspective, because she's still staying back for us. Mika, if the safeguard piece were to come in, right, does Tata Steel stand to benefit a lot as well, or would it be, let's say, for example, a player like SAIL, which is the highest volume player?
Yeah. So it's not like Tata Steel won't benefit, but in terms of what the FY26 estimates could increase, SAIL does have a higher upside. Any import duty over 5% is positive for the Indian steel industry. The import duty could bring domestic steel prices, help margins and capex investment, and as per Navama, even a potential price hike of 2,000 to 2,500 rupees per ton. But in terms of the FY26 EBITDA estimates and how much it could increase, on a 10% duty, SAIL stands to benefit at 20%, while Tata Steel at 12%. At a 15% duty, SAIL stands to benefit by a 40% increase to the FY26 EBITDA estimates, while Tata Steel at 22%. JSW Steel is also out there, a 15% increase to FY26 estimates if a 10% duty comes in, and a 28% increase to those same estimates if a 15% duty comes in. And lastly, JSPL stands to benefit the least when you compare it to its other peers, a 6% increase in its FY26 EBITDA estimates on a 10% duty, and a 15% increase on a 15% duty.
Got it.
Okay, thank you for that. Mika Chandan Taparia is joining in this morning as well, Head Technical and Derivatives Research at MOFSL. Chandan, always a pleasure to speak with you. Thank you so much for coming on. Let's get your calls on the index first. Where's Chandan? Yeah, there he is. All right, let's get your call on the index first, Chandan. Where are you seeing any support coming in there?
Yes, good morning. Thanks for having me. So looking at the market setup and sentiment, the index has been making lower top, lower bottom from last almost 18 trading session. However, most of the indices have gone into the deep oversold territory. But again, till we don't surpass an immediate hurdle with ease out from FI selling, I think it would be tough for indices to hold at higher levels. However, on the last trading session, market managed to hold the psychological 22,000 marks and headed to 22,100. But the only problem is the follow-up activity. We have noticed that in last almost 19 days, 18 times or 18 days market were negative. So as of now, 22,300 could act as a hurdle. Till index doesn't surpass 22,300, it would be tough to say about the short-term bottom. But on downside, 21,800 or 21,700 could act as a major support. So we have to play the broader range in between 21,700 to 22,300. And I believe if market manages to breach the hurdle on upside, then only the short-term bottom and stability could be there. Otherwise, be with the negative trend of the immediate structure of the market.
Chandan, good morning. And incidentally, you're sharing one of your top picks with Sudeep as well. And I know in the recent past we've been talking about interglobe aviation from the context of higher share, good air traffic, various tailwinds working for the company. But seemingly the charts are also aligning for this company. Could you tell us what you're looking at that looks so good?
Yeah, so Indigo is one of the preferred pick we have from last couple of days. And even chart and setup and the ground check both are supporting the price surge. In fact, I'm traveling from last 5 days all the way from Jaipur to Ajmer, Bikaner, hometown, Gwalior, Mumbai, Jodhpur. So everywhere I find the air traffic, and that also indicate from this price pattern. Talking about the technical setup, the stock has given a breakout and holding well resilience at the time of market decline. And I believe a small follow-up can see the price momentum of 10 to 15%. But on immediate point of view, the way stock has given a breakout and surpasses falling supply trend line with build-up of long position, it can head towards 4,800. So one can buy with support of 4,490 to play the consumption theme of Indigo.
Okay. What about the other idea, Chandan?
So on other idea, I'll focus on the metal name because this pick is somehow finding support-based buying or any small decline is being bought. JSW still is one of the strongest name holding the key moving averages from last couple of days. Apart from that, holding the rising support trend line. So with support of 955, this time JSW still can surpass the 1,000 marks or even can extend the move towards 1,015 levels.
Okay. Well, steel names coming into the fray for sure. You know, the other name that could be interesting is Polycab because while everybody else has spoken, Polycab finally spoke to one brokerage house, and Morgan Stanley is the name I'm talking about. So Morgan Stanley had a management meet with Polycab, and they've reiterated a positive stance. They've said a strong cables and wires demand uptick thus far in Q4. So there's a near-term positive that Polycab has laid out. Exports are shaping up well as per the company, and they've mentioned a bunch of other things that how one the tariffs is one thing, but even qualification or pre-qualification that it might take for a new player and the time that it takes, and how some of the incumbents therefore need not worry so much. So could be an interesting one to watch out for in the session today or the next few days as well. Mayuresh, a quick one. Are you buying into the weakness on KEI, Polycab, RR Kabel, or are you giving it a pass?
Not at this juncture, I think. I think one stock which might actually stand out might be Havells out of the whole package.
Chandan, I'll come to you as well on this, but first, Sudeep, on the OMCs, yesterday you saw, despite the expectation at the start that it would be a good day for them, a little bit of a wobble, and then through the day, you saw quite a bit of interest, a lot of buying interest in, let's pull up IOC, let's pull up BPCL, let's pull up HPCL. All of these walked home with reasonably good gains in the context of what we're seeing. On the upside, what is the potential for these companies?
See, all these OMC names here, what has happened specifically, HPCL was the first one to move out of the pack yesterday, and we saw a good 5-6% rally here. And right from the day where we've seen the stock falling from 400, 420 levels from its December peak around 420 levels, there was not a single day where the stock has rallied for 5-6% like this. So this is the biggest rally post December that we've seen in this stock, and I feel that this could continue because the way it has engulfed the previous three candles. So that means that there is some serious buying, genuine buying, which has come at the lower levels, and the crude price is falling augurs well for this. So I feel here 306, 305 zone will act as an important support. Till this 305 mark holds, the first level that the stock could test is 325 on the upside, where the 20-day exponential moving average is placed. And post that, there is some unfilled gap at 337. So I guess it could go to fill this gap around 337. So at least a 7-8% rally is on the cards on all these names in the next couple of weeks.
Okay, meanwhile, the pre-open session not looking too bad, almost wrapped up on the pre-open session, and you're flat perhaps on the key index. RVNL doing okay this morning among the broader markets. Look at Biocon, some of the stocks that we identified as stocks in news. IDBI Bank also buzzing. OMCs, just let's take a look at them because so much fluctuation in crude prices internationally. HPCL under a bit of pressure, BPCL, IOC also completely flat. But it isn't, I would say, completely disastrous morning considering everything that's happened. But let's get you the big brokerage call of the morning. JP Morgan has upgraded M&M Finance to overweight. It's also hiked its target price to 320 rupees. Harsh joins in with more.
Well, 20% upside is what JP Morgan sees on an M&M Finance. They've changed their stance, of course. 235 was the earlier target price, now at 320. Why have they changed their stance? Break this down into three quick points. First one, with regard to ROA. The ROA downside earlier, basis guidance was 2.2 to 2.5% was the ROA guidance. The downside was sharp. Why was the downside sharp? One, there was margin pressure. Margin pressure largely led by a higher cost of fund as well as yields coming off. Yields came off because tractor financing was slower, which is now starting to reboot. That's the commentary coming from the parent, and that could well be a trigger for yields. Repo rate coming off obviously will help margins as well, and therefore the ROA base is now reset to 1.8 to 2%, and with that reset it's a positive. Second, asset quality with regard to flow rates, which essentially determine how asset quality is expected to be over the next few quarters. Flow rates have reduced, or stage 2, stage 3 flows into stage 2, stage 3 have reduced, which augurs well for asset quality. Credit cost guidance of 1.3 to 1.5%. JP Morgan estimates at 1.4%. So largely will be in line. That's the expectation. Disbursement growth was weak, now improving. M&M tractor segment is expected to perform well, which should aid the numbers here as well. Reservoir levels are pointing at a good agri season as well, which will aid numbers for tractors. All of those are positive. The rights issue is a key overhang, but valuations, JP Morgan believes, are very, very reasonable in that sense, given the rural recovery which awaits us.
Thanks, Harsh, for laying that out for us. Mayush, a quick answer, and I want to go to Chandan as well as Sudeep on some of these financial names as well. But based on what is being said here as well, would you say that cautiously, you could say maybe that some of these pressures that you've seen in the agri lending space, in the microfinance space, maybe the worst is over?
Alex, I think Q4 might still be a pain as far as numbers are concerned. But as rural economy is expected to come back, you're already seeing signs of green shoots emanating from a large part of the rural markets. And with expectations of a better monsoon, with La Nina conditions evolving, I think it should be even better as we head into the next financial year. So yes, I think I might stick my neck out and say that since rural is expected to make a comeback, a large part of these rural themes will start doing relatively better as we head into the first half of the next financial year.
Okay. Chandan, I want to talk about financials with you, and some of the resilience that you saw yesterday also and over the past few sessions has been in the financial space, some of the banks standing up. What are you looking at as opportunities here, or would you say that this is where you go to maybe protect some of your capital?
Yeah, Alex, I think quite interesting question here at this juncture when market is falling down, but Nifty is comparatively holding well. Earlier, we did a study on Bank Nifty to Nifty ratio with the view that Bank Nifty would outperform than the Nifty, but now we are with the view that Nifty will outperform the Bank Nifty. So in that context, I believe selective financial name could be in focus. We were closely tracking the Bajaj Finance, one of the strongest name in heavyweights, has been making high top, high bottom. And on daily chart, it has been holding the key support zone. So with support of 8400, I believe 8900 kind of target could be then. Bajaj Finance, one of the strongest name in this market. Chola Finance could be the other name which has been slightly moving upwards, holding well to its rising support trend line. The stock is trading at its rising channel as well. So with support of 1425, Chola Finance can go to 1490 kind of level. So selective financials are holding well, and I believe if one has to play the short term to medium term market swings, then these names could be the preferred idea as of now, including Bajaj, Chola, Shriram Finance and all.
Sudeep, I want to ask you about Bajaj FinServ, because in trade yesterday you saw cool off after a few sessions of gains, right? And quite considerable gains at that. Is that a sign that some of the steam is getting released and you don't have that much momentum anymore?
Alex, if you see Bajaj FinServ last couple of days, in fact, last 3 days, lower top, lower bottom formation has happened, but that has happened after a bigger rally from 1650, 1660 levels, right from January till this Feb 28th. So what has happened is that during the period, markets had underperformed, this stock had outperformed. And now in the last 2 days, when markets are trying to find its feet, we are seeing some kind of a cool off here, and the other names are finding more traction. So nothing too bad about the stock or nothing too alarming, but I feel after a bigger move in such markets, say a 15-17% all move in a couple of months, the stock has succumbed to some kind of a profit booking. So overall, we feel 1750, 1740 zone will act as a support on the downside. This was the zone from where there was a breakout happened. So this breakout zone could get retested. So 1740 on the downside is what we are looking at. And post then, it could consolidate and rebound back.
Just Chandan, very quickly, a view on Coforge, if you have one. Big order win. Stock is buzzing this morning. Are you seeing more strength coming in there on the charts?
So chart-wise, if I look at the chart, the stock has been making lower top, lower bottom. But the good part is that now support is visible at the lower part and it has gone to the oversold territory. Only concern is that Nifty IT is not performing. So I need to look at the conditional trade. If it manages to move beyond 73.50, then I believe some short covering spikes can be seen to a 7700. So trade the conditional way with hold of immediate zone for an upside target to a 7750 to 7800.
Okay, Sudeep, maybe we asked you, but 20 seconds if you had to pick one top call after the pre-open rates. Sudeep, you're on mute. Quick 15 seconds.
That would be Indigo only, because I feel it's more of a comfort trade here because of the crude prices and the way the charts have shaped up. So I'll go in with Indigo only.
Okay, Interglobe Aviation, a clutch of brokerage is constructive. Q3 Jan numbers were very good for Indigo in terms of occupancies, and Feb had Mahakumbh. Let's see if that rubs off. For now though, nice start really. The implied open about an hour ago was indicating a start in the red, starting in the green. Banks to the rescue again. Wonder what IT is doing. Should come up on a screen 0.5% higher. And then mid caps and small caps, about 1/3% for the mid cap index, 0.5% actually. And boy, 0.7% for the small cap index. This is really good from a bull's perspective. Let's get the heat map up on the screen. Must be even Stevens. Maybe a bit of red. Interestingly, Bajaj Finance is in the red. Finance and FinServ, really. So the performers are down, Nestle, L&T, etc. But what's doing well is the key thing. Power Grid, qualified for a bunch of partnerships and order wins. So Power Grid naturally on that is up. M&M on that brokerage upgrade is up 2%. Then you see Infi, HCL Tech bounce back a little bit. ICICI Bank giving support to the index. Adani Enterprises, Hindalco out there in the green as well. And then there is Tech Mahindra. So clearly tech is doing well. From the newsmakers, M&M and Power Grid on specific brokerage notes and order wins. On the flip side, interestingly, Bajaj Finance. Now I don't know, Tamanna, if this has got to do with some RBI directives for lowering some of the loan practices to select NBFCs, because otherwise I see no reason why Bajaj Finance should be down 2.5% today. We got to probe this a bit more. but not a bad start.
I would say excellent compared to what was expected. M&M firing all cylinders there, and we'll pull up M&M Finance for you in just a second. Power Grid on our watch list this morning has fired. So the verdict right now seems to be not too negative for Indian IT. And that's what you're seeing reflected on the screen. I want to pull up the broader indices just for a second. What's happening with the mid-cap and the small-cap. Mid-cap also holding up. I wouldn't say this is a relief rally in any sense of the term, but at least you're seeing green on the screen after a battering that has been unrelenting. All of this on the screen green. Let's pull up the sectoral heat map, in fact, just for a second to see what's happening over there. Nifty IT, not half bad at all. 1.5%. Realty also, those which are the worst battered making a comeback. Enough of green over there. India VIX also completely flat. Healthcare seeing a bit of pain. Pharma as well. Is this one sector which could be impacted by tariffs more than has been accounted for? Perhaps that's the case. Oil and gas showing a smart up moves even as crude prices trend downwards. Combination of factors there. OPEC Plus will increase production is definitely one of them as well. But let's look at specific stocks that's where all the action is, since we're looking at this boost in IT. Coforge, and we told you Coforge has great news. We gave it a thumbs up. It would depend on how IT stocks performed. IT stocks have been performing well. Those concerns about tariffs receding, at least for today. Look at Coforge, 6% up there right on top. M&M Finance, very positive call from JP Morgan. They see a 20% upside, 2.5% up this morning on M&M Finance. RVNL, not a huge order, 729 crores, but enough to get the street enthused this morning, about 2.5% up as well. Wellspun, GVT&D, just let's look at some of them. All of them orders win actually. 231 crore contract for Wellspun, 5% up on the stock, not half bad. GVT&D had a 500 crore order, also up in the green. Bharti Airtel, there was a 20% upside in target price, just about flat. And of course, M&M is the big one that we saw this morning. So M&M Finance, both group companies are doing well. What's not is ICICI Lombard, maybe. Let's see. Citi has cut its target price. Yes, about 0.5% down. I wonder if we can pull up BSE for you very quickly. And that's one stock which was on our watch list as well. I gave it a thumbs down this morning because NSE has shifted its expiry day from Thursday to Monday. Will BSE be forced to follow? Will this impact volumes? Yes, it is a thumbs down, definitely. And we did call it for you, but 9% down on the stock this morning as far as the Bombay Stock Exchange script is concerned. So overall, I would say not half bad. Even the Bank Nifty perking up now.
Absolutely, and you pulled up BSE at the end. That was exactly what I was going to talk about. 8.5% at this juncture down. And this was on Tamanna's list, and it was a big thumbs down on account of the change that is taking place. We've spoken to Sudeep about this, but I'm just curious about what Mayuresh has to say from an earnings standpoint. There are estimates at this juncture, Mayuresh, if they don't change their expiry day, that there's going to be an effect, a volume effect, there's going to be an effect on the premiums, therefore effect on the revenue. At this juncture, it's a huge negative, and also this is a stock that has taken a battering in the recent past, not just today. What is your reading of this entire scenario?
I think it's an evolving one, right? So I think I'm pretty sure the exchange will come out with some sort of a notification to protect its expiry day related volumes as well. And therefore, I think let's wait and watch on what happens next. But generally, I think with a lot of curves that have probably happened in the last few weeks, as far as expiries are concerned, volumes are definitely down. You've seen a lot of brokerages actually mention that volumes have gone down. With the markets going sideways, a large part of the primary market is down as well. So I think the annuity income that exchanges probably enjoy as well, that might come a tad bit lower this financial year compared to the last 2 years, which has seen exponential growth. And therefore, I think earnings should probably just moderate this financial year. But again, I think the big picture argument, Alex, probably stays with capital market plays because Demat account additions are going to happen in a significant fashion in the next few quarters and years. You're obviously going to see more IPOs coming through, annuity-related incomes remaining extremely steady as we head into the next few years as well. And as we move up the value chain in terms of our asset ownership, as far as an equity base is concerned, whether it's mutual funds, whether it's asset management, whether it's PMSs or AIFs, I think this ecosystem should do well over a longer period of time. But yes, from an immediate short-term perspective, I think earnings will take a hit, and that will get reflected in terms of price, and therefore the underperformance might continue.
Mayuresh, a point is well taken, but I just want to push you a little bit to tell me at this juncture, while the short term might be a bit of a problem for a few of these, what would your primary play in this space be? Would it be the wealth managers or would it be something else?
No, so I think the asset managers would do relatively better, Alex. I was just finishing my point.
Sorry.
I think Anand Rathi Wealth as an example, right, is probably looking decently placed as we speak. Obviously, the kind of numbers that they have achieved, the expectations in terms of AUM growth, they should be hitting 80,000 crores. That was the expectation at the beginning of this financial year. 9 months, they are around 76, 77,000 odd crores in terms of AUM. From a profitability perspective, they have touched 227, 230 odd crores. Their target was 275 crores, so they should exceed that very, very easily. Again, the kind of relationship manager mix to the overall AUM is appropriate at this juncture. And again, I think all these tailwinds that I'm speaking about, there is a huge element of growth that can come through the next few years as far as asset managers is concerned. Because I think a large pool of the HNI households might actually double in the next 2 to 3 years. We need specialized advice, and therefore players like Anand Rathi Wealth might come back.
Wealth managers maybe. Chandan, on the charts, BSE, is this, I mean, one will assume that they will come out with a move to protect market share. I mean, it's unlikely that they will not. Is this a good time to build a position in a BSE while it's down and out?
Yeah, Tamanna, thanks to you and NDTV team. Yesterday we had a detailed discussion around 8 p.m. to understand the effect of the change in expiry from existing Thursday to Monday, and I think that is happening because of the competition. So if something is happening for the competition, then definitely the other party has to bear with the price or sentiment decline. So, but yes, it has seen a decline in price, has been making lower top, lower bottom from last 8 trading session. So we are waiting for any notification or any change in the strategy of the other exchange to get any relief. But as of now, let it decline below 4,000. Then structure will change and the stock can go down to 3750 kind of level. So let it correct by further 3 to 5% to get any sort of stability in this counter.
Okay, Chandan, we'll leave you at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Now, the pocket of concern today is Bajaj Finance and maybe some of the other NBFCs, because as one of the reports suggests that large NBFCs have been advised by the Reserve Bank of India not to renew the line of credit under flexi loans. Now, this is not something that we are trying to verify, of course, but as per one report that has come in, but it's clearly hurting Bajaj Finance, and I presume would hurt some of the other NBFCs as well. But there's a large, sharp dip. No, let's stick to finance, not Finserv. Finserv is, because it's a holding company, is reacting. The company that gets impacted is Bajaj Finance and some of the other large NBFCs. So I wonder if some of the other NBFCs too, Piramal should come up on the screen. Maybe we try and get what M&M Financial might be doing. Piramal is okay actually. M&M Financial should come up on your screen. Let's see. That brokerage note is helping, but large NBFCs, so maybe it's just select few which are getting impacted as a result of this. I wonder what's the trade here, Sudeep. I want to come for you to come in on Bajaj Finance and this downtick today. It's been a very strong stock generally. Would you take a risk and go long at this dip?
Neeraj, I won't do that, because the way, if you see the structure of Bajaj Finance right from January 2025, the first week where there was a big up move from the 7,000 level to 7,500 level, and that was the starting point of the entire rally. Now, that was the time when the 20 DMA, 20-day exponential moving average was breached from the downside, and we never saw that getting compromised for the entire rally till Bajaj Finance hit a high of 87.39. But now, with this kind of a sharper cut of 4%, that has been easily compromised. So I feel that yes, now even if it has to bounce back, it has to consolidate before that. So I'll let it consolidate. The trend as of now is down, and I feel the levels of say 8100, 8050 could get retested before any major rebound. So it could first rebound between say 8050 and 8400. And then we could see some kind of a floor formation over there and then a reversal. So as of now, strictly a no-no for buying it on a dip.
Okay, some news flashes on your screen, and we'll get in our banking editor Vishwanath Nair in just a moment. But clearly, it is this piece of news that has led to this stock coming off. Tata Capital and Chola, we get Chola. So Chola Investment, CIFC, Chola Investment Finance Corporation should come up on your screen as well. I wonder if that one is reacting. Yes, that is down about 2% as well. So, M&M and others don't, because reports apparently suggest they're not. But we'll get Vishy in just moments from now to try and talk about this. So, Mayuresh, any quick thoughts here? I mean, how serious could this be?
No clue. I mean, I'm just reading the news on your ticker as well. So I think just keep.
Okay. So let me just go through what the news is before we get Vishy in, hopefully in the next couple of minutes. Vishwanath Nair, banking editor. RBI has raised concerns on perpetual lines of credit by retail NBFCs. This is what we are learning. RBI has conveyed to some lenders that such products should be slowed. I think this is the key line, and that's important to understand why you're seeing that pain in the entire space. RBI is uncomfortable with lenders extending lines without visibility on borrowers' repayment capacity. That's the key point over there. Perpetual lines of credit allow borrowers to roll over existing credit. Such rollovers could amount to evergreening. So Bajaj Finance, perhaps because biggest in the space, seeing that hit. So let's pull up BAF one more time. Let's pull up AB Capital as well and see what's happening there and why you're seeing that kind of pain over there. 3.5% now on Bajaj Finance. AB Capital also seeing that pain. So this is also interesting because the feeling was that the RBI would take the foot off the pedal. There's a new governor in town, etc. There was a lot of relief coming in to NBFCs just last week. But this is an important point that has come in, and this is something that we're learning from sources. Vishwanath Nair, banking editor, now in studios. What is the trigger for this kind of move from the RBI?
So, Tamanna, just for reference, this is not something that's started today. The RBI has been raising these concerns for a while now. It started with the fintech industry. Essentially, fintechs were issuing a card, which is not a credit card, but acts exactly like a credit card, because the card is backed with a line of credit, and the borrower could then swipe their card, make their purchases, or use those funds for whatever needs they may have, and then repay it over time. Now, as long as it's a line of credit, it's okay. But the problem here is the word perpetual. It's essentially an unending line of credit with a limit that has been given to the borrower. So assume that a lender has given me 10 lakh rupees worth of a line of credit, right? And it's perpetual in nature. I have borrowed 2 lakh from that for whatever business needs I may have. I don't have the funds to repay that money right now. So what do? I go out and borrow 3 lakhs from the borrower, repay 2 lakhs. Repay 2 lakhs because I still have the 10 lakh limit. Repay the 2 lakh that was pending from the previous withdrawal, and remaining 1 lakh, I use it for whatever needs I may have. So now, instead of a 2 lakh outstanding, I have a 3 lakh outstanding. I am not an NPA. I continue to remain a standard account for a very long time. And that's a problem that the RBI has, that you do not have any visibility whether this person is going to actually be able to repay it when the time comes.
What is the category of borrower that we're talking about? Because we know that the RBI has been not very happy with low ticket unsecured loans. What is this category? Is this more SME we're talking about? What kind of borrower?
No, you're exactly right. This is the low ticket unsecured retail borrower base, right? And that's why you're seeing the impact on Bajaj Finance, because that is the base that they have been lending to so far. There is a credit score mechanism, but if you are continuously going to repay by borrowing more money, your credit score is not going to go anywhere. At the end of it, once the borrowing crosses a percentage of your outstanding limit, that's when the credit score starts to reflect any kind of changes. But in essence, the borrower's outstanding dues have not come down in any way or fashion.
How is this treated in the context of lending products, right? Do you have rates that are similar to personal loans, or is it more like a credit card? And also, any idea of the size of the lending book in this space?
So as of now, we're not aware of the size of the borrowing, but this essentially falls between a personal loan and a credit card. A personal loan is a definite time affected loan line that is given by the lender, right? Versus a credit card, which is a rolling credit system, right? And for that, you need a licensed business model. Like, for example, banks have a license to issue their credit card to their customers. NBFCs do not. At this stage, the only non-banks that can issue a credit card are bank-owned NBFCs like an SBI card or a Bob card, who can issue these credit cards and such rolling over of credit. And if you don't have the license, then you should not be engaging in the business. That's essentially what the RBI is saying, because this is evergreening in its truest form.
Just one follow-up though, Vishy. This is not across companies, right? This is being given out to specific companies, I presume. So it's not an RBI directive against the whole NBFC space. It's for specific players.
Because there was a meeting that happened earlier this week, where the conversations have happened between the CEOs of these NBFCs and the RBI, and specific companies were called. Not all NBFCs were called in for this meeting. A certain set of NBFCs were called in. I don't have the list of NBFCs who have actually called in, who've been called in for the meeting, but I do know people who have not been called in. So the people outside are also watching it intently. Now, to be fair, those companies who were not called in do not have such products to give to the retail borrowers. So if they were intending to start that at some point in time, they will not do that right now, because yes, this directive is to specific companies, but it's also general sort of communication to the rest of the market that, listen, we don't like this product, so please don't touch it at this point in time.
And you're seeing the impact on the stocks there. Thank you, Vishy, for explaining it so well and breaking it down so well. So if you're wondering why select NBFCs are under pain this morning, this is exactly what you're saying. Let me come back to Mayuresh now that we have more context and detail. In terms of the regulatory headwind, which is always hanging fire on this entire space, do you see this as a bit of a temporary blip? Because RBI does this and then the companies course correct.
Well, they do, Tamanna, but again, I think you have to differentiate between the larger NBFCs and the lower rung NBFCs. And obviously, I think the lower rung NBFCs are at the mercy on two counts. One, I think the kind of advance mix that they probably got is a little bit circumspect, because they are giving it to borrowers who are having lesser credit score. And at the same time, because of their own credit ratings, their cost of borrowing is relatively higher. So in that context, I think the larger NBFCs should do relatively better. And within those larger names, I think Shriram Finance, just as an example, if you probably look at the construct in terms of their overall advance pool, it's only 2 or 3% that probably goes towards personal finance or unsecured financing as well, which is very, very minuscule in terms of its overall balance sheet. And therefore, I think it might actually shape up well, because it's got better credit underwriting skills as we speak. And the exposure towards the more vulnerable sections of credit are probably a little bit lesser drawdowns are probably expected from that front. So I think Shriram Finance might actually become.
All right, just Sudeep, quick view from you on just that space. Bajaj Finance, do you think is a good buy right now at lower levels?
Tamanna, I would like to avoid, we just discussed that one, because that right now the way it has fallen, I would like the consolidation to happen here, some kind of a floor formation before going in with a buy. So let it consolidate between 8100, 8400, and then we'll see how it goes, because the news flow is negative. In a market which is reversing, it ideally should have outperformed. But with the kind of news flow which is happening, which is surrounding the stock and the space right now, I feel just give it a pass for a couple of days and then let's take it ahead from there.
Okay, thank you so much, Sudeep and Mayuresh, for joining us on the show today. Let's shift focus to one space which is definitely going to be most impacted with what's happening around the world. There's a global trade war. There's a surprise decision by OPEC Plus to increase production. How will all of this impact Indian oil marketing companies? We'll be speaking with Prabal Sen on this in just a minute. But before that, let's get in my colleague Somit for the setup.
Well, if you look at the oil marketing companies, they stand to benefit. In fact, there is a dual earnings trigger coming in for the oil marketing companies, given the fact that Singapore gross refining margin is now trading around the $6 per barrel mark, which is the highest level that we have seen in 2025, while crude prices have come down to around $71 per barrel mark, which is the lowest level in 2025. And both these factors together could lead to higher earnings for the oil marketing companies. Now, on the refining side, if you look at every $1 per barrel rise in the gross refining margin, boost MRPL's EBITDA by around 1,000 odd crore rupees. It increases Chennai Petro's EPS by around 30%. For IOCL, BPCL and HPCL, it increases their EPS by around 14 to 16%. And for Reliance Industries on a consolidated basis, it aids their EPS by around 4 to 5 odd %. However, the benefit of this will accrue only if Singapore gross refining margins or the GRMs continue to remain or sustain at the current levels. When it comes to the marketing side, yes, a drop in fuel prices is definitely positive for the oil marketing companies, because it increases their gross marketing margin that they earn on by selling every liter of petrol and diesel. Currently, they are earning around 9 rupees per liter on petrol and around 7 rupees per liter on diesel. And with drop in the crude oil prices, this could further increase for the oil marketing companies. And generally, with every 0.5 rupees per liter increase in the gross marketing margin, IOCL, BPCL and HPCL see their EBITDA increase by anywhere between 7 to 11%. So if both these factors continue to sustain for the oil marketing companies over a longer period, yes, there could be earnings benefit coming in for the oil marketing companies.
Okay. Well, thanks, Amit, for that. Probal Sen, Senior Research Analyst, the oil and gas space, joins in with his thoughts on this pocket as well from ICICI Securities, of course. Probal, good having you. Thanks for taking the time out. This tape is repeating, but it seems that there are hurdles for crude at higher levels and there is a penchant for crude to move lower. Somehow, we are not seeing a trending, sustainable rally in the OMCs. What are your thoughts on this?
I think one has to keep the OMC earnings delta in a little bit of perspective, to be very honest. When you have a situation of steadily declining crude prices, obviously on the one hand, retail margins, specifically in the current scenario where there doesn't seem to be any pressure to change the prices at the pump, obviously a reduction in crude and therefore product prices would have a downward effect, an upward impact rather on fuel retail margins. But one has to remember that while Somit did mention that GRMs have spiked quite substantially in the last couple of days, the fact is that directionally, if you look at what lower crude prices mean at this point of time from a demand perspective, GRMs, in fact, over Q4, if you look at it, are actually down about $2.3, $2.4 a barrel on an average versus the Q3 average, the Q3 reported numbers. Secondly, when prices actually go down, in a linear way, there is the specter of inventory losses that also comes through. And you have those accumulated LPG losses on which we still don't have much clarity on, whether they would be compensated in part or in full or in what way will that actually happen. So structurally speaking, low prices in a narrow band are always a positive for Indian petroleum companies, whether it's oil prices or gas prices. And there is obviously an earnings delta if the retail margins actually sustain at the current higher levels of 7 rupees plus that they would imply. And, there are fears that crude could go down even further. So obviously all that is a positive, but that has to be tempered by a small amount of cautiousness that, GRMs could also sort of come down if demand sort of remains this tepid, and there could be some inventory and LPG loss impact that can, offset some of this benefit.
Okay, so I'm just trying to understand all things considered, Prabal, and hi, Tamanna here. In terms of lower crude prices, good for Indian OMCs. In terms of overall demand, economy positioning, maybe that's not looking so good. So on balance, would you say that OMCs are looking like they're in for a spell of a better run-up? Which companies, in your view, are better placed right now?
No, I think absolutely. I do not disagree with the fundamental premise that OMCs stand to benefit if crude prices remain in a substantially lower band and sort of stay there. Definitely, OMCs could stand to benefit. Again, I repeat that this is based on a core assumption that there is no pressure to pass on any of these benefits to the final consumer, because that can substantially change the trajectory of retail fuel margins. So that being the case, I think HPCL, obviously stands to benefit the most, because in a lower price environment when GRMs are perhaps not the driver of earnings growth, it's retail fuel margins, HPCL would obviously stand to benefit the most, and that is reflecting in the way that the prices have behaved in today's opening and maybe in the last couple of sessions. Also, the valuations have dropped substantially, so that makes it obviously easier to sort of get in and build positions from these places on. They are well below their 5-year averages. If I look at the last 1 year movement, obviously the stocks are down 20-30%. While that may not be unique to our sector, but it obviously makes things far more comfortable if earnings can see some upsides from these levels.
Probal, sorry, maybe you're repeating this, but I'm still inclined to ask you, because Since the last 2 days, the delta that we've seen in the prices for the OMCs, particularly HPCL, right? Higher share of marketing margins, maybe all of that leading to it. But it's up nearly 12-13% from, let's say, last week's closing price. But with crude continuing to be lower, is there additional delta? Is the risk reward in favor for an investor after this short bout of rally that has already happened? Sorry, I'm making it short term, but just trying to get it clear for our viewers.
No, I think I would refrain, frankly, from commenting on whether it's a tactical buy or not from these levels. But if you look at what valuations are there, and even if you build in that crude basically stabilizes at somewhere between $65 to $70, which sort of looks like a likely scenario at this point of time, then all things considered, I would say that, HPCL, BPCL, and IOCL in that order would continue to be a preferred pecking order. And all three names, given the kind of valuations that they've come down to, even after this rally, I think can continue to probably be absolute performers from here on in for the next 6 to 9 months.
Okay, yeah, sorry, I didn't mean to ask you to comment on whether it's a tactical buy or not. Just wanted to get that clarity that there is a rally that has happened. Right. Is it still a good investment candidate after the uptick that we've seen? So I'm glad that you clear that for us, Probal. The other question is then, what does this price downtick mean for upstream names, Probal?
So for upstream, I think it will be important to see what the absolute level settles at. As you would have seen, in any case, even when crude was at basically around $80 plus levels, the net realizations for these companies were anyways being held at around $73 to $75 a barrel, given the fact that windfall taxes were being imposed and they were taking away the benefit above a certain threshold. So the absolute hit to them, if you really look at it, as long as crude holds above or close to $70, you're talking about a $3 to $4 hit, which is still significant, but not as significant as, optically it would seem that, $82 crude has become 68 or 70. So there is a hit that will definitely be there, and it is definitely a negative from a net realization perspective. But a $3 to $4 hit from what they have been doing in the last couple of years, has basically a mid single digit kind of an earnings impact. And it can be tempered a little bit by the fact that their gas realizations now will continue to actually improve with the changes that have been made in the pricing policy, and the fact that every year the decline that they were seeing in legacy fields will basically be offset, or rather whatever they are doing to offset this decline to keep production at the same level, that portion of restored gas would be subjected to the new well pricing, which is almost a 25% higher price in effect. It's a 20% higher, formula, but it definitely is, given that there is a cap on the current price of $6.50, the effective price actually could be $2.50 higher for this new well gas. So on an overall basis, it is a negative, but I would say that the impact is probably lower than what it looks if you just take absolute prices into account.
Okay. Thank you so much, Prabal, for speaking with us. A lot more to talk about, but I want to address an important story and an important development for market clarity as well. Sriram Krishnan, Chief Business Development Officer at NSE, joining in now. Mr. Krishnan, thank you so much for speaking with us. Just want to understand the rationale behind what has been announced yesterday, the shift of expiry days from Thursday to Monday. What was the reason behind this?
Well, this is a routine, step we have taken after internal reviews. We do keep looking at various parameters. For example, the contract value is reviewed once in 6 months as per SEBI rules. But there are also some other parameters like tick size, for example, which we can review from time to time based on market feedback. And likewise, this change of expiry day is something that we have undertaken based on what we think works best for market participants.
No, but that's exactly the question. Why do you think this works best for market participants? Because there's a mix of views out there among market participants. A Monday means that you have 2 days where there is no opportunity to move. You start on a Monday expiry. Anything could happen over the weekend. So just trying to understand the rationale. When you say it's best for market participants, if you could elaborate on why you think so.
No, the market is very large these days, and the number of people trading on India's capital markets platform is really immensely large. And therefore, it's impossible to arrive at a consensus on such topics. There will always be some people who will be for the decision that's been introduced, and there'll be always some people who will say probably some other day of the week works better. So it's up to each one of them to look at it from their perspective and conclude whichever way they want to. But obviously, while making such decisions, we are guided by large market participants and what they think would be best. These days, there are a lot of geopolitical developments and news flow over the weekend, which then, is immediately possible to address on a Monday. That's the reason why we thought we should go to Monday.
Mr. Krishnan, good morning, Neeraj here. So without getting into what other people are saying, I'm just trying to understand. I heard you say that large market participants and their feedback, naturally so, is a factor that is taken into account. Was this the feedback given to you by large market participants that Monday would be a better day? Because I'm wondering, for years, right, it's been Thursday. How is it that suddenly it's come to the realization that it has to be a Monday?
No, but over the years, we have also seen product innovation and changes in the market operating environment. For example, nobody thought Friday would be a suitable expiry day, but Friday seemed to be a suitable expiry day. Nobody thought initially that we would have expiries on every day of the week, but when we introduced expiries on every day of the week, that also seemed to do well. And if you look at other developed markets, they have only expiry day activity for all practical purposes. They call it 0 DTE. And therefore, the ability or the aptitude of the world seems to have changed. And we have to change according to the evolving situation.
Any challenges that participants have given feedback to you with regards to this move, Mr. Krishnan?
Yes, in the last 11 hours, people have been, sending in their suggestions, and we have been receiving suggestions. Some of them are appreciative. Some of them have suggested other possible options that we should possibly look at if we get a chance at some point in time. So we will keep that feedback in mind as we go along.
Yeah, I suppose it's also a bit about people being used to a certain cycle, a lot of data, backdated data, which is available on a Thursday. I'm just wondering if competition is a factor in mind at all, Mr. Krishnan. And do you expect the other large exchange to come in and also change their expiry days?
See, what the other exchanges want to do is entirely up to them. SEBI rules permit certain things, and so long as the changes that they are undertaking are provided for in the SEBI rules, they are welcome to do what they want to do. We have done this change based on what we have heard from market participants and what we think works best for us.
Okay. Mr. Krishnan, just off topic, one question on since SEBI rules have come in, and multiple rules have come in, of course, but the culmination of all of that leads to likely that turnover and premiums have fallen. Any comments on that you can make?
No, certainly there has been a drop in the premium turnover. There has been a drop in the notional turnover. There has also been a significant drop reported by market participants, which we can also see in terms of the number of contracts that are traded in index options particularly. But I think that is the objective of the regulator, to bring down the activity levels, as the concern that was specifically stated was that there is a huge increase on expiry days, particularly with respect to index options. And the rules were introduced specifically to address that concern, particularly on expiry day speculation. And I think if the volumes have dropped, then the objective has been met.
Okay. Mr. Krishnan, thanks so much for taking the time out and speaking to us. Appreciate. That's NSE. Well, large participants given the feedback. Monday is a great day. A lot of weekend developments, so on and so forth. There exist challenges, I presume, and they are saying that they'll take cognizance of some of the feedback. By the way, just before we go to the next guest, just quickly mark the market. Small caps are up 1.6%, and the Sensex is up 0.75%. The index which is driving this is Nifty IT. So look at the performance of the IT stocks today, 2.2% higher for Nifty IT. So yes, Coforge won a deal, but I think a clutch of others are doing really well. Coforge is 10% higher Then the persistence, emphasis of the world come in. But Coforge, brilliant move there, 10% higher. And some of the brokerages mentioned that this is going to be a big deal for Coforge. It's clearly standing out here. Just wonder, Tamanna, if a Coforge deal and some of the other deals, if they come about, allay the fears of Indian IT not being able to win large deals at the start of the generative AI story.
I think the verdict is still out on where Indian companies are in this Gen AI race. The biggest players in the race are also on shaky ground. One DeepSeek and an NVIDIA completely, falls apart. So I think the last word has not been said yet, but inherent strength in these companies are definitely there. And also maybe one reason, and quickly I'll say this before we get to Nikhil Kumar, who's waiting by, among all of the noise of what Trump is saying, at no point is he saying, I don't want H-1B visas. At no point is he saying, I do not want talented people to come and work here, and I don't want companies to power this economy. It's just about a give and take.
It's a moving piece.
It's a moving piece, absolutely. But let's go across to our next speaker today. Nikhil Kumar, MD of TD Power Systems, is joining in on his business outlook. It's a company with a total order book of 1309 crores. Interesting companies, a manufacturer of AC generators and electric motors, maker of generators for turbines and engines as well, and end user industries include marine, oil and gas, solar and locomotive. Mr. Kumar, thank you so much for speaking with us. Let's talk a bit about what the business outlook is looking like while we're seeing a slowing down overall in the economy in certain segments. What has your experience been?
So we are heavily oriented towards export. About 70% or 72% of our business is export and continues to be export. If you look at the last 9 months order inflow, I'm talking about FY25 versus FY24, we had something like an 88% increase in our export order inflow. Domestic order inflows have been muted, reflecting, I think, the state of conditions in the domestic market. But our business plan, our outlook is export oriented, and on this area, looking at what's happening in AI, the huge power requirement for AI data centers, also in Europe, the energy transition moving towards more renewables. Oil and gas is also the exploration and basic investments in fracking in the US is also going to increase under Trump. Our order book, we are seeing very, very strong order inflows, even in Q4 and going into Q1. So I don't see any problems for meeting our guidance that we have given to the market.
Okay, Mr. Kumar, good morning. I'm presuming that when the market ignores promoter selling on the way up, the market ignores promoter buying on the way down. And one of the things that we saw in things that have happened is that the promoter entities have bought into TD Power Systems as well. It's to our mind, it's a vote of confidence that the promoter sees value at valuations which have come down. I would love to know, how do you see the near term? Because when I see what you said on the con call as well, for after the end of Q3, you had mentioned that you're experiencing strong demand from gas turbines, gas engines and motors, particularly driven by the combined heat and power sector and data centers. Do you stand by this as things stand? Because after DeepSeek, a lot of that demand, the belief around the demand was getting a bit shaken up.
Yeah, I think that's completely, it's history. All the major IT companies have doubled down on their investments. We are seeing massive requirements coming in from the US in data centers and AI especially. And with the Trump administration, a lot of deregulation is also taking place in terms of what kind of permitting is required to put up these power plants required to give the electricity for these large data centers. So demand is huge. I'm doubling down on this bet.
Wow. Oh, sorry, you're saying you're doubling down on
the demand outlook.
On the demand outlook, okay.
Demand outlook for AI in the US.
Okay. So you've seen an increasing trend in order inflows, I believe, in Q4. Could you put this into perspective in terms of numbers? Because I also saw that for you, the export order inflow, I believe, was up, what, 88% YOY?
Yeah, but it's a little premature to give numbers right now. I really cannot.
No, what I mean is, okay, Mr. Kumar, sorry. What I mean is that when you're using a term of 88%, I believe in the con call itself, right? Could you give that perspective? That is it because the base was low, or you've enjoyed a steady trend, and on top of that, you are enjoying an 88% export uptick?
Base was not low. The base has always been something like 65 to 70% of our order inflow has been export.
Okay.
But we have seen big growth coming in from the gas turbine, gas engine side. And that is what has driven this 88% export order inflow in 9 months FY25 versus 9 months FY24. And what we're seeing is this demand from the export markets, especially in the gas turbine, gas engine segment, is continuing. So I'm very optimistic about, as I said, whatever guidance I've given, we're going to be exceeding that.
Okay, so okay, that was going to be my last question, Mr. Kumar. You have a new manufacturing plant that is starting, I believe, Q1, and you've given a guidance of what, about 1,500 crores. Did I hear you mention right now that you will probably exceed that guidance?
Yeah, I have given a guidance of 1,500 in the earnings call. I also said that there's going to be a high likelihood of upside potential.
Right.
And I stick to that.
Okay. Okay. Just to clarify this, Mr. Kumar, I mean, upside, I mean, 1,500 crores is a decent number by itself. Would it be a strong beat as things stand? I'm not asking you for exact numbers, but because order flows are strong, would it be like 2-3% beat, or could it be in high teens, the beat to this guidance that you've given?
On top of this, I mean, I would let's say that the range could be 1,500 to 1,600 crores.
Okay, 1,500 to 1,600 crores. And all of this would happen with decent margins, with you maintaining or improving margins, I presume?
Improving margins on an operational leverage basis.
So you saying you will improve gross margins?
Producing more from the same plants with the same fixed costs. So we'll have an incremental improvement in the EBITDA margins. EBITDA margins are something like 17.5%. So we will incrementally move that upwards from 17.5%.
Okay. My last question, Mr. Kumar, would you need to raise any kind of capital considering that demand is so strong to enhance capacity?
No, we have, our third plant is fully funded from internal resources. It will take us to around 1,800, 1,900 crores. We're also working internally to really streamline and optimize our manufacturing processes. There's a lot of things that we can do to improve productivity and take this 1,900, 900 to maybe 2,300, 2,400, using a lot of Japanese techniques like Kaizen, takt time production, single piece flow. And these are the big operational efficiency, which is going to be the next wave of improvement for the company. And so I don't see any new capital or fresh capital required at least for the next 2-3 years. And even if we do need it, we have enough of cash on the books, and we can always invest by ourselves.
Wishing you all the best for this, Mr. Kumar. Thank you so much for taking the time out and giving us this perspective. That's TD Power.
Thank you for that.
Decent quarter, strong guidance given in the con call, and the company saying that while the guidance is 1,500, they could possibly even do 1,600 crores or a number between that with improving margins. Now, it's important to take cognizance of companies which have done this at the end of Q3, that they've posted or they've painted a strong Q4 and a decent FY26. Not every company's done that, and therefore good to see some of these mid-sized companies doing this as well. Time for a short break. On the other side, more market perspective. We'll also be joined by UTI Asset Management's Ajay Tyagi for his thoughts on the markets. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your...
Welcome back. Quick look at the markets, and it's not half bad. We're having a decent morning actually, and Nifty Auto stands out, IT stands out, Nifty also close to the day's highs, nearly 1% up. So some strength coming in. Among the IT stocks, the standout, of course, is Coforge. We'll speak about that in a bit. Pharma stocks languishing relatively. And one of the reasons could be that Goldman Sachs has put out a report on Indian pharma. It's a mixed view on a host of stocks. They like some, they don't like some. The index now about 0.5% up. Varsha is joining in with more.
Thank you for that. So yes, as you rightly said, now the note highlights what is the issue that the pharma as a sector is facing. So now if you see, the Indian pharma companies have dropped almost 15% year to date. This is despite strong Q3 earnings, but the concerns are, about the US tariffs. So the two potential scenarios that GS thinks is one is country level reciprocity, which is India already has 10% tariff on US pharma, so US might implement something similar. So Goldman Sachs has done an analysis wherein they have reduced the target price up to 12% due to reduced visibility in the US market, and they mentioned that the stocks are trading below historical averages. Now, three investment themes that they are more bullish on, despite these uncertainties. They see investment opportunities in domestic focused companies with low tariff risk, for example Torrent Pharma, wherein they're bullish on because the revenue contribution from US for Torrent is in single digit. Then they are also bullish on CDMO companies like Syngene and Newland Labs. We all know that these companies, CDMO companies, are benefiting from the shift that is happening in R&D. And lastly, they also like value stocks with earnings visibility such as Aurobindo. So these are 3 investment schemes and the 5 stocks which they are more bullish on.
Okay, one more story in the space that Varsha, I want you to come in on is granules. Back in focus today because of the US FDA warning letter on the Gagillapur factory, on that facility. Tell us what's plaguing this particular facility now. It's not the first time there's been trouble.
Yes, so basically US FDA has made the warning letter received by granules public. Now US FDA had issued warning letter on February 26 to the Gagillapur facility of granules. Now why this is important? Because Gagillapur almost contributes 60 to 65% to the overall revenue for granules. Data integrity, quality and contamination issues were highlighted in the warning letter, and analysts do not expect a faster clearance. Now I'll just have 3 points wherein US FDA has issued this observation. One is they failed to establish and follow adequate written procedures for cleaning and maintenance of equipment, and significant contamination was found there. And they've also failed to maintain buildings in a good state of repair. It says that birds, small animals and insects were entering the plant, and there were birds dropping and feathers found inside the plant. And lastly, if you see the point 3, the letter says that company failed to routinely calibrate, inspect or check according to a written program designed to assure proper performance of automatic, mechanical and electronic equipment used in the manufacture, processing, packing and holding of a drug product. So these are the major observations that were found in the warning letter which was made public by US FDA.
Okay, thank you for that. There's quite a bit of detail there. I mean, feathers and bird droppings in the factories. Let's talk about 3.5% down. It would be interesting to speak to the management and understand why this is happening. Let's talk about Coforge though. No doubt about what's happening with Coforge. I mean, irrelevant if some brokerages were a little uncertain maybe before start of day on Coforge. The stock price is speaking for itself, 9.5% up. Puneet, what's the view coming in from key brokerages who are quite excited about the size of this deal? And let's start with what is moving the Coforge stock today.
Well, definitely. They've signed a new 13-year deal with Sabre Corporation of roughly about $1.56 billion. Now, that's one of the biggest deals that they have done comparatively in the past as well. So there are 2 brokerages which have a positive view to maintain the sale rating. Let's start with Morgan Stanley first. An overweight rating, 11,500 is the target, which was a 59% upside from the previous close. They essentially said that, of course, this is the largest deal that they've signed, and estimating an $80 to $120 million incremental revenue coming in FY26. They're estimating a 5 to 8% growth going forward into FY27 as well. And they mentioned that the management had flagged that some deals that the company is pursuing is disproportionately larger than they have in the past. So it's definitely a big positive going forward as well. They mentioned that it could pose an upside risk to their numbers and estimates for FY26. So watch out for this one. Jefferies again hiked the target price to 10,350 from 10,100 earlier. It mentioned that the deal will also improve its positioning in the travel space as well as open doors to more such large deals in the future. And they say that it can reflect its ability to gain share irrespective of the demand environment. That was one of the key points. The Macquarie note is they have maintained the underperform rating. Target price is 5,220, and they mentioned that while this is an existing customer and may not take incremental revenue in FY26 based on whatever the estimate was, it's still a large deal, but they're maintaining the negative stance on the stock. And Axis Capital as well maintaining a sell rating, target price of 7,900. And they mentioned that valuation is the only concern, but it's a big positive on this deal aspect. So the commonality across brokerages has been that this is a good transaction, good deal to win. And going forward, it'll be key on the comments in terms of the demand environment going into Q4 as well.
Yeah. It's interesting because Morgan Stanley's hiked the target price to 11,500 as well. But I must make a point here that for example, I think it is Axis Capital or Macquarie, one of the two notes, which and maybe Puneet highlighted it also. They have said that yes, this is great news, but not necessarily moving the needle too much, and their target prices are just around these levels of 7,800. So keep that in mind. Okay, on to Axis Capital, I'm told. Okay, on to the big brokerage call of the day. And one of them is, of course, JP Morgan. JP Morgan has upgraded M&M Finance to an overweight rating. It also hiked the target price to 320 rupees, and the stock is duly reacting. Harsh Johnson with more from this report. Harsh.
Well, yes, three key factors which JP Morgan believes is swinging things in favor of M&M Finance at this point. One is with regard to ROA. Earlier, the ROA band was 2.2 to 2.5%. That has been cut down to 1.8 to 2% in this difficult credit or asset quality cycle. And essentially, why is that so? One is of course asset quality. The other piece was margins, and that's what they're focusing on. They're saying that cost of funds likely to get better going forward. And second is yields, which have been impacted because of the higher traction that PV is seeing versus farm equipment. Farm equipment, of course, garners better yields, and those are the two reasons why margins have largely been impacted. Now, given the fact that you've got good commentary coming in from M&M with regard to farm equipment, you might well see yields start to climb, and therefore margins get better. So that's the first part of it. The second part is with regard to flow rates on asset quality. This is essentially an indication of what the forward asset quality is starting to look like. And in that space, the flow rates have started to improve, is what early indications from the Q3 numbers seem to suggest to JP Morgan. Credit cost expected now between 1.3 to 1.5%. JP Morgan estimates is 1.4%. And therefore likely to get better. Last off was with regard to growth. Disbursements have been weak, but now with rural pickup, we had M&M commentary talking about farm equipment. I did speak about that. And third point being the reservoir levels have been good, and therefore you're expecting a good pickup from rural, which should aid the disbursement numbers for M&M Finance as well. Poised, therefore, valuations being reasonable. The only possible overhang is the rights issue, which if done, will well signal positive momentum on the stock, according to JP Morgan.
All right, thank you for that. So M&M Finance in focus, Harsh, there with all of the details. But let's broaden the scope of our conversation. Ajay Tyagi, Head of Equities, UTI Asset Management, with us on the show and this segment of the show today. Mr. Tyagi, always a pleasure to speak with you. Are you seeing any kind of spirits flagging as far as domestic investors are concerned? Let me get to that point right away, because the next big warning sign FIs have consistently been selling is whether retail investors, domestic investors will see a bit of concern going ahead and slow down. Are you seeing any signs of that happening?
Yeah, good morning, Tamanna. So I would say, Tamanna, the one very predictable nature of the stock market is that human behavior and investor behavior doesn't change. And if you talk about the retail investors in particular, as they say, they all think in herds, they get excited in herds, and they panic in herds. So we've seen the excitement over the last 1.5 years. There were many professional, experienced investors who were calling out that markets are overheated. Certain segments of the markets are terribly overheated. Mid and small caps don't make sense, but yet these were the categories where we just saw a deluge of money month after month. Now, markets have turned around. If you look at the data on a one-year basis, most parts of the market have turned negative, in fact, even large caps, and mid and small caps a little bit more. So obviously, to that extent, this is the next few months and quarters are going to see a reversal of the typical retail investor behavior, which is starting to panic. I hope not, but possibly stop their SIPs, maybe even redeem to some extent. So I won't be surprised if the same old script plays out once again.
Okay. Now, having said that, and of course, retail investors will follow the herd. This is why we're all here to tell them in what direction to go. Do you feel that the worst is over right now, Mr. Tyagi, or are you still concerned when there's constant uncertainty because of what's happening globally and largely emanating from the US? We don't know. Are we in the start of a trade war? Is the trade war and talks of trade war just, carrot and stick, what is happening, no one knows. Do you see the problems ending from an Indian perspective, Indian equity perspective, or just starting out?
Tamana, that's a great question, but let me say that a bit of this is crystal ball gazing. We just don't know. With all due respect, the President of the United States has a mind of his own, and we've seen a bit of his behavior over the last one full month, and of course the last weekend. So it's very difficult for any one of us to gauge. But yes, if he can do that to his closest allies, i.e., the NATO as well as his NAFTA partners, I won't be surprised if he does the same to his Asian partners. So to that extent, yes, the window is very clearly open in terms of the US putting up some tariffs for the Asian countries as well. That's point number one. But you see, I don't think our problems are emanating from the US. When markets are extremely punchy in terms of valuations, they need an excuse to actually start to come down. And we ascribe the reason to be something which is exogenous, external, whereas the reason could be as simple as valuations being untenable. And that's something which we've been saying for many, many months and quarters altogether. Possibly we were early enough in calling this out. Markets went up another 10, 15% before they started to fall. But I think we've been thinking about the overvaluation bid for more than 12 months now. So the situation has improved. Let me dissect the market into the typical market cap buckets. Large caps are getting close into the fair valuation zone. Are they cheap? The answer is unequivocally no, they're not. Are they expensive? A tad bit compared to the long-term averages, but they are within what I would call as 5 to 10% of long-term averages. So I won't fret too much about it. One can selectively pick great businesses from this particular bucket. But the problems are fairly deep in case of mid and small caps. There, the valuation cuts will have to be even higher, significantly higher, I would say. And we've just seen a beginning of the correction only in the last 2 months. So I would say remain cautious about mid and small caps. Now, this doesn't mean that out of, let's say, 500 mid and small caps, you won't find even a dozen companies which are either reasonably valued or have great business prospects which warrant higher valuation. But on the whole, we would still be circumspect about mid and small. Yeah.
Ajay, good morning. Neeraj here. Playing the devil's advocate, we did some numbers, right? And the small cap index trading on a 9% EPS growth for FY26 trades at about 21 times or 22 times at best, right? 10-year average is much higher, but 21, 22 times. So not egregiously expensive, part one. And for people who are stock pickers, I mean, the index valuation per se, I mean, the index doesn't necessarily have to become cheap because a lot of broader market stocks have fallen like 9 pins. So is that space uninvestable because the narrative is that, and rightly so, that it is still expensive? Or is there value existing even there?
Hey, good morning, Neeraj. Good to chat up with you. First thing first, Neeraj, the beauty about statistics is that you choose the start date and the end date, and you can pretty much write any hypothesis and validate any hypothesis. So, you started your conversation by looking at a 10-year number on the small caps. And I guess that's where we completely disagree. 2014 as the starting point has been, until date, which is the last 10 years, has in a way been a very, very strong bullish market. We did see a sell-off during the IL&FS crisis, which was short-lived, just a few months. We did see a sell-off during the COVID crisis, which lasted at best for about 4 or 5 months, again short-lived. So both these episodes don't move the numbers. The mistake which we certainly don't want to do is either for mid or small or large, look at only the last 10-year numbers and then validate or invalidate our hypothesis. So that's the first part, first response to your question. If you look longer term, smaller caps have been trading slightly lower than large caps and mid caps, by the way. So maybe about 15 times 1 year forward. Juxtapose that to 21 times and you get the answer. We are clearly looking at that part of the markets being 50% more expensive than what they have been in the long run. The second question was, do we just shut our eyes to this market and say that, okay, this is untouchable? Neeraj, that's the lesson which many experienced investors like ourselves have learned, that you can never shut your eyes off to anything which is absolutely positive and say that, look, I'll buy this and forget it and shut my eyes for the next 10 years. nor can you equally say that, look, this is so bad that I'm going to shut my eyes for the next 2-3 years and come back only after the this phase is over. So to us, and I did mention this previously, the segment warrants caution. Does it mean that we don't dig deeper and find businesses that are making sense to us, notwithstanding their valuations, or who knows, maybe trading at reasonable valuations? To that, my answer to your question would be that no, we would still do that hard work and labor in terms of trying to scan the universe and say, is there something there which is still making sense? Yeah.
Okay. Okay, Ajay, so, let's put it this way. Fresh inflows that are coming in, I'm presuming if you are still taking inflows into your small cap, mid cap funds or multi-cap funds, if you will, as the case may be, are you deploying them or are you sitting largely on cash even now because the space is expensive? And if you are deploying, where are you deploying?
That's a great question, Neeraj. So I would say that, look, there are opportunities selectively. I can't get too specific, as you're well aware.
Yeah, but themes, just color.
Absolutely. If I take a 30,000 feet view, Neeraj, I was on your show about 6 months back, and I said that, look, we love private sector banks. I would say that, yes, they've corrected the least in the last 6 months, and we still feel that relative to where the entire market is, there is value in these banks, and these are very well-run institutions which basically, are not only primed for credit growth, but they are institutions which are well primed for the entire financial inclusion theme and financialization of savings theme. So therefore, our clear predilection and our clear comfort in terms of both growth and favorable valuation still lies in that camp. If I look at the auto OE camp, both in two-wheelers and four-wheelers, this is again one part of the market which may not deliver immediate growth, but from a valuation perspective and looking at their growth prospects in the fullness of time do give us comfort. So, there are, of course, beyond these two themes as well, there are cases within different sectors. There are businesses within different sectors which are still making sense. It's just that, if you stack up the whole thing, you'll say that, look, there are very few cases of comfort and still more cases of discomfort. Yeah.
In those cases of comfort, does IT figure at all, Mr. Tyagi? And if I just further that to say pharma, some sectors which are clearly going to be impacted one way or the other with tariffs and the extent of tariffs that come in. How would you look at that scenario and where would IT stand? Because one would argue that like private banks, even Indian IT has relatively been slightly more resilient.
Tamana, I would agree here, and I would say that the correction, albeit not a very significant correction, but the correction that we've seen over the last 15 days in some of the IT names, both large and mid, is definitely giving us that much more comfort. Rupee depreciation and dollar strength is always good news for this sector. As of now, it looks like that IT services or outsourcing of IT is not on the radar for the president and his team to basically target. In any case, we are extremely positive around the let's say the IT budgets improving in the coming years after taking a breather over the last 2 to 3 years. So yes, IT looks attractive to us. We just have to be a little more selective there. You spoke about pharma. Now, this is one sector which has done fantastic over the last couple of years. Valuations haven't still corrected meaningfully. And, I'll go back to my response to your very first question, which is that there is a bit of an imponderable element here in this sector. We are, worried about maybe tariffs coming up for some of these companies exporting to the US, either in terms of formulations or API, actually being penalized by way of tariffs. So this is an imponderable. We can't say anything for sure. Valuations aren't very attractive. In fact, they've run up compared to their long-term averages. So I would say that not one of those sectors where you certainly would want to pull the trigger right now.
Okay, difficult to say, definitely difficult to say. But thank you so much, Mr. Tyagi, for speaking with us. Ajay Tyagi, the Head of Equities, UTI Asset Management, on what is the outlook for markets. Well, outlook looks good today. Even as we wrap up the show, Neeraj, from where we started to where we're now, it's a great comeback, I would say, compared to, I mean, the fact that you haven't seen this kind of strength in the markets and holding on to it for a while. You could argue that after the drubbing that we have seen, this is maybe a bit of a ointment on a huge gash in terms of what people's portfolios are looking like. But I'm quite enthused by seeing what we're seeing, not just in the IT pack, and of course we've been talking about the Nifty IT, but look at the broader markets also. Look at the mid cap, look at the small cap, pull up the advanced decline ratios, and yes, there's a sea of green.
Yeah, touch wood. All good. Let's see if this continues. But on that positive note, it's a wrap on this leg of India markets open on that positive breath note as well. Thank you so much for tuning in. Up next is Ask Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and we're going to take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions, and to that end, you can either call us on the number that you see at the bottom of your screen, and that is the landline number, or you can send us a message on the number on the top of the screen. That's the WhatsApp number. And Mahima and I will be able to respond to you directly. Now, let's take a look at where the markets are right now. And the indications at the start were that it's going to be another day languishing in the red. But the reality turned out to be very different. Very soon after the start of trade, you saw gains, and we've built on those gains through the session so far. I guess to a certain extent, we were waiting for this to happen because we've seen quite a bit of selling and pressure on the downside, and you were expecting there to be a bounce around that 22,000 mark. Currently, on the Nifty 50, we're treading very close to that 22,250 mark, and there's more strength, in fact, in the broader markets, where you have the mid-cap index that's gaining about 1.5%, and you have the small-cap index that's up about that same amount. As a result of which, the market breadth tilted very firmly in favor of the advances. Let's see whether this strength continues through the course of the day. Of course, as there normally is, there are pockets of strength and there are pockets of weakness. Let's talk about the strength first. You have IT that's up and about today after languishing over the past few days. The pack as a whole gaining about 2% or so, but there are a few individual names that have made headlines. Among them, of course, Coforge, which is gaining about 9% on the back of its largest ever deal win. It's a very significant win from Sabre, which is a long duration deal win. It's over $1 billion. And so this is being given a very key thumbs up, or very clear thumbs up from the street. But everything from a Persistent to an L&T Tech to an LTIMindtree, Tech Mahindra, all gaining over 1% right now. Let's take a look at some of the other sectoral performers. In fact, let's pull up that map as well. You see green across the screen. Metals as a pack doing particularly well, and what is emerging from China is being seen, of course, as a positive. The pack as a whole gaining about 2.5% or so. Realty as a pack was underperforming in the recent past. It is gaining ground again, up about 2% or so. Auto got beaten down yesterday in trade, particularly the two-wheeler manufacturers. It is up about 2% or so. So all of the sectors and the stocks that took a bit of a battering in trade are in fact gaining ground. A couple of stocks that are not doing particularly well, I'll mark some of them. Bajaj Finance is one of them because of regulatory news once again. It's recovered from the low point of the day, but there are strictures that the RBI has apparently come up with related to a component or a small sub-segment of the lending space, which has to do with a line of credit being given. It's unsecured, and there are measures that the RBI is contemplating to curb some of that lending. Apart from that, you have, of course, Chola Finance, which is also down about 1.5% and has recovered from the low point of the day, but this is also a stock that is getting affected because of this very same reason. BSE is the last stock that I will mark today, and that is a stock that is really taking a battering, but it has come off the low point of the day. It was down close to 10% at one juncture at the start today. It is now down about 5% or thereabouts, and this is because the NSE has shifted its expiry day for derivative contracts weekly to Monday, and this is considered bad news for the BSE because it has its own weekly expiry for the Sensex on Tuesday, and there's an expectation that this will affect the volume as well as the premiums that they charge for their Sensex contracts, as a result of which you could see a decrease in revenue. A response from the BSE is still sought in terms of what they intend to do to curb this potential fall in revenue. Mahima.
Right, absolutely. With that, let's also welcome in our guest for the day, Rajesh Agrawal, Head of Research, AUM Capital, joining us, and Akshay P. Bhagwat, Senior VP at JM Financial, also joining us. Welcome to both of you, gentlemen. We also have, our first caller lined up for the day. Sampath Balaji is calling in from Chennai. Sampath, a very good morning to you. How can we help you?
Good morning. I hold 600 shares of Shakti Pumps bought at 120.
Okay.
Wow. Can I buy more? I'm a long-term investor.
Okay.
Can I invest more? I need to buy another 400 also. Can I do it?
Okay. Sampath, I just want to understand that what was your thought process, behind buying Shakti Pumps, because you entered at the right levels, I believe.
Largest manufacturer of solar pumps big order from Uttar Pradesh.
Okay. All right. Okay, Sampath, got your query. Rajesh, very good morning to you. I'll come to you. Shakti Pumps is the counter and Sampath is sitting on a profit of over 4 lakh rupees. What's the view like and what's the outlook like?
See, outlook is very positive. Good morning, Mahima. Good morning,
Alex.
Alex.
I see. I'm not the only one, Rajesh, that has problems with names. Welcome to the club.
It's just because I'm sitting with you for so long of time that I got that. Huh?
Yeah, the point that you were making on Shakti Pump.
Sorry.
No problem.
The number this quarter was not that good, I would say, but long-term prospects looks really good because of the fact that it's one of the largest submersible pump manufacturers in India, and the government focus on rural economy and all. I think this company is going to do well. Maybe a target of 1,000 odd rupees in the next 6 to 9 months is quite possible. So at this point of time, I would say stay put with the stock.
Stay put with Shakti Pumps. And in any case, I guess, let's pull up the intraday chart, please. I just want to know if it's at circuit. It is, in fact, at circuit. And so, therefore, if you want to buy it, it's not possible for you to do so today. Let me go across to Akshay just very quickly on the charts. Of course, you can't buy today, but when given the opportunity, would you deploy further, Akshay, in Shakti Pumps?
First of all, good morning, Alex and Mahima. And Shakti Pump, the longer term charts are very strong. It is just the short term with the pain of the market. Also, this stock has borne the brunt of some rough patch. But overall, I think it's bounced back from its 200-day moving average. Overall, the technical structure is pretty strong. And I believe 750 is a very strong support zone, which is in the making. So yes, I would recommend to hold whenever you get the opportunity, when you can buy slightly at higher levels in case today you do not get it, since it is on circuit. But overall, looking at the broader setup, the stock is all set again for revisiting levels of 1150.
Okay, and incidentally, quite a few stocks testing 200-day moving averages. We were talking about this earlier on in the session for the Nifty 50 as well. Only 20% of stocks trading above their 200-day moving average. So there was bound to be some interest at these levels. Now, speaking of drop from life highs, let's pull up Ganesh Housing Finance, because we've got a question from Vinod, who's writing in from Mumbai, and he's wondering, it's down about 20% from the life high, and he noticed a breakout yesterday and a continuation today. The stock is up about 1% and 1.6% or thereabouts. The question's for you, Akshay. On the technical basis, on the charts, is there a case to be made for further upside, and would you deploy at this juncture?
Well, for Ganesh Housing Corporation, if I look at a slightly medium-term charts, it's broken the support of 1200, so that's slightly a negative development. But from a longer-term perspective, here you need to have minimum 6 months of time frame of holding. Then the price structure is good. So overall, the belief is that there is a trendline support somewhere around the levels of 950 to 1000, and recently the bounce back has come from near the level of 1000. So be open to averaging in case these levels revisit again on the lower side, but the thought process is 1000 is a very good support. The recovery will not be fast, but whenever it recovers, the broader expectation is with a time horizon of a year minimum, the stock can revisit levels of 1400 plus. So hold from a longer term perspective. Short term, there will be some hiccups, but broadly the technical structure from long term is still positive.
Follow up, at what level would you buy?
At 1032, I would buy some quantity at current market rate, even if it's a long-term investment. If I want to micro time it, then I would, for short term, then I would wait for levels of 1000.
Okay, all right. I believe we've got our second call of the day, and Rishikesh is calling us from Maharashtra. Hi, Rishikesh. Good morning. How can we help you today?
Yeah, hi, Alex. Good morning.
Good morning. Please go ahead.
I have bought Wadi Renewable Technology stocks at price point of 2300, and currently I'm holding 55 shares of it, and with a loss of 80,000. So, what would you recommend? Should I buy more stocks to make it average, or should I hold for it?
Okay, your buy price is 2,300. All right. So very elevated. Though the stock is bouncing back today, Rajesh. The question's on the fundamentals, I guess, so, because we've seen significant erosion. What would you do with something like this?
I would try to exit at higher levels on every bounce. It would be prudent to get out of the stock because even at these levels, I think its valuations are overpriced. There were some issues. The CFO resigned some time back, and those things happened. So I think on fundamental side, it would be better to wait at this point of time because because of the market condition, it has fallen very high. But around 950, 980 odd levels, I would suggest to exit.
All right, so that's the view with respect to Vadi Renewables. The next counter that we're talking about is Tata Steel. Mahesh from Bengaluru wants a view on this particular counter from a longer term perspective, and he wants to know what should be the target to invest as well as the stop loss. Now, Rajesh, in terms of Tata Steel, our metal analyst today analyzed that why Tata Steel has not been performing well. 1 year it's down by around 8%, and this is because Tata Steel Europe has been a key dragger for the company. It entered Europe in around FY 2008, but since then it has made an investment of approximately 1.7 lakh crore, and since then it's been incurring losses of around 29,000 crore. So overall view is that the Tata Steel Europe is the reason why Tata Steel has not performed well since the past few quarters as well. With respect to a longer term view, what's the outlook like for the counter, and what are the kind of targets that you can foresee, and what are the light levels to enter into the stock?
See, I totally concur with the gentleman's view that just because of European operations, the stock has been a drag. But domestic demand is good. Domestic capacity is good. They have been adding capacity. They are talking of reduction of debt. Going forward, we believe that as per steel organizations' data and all, we believe that steel demand is going to go up because of high infrastructure projects coming in, capex coming in, even real estate is doing well. So steel as a whole is going to do well, out of which Tata Steel, I think valuations are very attractive. These levels are good levels to buy. Maybe because of market condition, it may correct for 5-10 rupees here and there, but that's a different thing. For a long-term investor, I don't think that should matter. We have a target of around 180 odd rupees in the next 1 year. So it's a buy from our side.
Buy with a target of 180 for the next 1 year is the view coming in on Tata Steel. Our next caller, Shweta from Hyderabad, is calling in. Shweta, very good morning to you. How can we help you?
Hi, Mahima. Good morning.
Good morning.
My question is regarding Titagarh Railways.
Okay.
I have 114 shares at 1752 price value.
Okay.
I know I cannot recover my losses completely near term, but I want to know, is there any chance at least 50% of my losses can be recovered so that I can be cautious and take an exit?
Okay, got your query. Akshay, I'll come to you since she's looking for a near-term, exit for the particular counter. She's sitting on a loss of around over a lakh rupees, and Titagarh is the counter. What's the view like? Should she wait to recover some of her losses? Her target is to at least recover 50% of her losses.
If the objective is to recover 50% of the losses, the suggestion would be might as well shift to some other stock in the rail space if you're keen on this space. And technically, IRFC has a better chart setup than Titagarh Wagons. Titagarh Wagons has a negative price structure from the short to medium term perspective. Obviously, if the market recovers, since it is highly oversold, then you might have a relief rally kind of a phase where Titagarh might see levels still around 740 to 750. But ideally, that's the place where you need to take an exit. Shift over to IRFC where the targets can be more promising. I'm looking at targets of around 150 odd levels from a time horizon of 6 odd months. So the scope is more promising out there. So shift is the advice if you want to recover 50% of your losses.
Also in the rail space, Chandi is writing in from Kottayam in Kerala and asking about Rail Vikas Nigam, and I'm coming back to you on this one, Akshay. Bought at levels of 39. The question is, should he continue to... I don't even know, is this... Can we pull up the very long-term charts, because I want to know if this is actually right. Am I reading this number right? Yeah, so it's quite possible that he did, but he's holding for the long term. So I'm wondering whether you would suggest taking some money off the table. He's bought at levels of 39, and so he's making quite the profit in this counter.
Yes, you have to take some money off the table, because if you have invested at 39, you've also seen levels of 6 20 plus, and again it's back to 320. So, almost half of the profits shaved off from the top levels. I think there's a small pullback in the making. 380, 390 is where this respite rally might work out for rail stocks, RVNL especially. This should happen within a time frame of 3 to 5 months. That's the point where you need to take off at least half the quantity of your profits since you have entered at very lucrative levels.
All right, that's the view on RVNL. And wow, kudos to you for having held out and despite the fall that you've seen, right? So you've made quite a considerable amount of money. 1.4 lakh rupees despite the fact that the profits have halved, and that's saying something. We've got our next caller. Sagar is calling us from Hyderabad. Hi Sagar, good morning. How can we help you today?
Hi Alex, good morning. So I need a view on this Pennar Industries.
Okay, Pennar Industries. What do you want to know?
Can I buy now or at the right time to enter?
Okay, so it's involved in precision engineering products. It's a small company relatively, 2,178 crore. Why is this attractive to you, Sagar?
So the sales growth and everything is looking promising.
And you've studied the last quarter results, or have you gone further back?
From actually last year, I'm tracking before last year.
Understood. Rajesh, I'm hoping that you have a view on this. It's currently trading at 161, up about 3%, 2,200 odd crore market capitalization. Would you pick this or would you pick another stock?
If given a choice, I would definitely pick another stock, but since the gentleman has already taken that, so I would say at this point of time, stay put with that. Because of the fact that...
No, let me clarify. Let me clarify. I think, Sagar, have you bought yet?
No. I wanted to buy.
You haven't bought yet. So basically, am I right in assuming that you want to get into the engineering space and you're looking for prospects?
Yeah. No, actually this company was good, so I wanted to check whether it is.
Okay, I got your question, Rajesh. So he hasn't deployed money yet. He thinks that the sales and the P&L that he's looked at over the course of the last few quarters is positive, and he's wondering whether to do so.
See, I totally concur with the view that the numbers are quite positive, but recently they have signed a JV with one of their subsidiaries to produce solar modules for domestic and international market. All things are good, but the problem is the size is very small. And when the market is in downturn, these kind of stocks, they are quite a big no. So it would be very risky to enter at this point of time. Maybe some other better counters would be a better choice to go for. Because of the correction, a lot of good companies, strong, bigger companies have corrected by 20-25%, and they can be a better choice to buy.
Okay, that's the view with respect to Pennar Industries. The next counter that we're talking about is Amara Raja. Amol from Noida has bought 100 shares at 1498 a piece, and he wants a short-term view on this particular counter. Akshay, what are the charts looking like, and what are the supports and resistance that you're seeing?
Yeah. So for Amara Raja Energy, I hope it is. The support is roughly around 900. That's the low point of the last couple of months, and time and again we are seeing a bounce back from this particular level. So I believe a short-term bottom is in the making around 950 odd levels as I currently look at, and this recovery, if it happens, can see the chart see the levels of around 1150 to 1200 within a time horizon of a couple of months. So yes, ideal for a trading pullback, short-term investment. Keep a strict stop loss of 925 and target around 1100 to 1150.
Okay, 1100 to 1150 is the target for Amara Raja. We have our next caller, Murli from Bengaluru is calling in. Murli, a very good morning to you. How can we help you?
Very good morning, and thank you for taking up my query.
Sure, go ahead with your query.
Yeah, I bought Bharat Rasayan,
okay,
a company in the field of pesticides and other chemical.
Okay.
I got 67 shares at an average price of 11,833.
Okay.
These I am holding for almost now since September 24.
Okay.
The point is I am incurring a loss. All parameters is good, but it is not, I am still incurring the loss. What shall I do?
Got it. And you're a long-term investor, Murli, if I'm not wrong.
Yeah, no, it's locked up almost now. We can be here 6 months over. I don't know how long I should hold.
Okay. All right. Okay.
That's my price.
Understood. Rajesh, I'll come to you. Today the stock is up by about 5.5 odd %. But overall, he's bought it at elevated levels of 11,833. What's the view like for Bharat Rasayan?
See, fundamentals are okay company, I would say. It's into pesticides and all, catering to agrochemical sector, as we talked about. Rural economy going forward doing very well. This company is also going to give good numbers going forward. But the only problem is the gentleman has bought it at very elevated levels. So he has to wait for a longer period of time to at least recover his investment with some return. So maybe at a time horizon of 1 year or 18 months would be required to the stock to achieve at least 20-25% upside from these levels. So at this point of time, it's a hold from a side. If for any reason it falls to maybe around 8,000, 8,500 odd levels, there one can even add.
Even add at those levels that is being suggested. Let's talk about BEML and let's pull up the slightly longer term charts, and it is taken quite a battering over the course of the last 3 months or so, like a lot of other stocks have. The stock is down about 42% in that time frame, and it's trading at around 25.45. The question is from Satyan, and he wants to know from Akshay whether these are the levels to enter, because even a while back, before the markets turned, it was looking bullish. What does the chart indicate at this current juncture?
Well, it's more of a short-term trading bounce back, which I look at. On the daily charts, the prices are heavily oversold. You have a recovery slightly coming in from the levels of the 200 moving average. That's on the weekly charts. So ideally, it's more of a trading respite rally, which can target around 2,800. So that's the target in the making. If you are keen on short-term buying, yes, you can go ahead with stop loss below 2,300. If you're already holding the stock, then the view is to take an exit, but slightly at higher levels of around 2,800.
Okay, all right. Those are the key levels to watch out for in BEML. It's down about 3% in the week so far. Let's go across to Avi now, who's calling us from Kolkata. Avi, good morning. If I understand correctly, your question is on HUL.
Yes, that's right. Good morning to all of you.
Please go ahead.
I've got 3620 quantity of Hindustan Unilever bought at 2594. So I can wait for 1 year. So I was just wondering, what could be the price target within this year or within a year span like that?
Okay, so you've got a very significant quantity, Avi. I'm just trying to understand the thought process here. When did you buy this?
Actually, I had bought it. It was after the last year general election. So I thought there were a lot of money being distributed and the focus was on rural sector, the rural community. So my idea was HL, it has got a lot of brands that are catered to that sector. And so I just thought why not purchase this? And after that it did go up to 3,050, but I didn't sell at that point of time.
Yeah.
Since then it has all my profits of 14-15 lakhs have come down to negative now.
Yeah.
Of the same amount.
Yeah.
So I'm just wondering whether should I book losses and buy something else.
Okay. So Avi, a couple of questions as well, right? So is this part of an overarching portfolio or have you taken a concentrated bet on HUL?
I've got 15,241 shares of Bajaj Housing Finance as well, which I bought at 150.
Okay, so that's also elevated levels. Let's pull up Bajaj Finance, Housing Finance as well. Just because, and did you get allocation during IPO or did you, no, you couldn't have, you bought it after, right?
Yes, actually.
You bought it after.
On the listing day I bought it and I thought it will go up definitely, but after that it went up to 188. I didn't sell at that point of time.
Got it. So, and Avi, these are the two stocks you own or do you own more than that?
Actually, yesterday I sold these both stocks and I had bought PVR. I called yesterday as well.
Yeah.
But I was not happy with the PVR price. I wanted to buy it below 900, but I had to ended up buying 926. Then I bought back. I sold those shares intraday and bought back HUL and Bajaj as well. Yeah. I'm just thinking whether should I book losses and start fresh or should I just hold on?
Okay. It's a good so I get your question, Avi. The only thing is, and I'm sure Rajesh will weigh in as well, it's not like you bought bad companies. You bought very good companies but you've deployed a very significant amount of capital in 2 or 3 businesses, primarily 2 businesses, and because of the overarching pressure that the Indian equity markets have faced, you've lost a lot of capital. So let me go across to Rajesh just for a view. Rajesh, these are frontline companies. It's not like they are small caps, particularly HUL. It's the cream of the crop, but it has disappointed a lot of investors over the course of the last few years. The question is, when April kicks in, when that consumption is expected to pick up, would you expect HUL to pick up as well along with that, or should he book losses, capital losses, which are considerable at this point, in the month of March, so that he can set off those losses over the course of the next financial years and diversify his portfolio? Because there are options available not just in the broader markets, but also for the large caps. I was talking about the fact that 80% of the Nifty 50 trading at below 200-day moving averages. So you have an attractive buying price available on several frontline stocks.
Yeah, I totally agree, Alex. And I have told so many times in meeting also that in this correction, a lot of good stocks are trading at very attractive valuation when they can be having looked at. I don't say that HUL is a bad company, but it's going through a bad phase. If you look at the numbers were not that exciting. Even third quarter numbers where we have seen bottom line increasing, it was just because of one-time gain of around 500 odd crores. Volumes are down. They have taken price hikes and grammage decrease in many of their products, but still the margins have not improved. And that's just because of the fact that urban consumption has not gone up. And I don't think there are any reasons to believe that in the near future, by near future, I mean the next 1 quarter or so, 1 or 2 quarters, the consumption or demand will go up by any meaningful numbers, I would say. So yes, it's a good company you can hold for a very long period of time, but then there is an opportunity lost, I would say. On upside, I would say try to reduce your position, move some of the money to maybe good stocks in the frontline names like you have Reliance trading at around 1200 odd rupees. You have HDFC Bank, which has done nothing. You have Axis Bank, ICICI Bank. These are some of the good names. And of course, I would go for ITC rather than going with HUL if I have to be in FMCG space. So these are some of the picks from my side. I would like to reiterate once again that HUL is not a bad company. You can hold her for a very long period of time, but then you have better opportunities in the market.
While valuations have corrected, Mahima, you can weigh in on this. It's not like that it's cheap even at these levels, right? I'm talking about HUL. Absolutely. Some of these FMCG companies.
Absolutely not. I mean, right now, if, comparatively, if there are cheaper options available, it's only Imami and ITC as compared to all the FMCG staples out there.
ITC, one of the stocks that Rajesh just spoke about. So
and comparatively cheaper.
Comparatively cheaper, yeah. So, but are we... great opportunity for you to go out there and diversify your portfolio, because there are so many good companies that are available at relatively more attractive prices than they were about 3 months back as well, right? So that's the limited point that Rajesh was making, and I think it's a good one. We have to slip into a very quick break. We've got more questions that we will take on the other side, so I'd invite you to stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can either call us on the number that's flashing down there on your screen, and you can also WhatsApp us on the number that's flashing above me. Now, we have our next caller lined up. Srinivas from Coimbatore is calling in. Srinivas, a very good morning to you. How can we help you?
Good morning. I would like to get recommendation for two stocks.
Okay, I think we'll have to stick to one stock for now.
Okay.
Yes. Go ahead with the stock that you would want to, talk about.
So I have two stocks to be decided. One is CDSL.
Okay.
I bought it for,
You bought it for?
1,814.
Okay.
104. This one bought it. This displayed is correct.
Okay.
Okay. Currently, it shows loss around 71,000.
Right. Okay, and Srinivas, when you bought this, did you buy it from a longer term perspective? Did you see the fundamentals, or did you buy it from a shorter term perspective and saw the charts?
See, everybody that time around September, I think October, November, were bullish about CDSL, its performance.
Okay. All right. Okay, so I got your query, Srinivas. Rajesh, I'll come to you. CDSL is the counter, and what's the view like and outlook like?
See, we are very bullish on CDSL. In fact, not only CDSL, but these kind of market participants, be it CDSL, BSE or likes. One thing is for sure, markets are have seen better time post COVID. A lot of new investors has come in, a lot of new accounts has opened in CDSL. They are catering to even insurance ventures also. Yes, from the last 3-4 months after the market has turned wobbly, there has been a drop in their transaction charges and all. But these are temporary phenomena. This is part and parcel of the market where cycles go in a manner. In depository segment, it's the only listed player because NSDL is not listed as yet. Valuations have become attractive at these levels. Number of new account addition has been slightly down, I would say, but still they are into a very large number there. And looking at the numbers, I think one can buy CDSL at these levels.
Okay. I'm coming back to you. Ratan India is the name of the counter. Niva is the name of our viewer who's writing in from Chennai, and she's bought at levels of 72 rupees per share. The stock has been losing ground. Actually, let me go to Akshay on this one because she's got a 1-year time frame and she's bought at 72. The stock is currently trading above 40. What should she do from the perspective of 1 year?
Well, if I look at the price charts from a longer term horizon, it's nearing its support zone, which is roughly around 35. But somewhere the medium term price structure is distorted once it broke the levels of 60. So even if it recovers from 35, it's more of a respite rally you're going to have. Long term, it might get into a sideways range. So the suggestion is might as well move out of the stock on a bounce. Ideally, around 50 to 55 is the zone where you should consider taking an exit from this stock. So exit at higher levels is the recommendation in Ratan India.
Okay. We've got a next caller. Dheeraj is calling us from Hyderabad. And Dheeraj, you've got a frontline IT stock that you want to know about?
Yes, sir. My query is regarding Infosys.
Okay.
So, can we accumulate at current levels?
Okay. And what is the time frame that you have in mind?
For the next 4 months, sir.
Only 4 months. Okay. And you've already bought at levels of 1835. When did you buy this?
2 months ago, sir.
Okay, all right. So for a relatively short term, Akshay, you've seen a pop in some of these IT names, but they've largely been under pressure over the last few days. What are the prospects for the slightly longer term?
If I look at the price chart, especially of Infosys, I think since the last 5-6 months, it's trading in a range. Roughly, we are at the lower end of the range. Now, somewhere around 1670 to 1700 is the lower end of the range from where, we can expect a probability of a good bounce back. So yes, if your view is from a 3 to 5 month perspective, this is a very good entry point from a risk reward perspective. Stop loss should be around 1640 on the buy trade if you build your long trade at the current rate, and on a pullback rally you can expect levels till around 1850. So that's the target you should be working with.
All right, so that's the view with respect to Infosys. The next counter that we're talking about is Zomato. Dhanush has purchased Zomato at the levels of 285 and he wants a short-term view on this particular counter. He's asking whether he should continue to hold or exit. He's sitting, I don't think he's sitting on a profit because he's entered at the levels of 285 and right now the stock is trading at 228. Yesterday it did pick up momentum, Akshay, but today it's trading around 0.3% higher. And, with respect to the charts, it did touch a bottom of around 216 levels or 207 if I'm not wrong. What are the charts indicating now? Do you think that the upward momentum from now will continue or no?
Well, if your view is limited to short term, then I think Zomato, the price setup is more neutral. It's been trading in a range, as I see, since the last 1.5 months, and the range is 210. That's the lower end of the band. The upper end of the band works to around 240. So this is the range it's going to be in for the next 1.5 months. So if your limited view is for a month or so, the suggestion would be to take an exit slightly at a bounce back of around 240. However, if it's a more of a long term with minimum 6 months plus of holding, then there is no reason to be worried about. Short term, it might be a bit choppy, but eventually the longer term charts are pretty strong. So short term, take an exit around 240. Long term, you can continue to hold the stock.
Okay. All right. Long term, continue to hold Zomato. Poonam has got the next question. She's writing in from Pimpri in Maharashtra. And she's asking, between Chennai Petro and IOC, which would be the better pick on the basis of valuations? Rajesh, we were just talking yesterday about OMCs having bottomed out and the prospects looking better on the fundamentals. Maybe your gross refining margins likely to improve from this stage. What would you say about Chennai Petro versus IOC?
See, Alex, I think both are on strong grounds. Not only these two, but in the entire OMC pack, including Reliance, I would say on a strong ground. Crude trading at around 70 on dollars, and Singapore GRMs spiking up. Both are good news for my oil marketing companies, I would say. Their margins would improve in 2 digits. The EPS would improve into 2 digits. And these are very good times to buy because they have been beaten up. They give a good dividend. Valuations are attractive for at least to be a BPC and IOC. These two are better plays, I would say. Reliance would be benefited from the increase of GRMs. But out of these two, I will go with IOC.
All right, that's the view with respect to, all oil marketing companies. Thanks for that, Rajesh. We have our next caller, Shankar from Vijayawada is calling in. Shankar, a very good morning to you. How can we help you?
Yeah, good morning, madam. I bought Apar Industries stocks, madam, in the month of December last year.
Okay.
And now it is showing 41% loss. So can I hold the stock or add or sell? Please advise me, ma'am.
Okay, Shankar, when you bought Apar Industries, did you see the fundamentals of the company?
I saw the fundamentals. It is now, at that time it was very good, but now due to some global issues, I think this is the stock is going down. So I want advice. I want to add more stocks. Now the stock is already down and trodden. Yeah,
right. Got it, Shankar. Rajesh, I'll again come to you. Apar Industries, what's the view like?
See, it's a very good company, basically doing business in cable and conductor business. Last 2-3 quarters, conductor margins were under pressure. But going forward with the kind of demand built up we are witnessing in the entire sector, I think things are going to improve. At this point of time, one can continue to hold.
Okay, continue to hold is a view on Apar Industries. Vijeta from Kolkata has got the next question asking about Ircon International with a time frame of 2 to 3 years. What would you do with the stock if you bought it at levels of 211? So slightly elevated, Rajesh. But on the fundamentals, would you hold for a period of 2 to 3 years?
At this point of time, it's no point booking losses because one, the valuations were stretched, and that was the reason for the beaten down valuation. And the second, markets are bad. So I would wait for at least 180 odd levels to get out of this stock. I agree the numbers have been good. Valuations are stretched at this point of time too. So that's a very real problem with these railway stocks, which have been running quite fast in the last 1 year or so. So take a larger time horizon, keep a target of 180 and try to book losses at those levels.
All right, so that's the view with respect to Ircon. Just a quick mention, Trent is up 5% in trade today. And, analysts suggest that there has been a strong uptick in store additions for Westside in Q4. Westside store additions highest in the past 2 years is what they've observed. It today has around 269 odd stores versus that of 238 in December 2024. And Zudio has also added around 37 odd stores till now in Q4, which is why it's in focus, and it's up around 4% as we speak. Moving on to the next.
No, let's take a view quickly, Rajesh.
Yeah.
Trent is up about 4%. Does that give you some confidence that maybe there is more buying interest now? Are you comfortable with the valuations as they stand right now? Would you buy?
See, if you talk of valuation at this point of time, they would seem straight, but with the kind of expansion they are going on, almost 670 odd stores of Zudio and 270 odd store of Westside, they are moving to value segment, doing very well. So at this point of time, maybe the valuation would look stretched, but if you hold for a long period of time, by long at least 12 to 18 months, I think a target of 6,500, 7,000 would be a decent target.
Rajesh, in one of the recent reports, I also read that, Zudio stores are now being opened in the same city. There are two to three Zudio stores in the same city, which is why there might be some kind of cannibalism which could take place and might impact the sales of these stores. Do you also agree to that?
In fact, I would disagree with that, Mahima, because Zudio is basically into value segment, and we have seen value segment demand going up from unorganized to organized. So I don't think that would be much of a problem with going forward. And not to forget, Zudio, the distance between two stores would be quite considerable, catering to different localities.
So that's the view with respect to Trent. Garden Reach is the next counter that we're talking about, and Isha from Jaipur wants a technical view with respect to this counter. Akshay, what are the charts looking like for Garden Reach?
Garden Reach, it's more of a short-term pullback, possibly which you can anticipate. 1200 is the short-term support base, which the stock has successfully charted out. And I think the short-term journey can see the stock testing levels of 1475 to 1500. So you can buy or hold. Stop loss 1152, target around 1500.
Okay. All right. Santosh from Chennai is asking about Epigral, which is bought at levels of 895, 31 shares. He's asking what the prospects are for a period of 2 years or the long term. Actually, he's been holding for 2 years. Any view on this one, Rajesh?
We have a buy on this. The strong company in chemical sector doing very well. They have done good expansion in caustic. They're doing very numbers have been improving the last 2-3 quarters. We have a target of around 2,400 odd rupees. It did underperform for quite some time, the last 1 year or so, but now the things have improved and it's a buy from our side.
All right, we have our next caller. Sanjay from Surat is calling in. Sanjay, very good morning to you. I believe you have a query on BPCL.
Yeah, good morning.
Good morning.
Yeah, I'm holding BPCL 250 share at the rate of 350.
Okay.
And I am a long-term investor, madam. I have been holding this stock in 2020.
Okay.
So, is it advisable to add more at this time?
Okay, got your query, Sanjay. Rajesh, he's been a patient investor for this particular counter since 2020 and is sitting on a loss of around 28,000 rupees. What's the view like? Should he add more at the current levels?
Of course, Mahima, as we just spoke about IOC and CPCL, the same story goes with BPCL too, with crude around $70 odd in Singapore, GRM spiking, oil marketing companies are in sweet spot. One can buy this.
Okay. All right. We've got a query that we can actually club. The first one is Abhishek, who's writing in from Mumbai and asking about Jubilant FoodWorks from the current level. Rajesh, what's the view? Relatively short term is what he's asking, 5 to 6 months. One, would you ask him to expand his time horizon? And the second is not necessarily comparable, but it's in the beverages space, Varun Beverages. Ahead of the summer, would you buy into this is the question Santosh is asking from Tamil Nadu. So a combo view on these two companies.
You have a right a combo. You eat pizza and drink Pepsi. That's the kind of combo. Anyways, coming to stocks, yes, Jubilant Food is a good stock, no doubt. Last year, SSG was decent, I would say, if not good. Things have started moving. Dining has started improving. So at these valuation, one can go long on this. But out of these two, if I have to select one, then I would go for Varun Beverages. It's one of the largest Pepsi bottler outside US. Doing very well not only in India but neighboring countries like Nepal, Sri Lanka and all. They have done capex to increase their capacity and moved into non-carbonated drinks. All in all, Varun Bever is better than Jubilant FoodWorks at this point of time. But both the stocks are good as far as consumption story is going. And with the kind of weather forecast for summers this time, I think Varun is going to outperform.
And Rajesh, quickly, with the Jubilant Group acquiring 40% in Coca-Cola, do you think Pepsi bottles will be replaced by Coca-Cola in Jubilant FoodWorks, like the stores of Domino's?
Quite possible, because they would be trying to move their in-house brands if that happens. So that's quite possible. But still, Varun being one of the largest bottler, I think that's a better choice.
Okay, it's a better choice than Jubilant. By the way, I have neither Pepsi or pizza, but I wish I could. Govind has got the question that is next from Hyderabad. I believe, Govind, you want to know about GMR infrastructure, is that right?
Yes, sir.
Please go ahead with your please go ahead with your question. What's your question? What's your question, Govind?
Sir, good morning.
Good morning.
I can brought GMR Power and Urban the price of 143 rupees, 2000 share.
Okay.
Due to power supply demand, I have observed actually turnaround story. Can I add some more or book losses?
What is the time frame that you have, Govind? Is it more than 1 year?
Yeah.
Okay.
Another 1 to 2 years I can hold.
Okay. Rajesh, he's bought at slightly elevated levels. I guess that's true for a lot of stocks. But if you're planning to hold for over a year, what are the prospects?
See, prospects look good due to the fact that the company is trying to reduce debt. So that is one of the biggest factor that's going into in their favor. And I think a target of 110, 115 is quite possible in the next 2 quarters. So one can continue to hold.
All right, so that's the view with respect to GMR Power. The next counter that we're talking about is
CG Power.
CG Power, yes.
Yeah.
So both names confusing. Anyways, so Yash has bought around 125 shares at 847 a piece. He wants to know whether he should hold, sell, or average it out. Akshay, what's the view like with respect to the charts?
Well, on the charts, clearly a strong support is in the making at the levels of 560. Strong volumes have been picking up at the same levels. So the whole idea is that this small congestion which is building up at the levels of 580 to 600 should see a positive breakout, and you can see the stock moving up for levels of 775 to 800 with a time horizon of around 6 months. So definitely the idea is to buy more in case you're open to, or hold. Stop loss would be below 530. And you can roughly target around 780 to 800.
We are, by the way, trading very close to the high point of the day for the benchmark Nifty 50, trading with gains of close to 1%, above 0.9%. It is time for the rapid fire segment, and this is where we try and take as many questions as possible over the span of 2 minutes. And a message to our experts: do keep your answers as precise, as concise as you possibly can. The first question we're taking is, in fact, on LIC Housing Finance. And Saundarya is asking this question. She's from Mumbai. She's bought at levels of 555. What are the long-term prospects? Would you add on dips? Rajesh?
It's add at these levels too. So valuations are great.
All right. South Indian Bank is the next counter. Umesh from Kanyakumari is bought at the levels of 25 rupees. Should he hold, sell? What's the view like, Akshay, on the charts?
Hold, stop loss 23 and target roughly around 26.
Tilak Nagar Industries is the name of the counter. Akshay, I'm coming back to you. 325 is a buy price. Rudra from Vadodara wants to know 1 year time frame. Should you hold or exit?
Exit at high rates. 260 is a good level to take an exit.
All right. Vinay has bought Utkarsh Small Finance Bank. His quantity is quite high, if he's typed it correctly. 34,000 is the quantity. What's the view like, Rajesh?
Exit.
Okay. NMDC bought at levels of 63. This is Vinay Tikchandani who wants to know, bought quantity of 4,400. Akshay, what would you do with this?
I would look to exit around 68 to 70 from a short-term perspective. Long-term, it is a hold.
All right. RI's next counter. Kalyan Raman is saying that he's an HNI and he wants to add more of Reliance at the current levels. Is that the right strategy to adopt, Rajesh?
Yes, keep it a view of 2 years and buy.
Okay. Sun Pharma purchased at levels of 1722. Gul wants to know, should you hold or should you exit based on the tariff threat? Rajesh?
Continue to hold, add around 1400.
Okay. ITC Hotels, 300 shares bought at the levels of 484. Should he sell or keep holding? Rajesh, what's the view like?
484, I don't think it went up to that levels, but still it's a buy from our side.
Okay. RBL Bank, would you hold or exit if you bought at levels of 261, Rajesh?
Hold.
Hold, all right. Well, we've covered quite a bit of ground. Gentlemen, thank you so much for joining us, for answering all the questions you did. Absolute pleasure, as always, having you on the program. All right, and that brings us to the end of this edition of Ask Profit. From Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned. Know Your Company is up next, and we've got a nice one lined up for you.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today we have with us on our radar a company which has in fact seen initiation in coverage This one is from the textiles sector. Sanathan Textiles also recently listed, and we thought it would be a good idea to take this one up, considering we've had a handful of brokerages initiate coverage on this particular company. So, well, as the name suggests, it is in fact in the business of textiles. It has presence which spans across sectors, which would include something like polyester as well as technicals, technical textiles. And it has 3 yarn verticals essentially: polyester, cotton, and yarns from technical textiles and industrial uses. So as you can see, it's a classic textiles company out there, and well, it does see a lot of traction in terms of these 3 largely well-divided verticals. Now, as far as the products are concerned, as on June 24, 2024, the company manufactures more than 14,000 varieties of yarn products with SKUs in the excess of, well, around 190,000. So it is significant in terms of the kind of traction that we are seeing for this particular company. And we're going to talk about the fundamentals of the company, sure, fair enough. But, at least as far as this particular company goes, well, like I said, mostly deals in polyester yarn, along with cotton and, some of the other technical ones, where, well, my colleague Mahima, when she joins us, will also give us a better idea of how the split comes through. Well, speaking of which, let's take a look at all the factors that we're going to talk about and judge the company on the base of what it has in fact done in the past. So naturally, we rate the company on the income statement, and then we talk about the balance sheet. The income statement will give you a fair idea of how things have panned out for its revenue growth, its operating profits. And of course, along with the balance sheet, we also talk about the cash flows. And based on that, the kind of return ratios that we are seeing as well. And we move beyond that to take a look at your shareholding, street credentials, valuations, and outlook. And that would give us a better idea of how things could potentially pan out for the company. But on that note, let's get in my colleague, Mahima Vachrajani, who's also joining us, and to give us more insight into the company. So Mahima, welcome back. And thanks for taking the time and tell us about the top line and the profitability of this particular company. I'm really surprised that it did list at a very opportune time, especially given the fact that, well, what you're about to tell me.
Right, absolutely. It got listed on 27th of December, and that's when, it did see good amount of listing gains as well.
Yeah.
But we'll talk about the stock performance a little later, in the show. But in terms of the revenue metrics, well, the 9-month picture and the FY24 picture is pretty much similar. FY24, they did a revenue of around 2,900 odd crores, and right now at 9 months, they're sitting at around 2,200 odd crores. So in terms of the revenue growth, it seems like FY25 will end at the same levels at which FY24 ended. In fact, the 2-year CAGR, if we see, when FY22 revenues compared to FY24 revenues, the CAGR is in a negative figure. It's down by about 3.6 odd%. In terms of EBITDA as well, EBITDA in 9 months FY25 stood at 58 odd crores versus that of 227 crores in FY24. So that's a negative 2-year CAGR of 35%. Margins have slightly improved from 7.7% to 7.9% in 9 months FY25. But net profit again is a negative 2-year CAGR of around 38 odd%. 9 months FY25 figures stand at 34 crore, and FY24's figures stood at 134 crore. So in terms of the 3 key metrics, that is your revenue, your EBITDA, and your bottom line, all 3 of these key metrics have seen a decline as compared to previous year figures of FY25 as well. And FY25 also suggests that revenue will probably end at the similar level at which it stood at FY24, And EBITDA and net profit, however, will be below the levels of what it recorded in FY24. In terms of revenue mix, polyester yarn has the highest contribution coming in. Around 77% of the revenue comes from polyester yarn. Cotton yarn is another 18.6% and industrial and technical textiles is another 4% of company's total revenue. They've catered to around 1,571 customers in FY24. The revenue mix as of FY24 is that domestic sales is around 95.6% and exports is around 4.4%. Export products are spread across countries, around 27 countries they catered to in FY24. So this is the overall revenue mix as well as how profit and loss has panned out for the company. It's a thumbs down because the main key metrics, the 4 metrics, have not seen an improvement when it comes to a 2-year CAGR performance.
Yeah, sure, fair enough. So that's as far as your top line goes, and of course a lot of these numbers are from the DRHP, which also gives you an idea about how things have panned out for this particular company. And remember that if we are going to see a decline, it's really surprising that we've seen so much traction in its IPO, which means that the prospects of the company could potentially be much better. But I'm going to move and shift focus to the balance sheet there. And again, in terms of the balance sheet, it does have a significantly high gross debt. In fact, its net worth stands at around a little less than 1,400 crores, and its overall gross debt stands at around well over 1,600 crores. So it's well over 1:1 in terms of its debt to equity. Sure, textile companies in general do have some amount of debt. A lot of this debt is required for working capital and to a certain extent expansions if they have that in plan. And we'll take this up with the management as well with respect to why this gross debt is still high, especially when they have in fact gone ahead and done the IPO, or whether or not the proceeds from the IPO have been used to a certain extent to reduce that debt. Because do remember that the company listed back in December, and we're going to wait for more details and updates on that. But at the moment, we're going to give this a thumbs down because even the balance sheet is looking at a slightly higher debt number, which in turn has led to higher finance costs, which in turn has led to lower profitability number. So there's another factor that can weigh down on the profitability of the company. So that's as far as your balance sheet is concerned. Mahima, what about cash flows?
Right. Just before I move on to the cash flows, just a brief about the IPO. It was a fresh issue of 400 odd crores,
right,
and an offer for sale for 150 crores, out of which they had said that around 160 crores will be used for repayment of borrowings,
right,
and around 140 crores for investment in subsidiary, and of course there also repayment of borrowings. So just to give viewers that context. In terms of cash flow, well, the cash flow from operations picture has improved for this particular counter. In first half of FY24, the cash flow from operations stood at around 16 crore, which has improved to 64 crores now in first half of FY25. But overall net cash flows position has weakened a bit from around 5.7 odd crores in first half of FY24 to 14 odd crores in first half of FY25, and this is because of two main reasons. Cash flow from investing activities has seen an outflow of around 36 odd crores, and this is for the purchase of property, plant, equipment. So they might have made some investment when it comes to their manufacturing capabilities, and the other major investment was in their subsidiary, which was for around 77 odd crores, which is why overall net cash flow position has been negative 14 crores. But this is just the picture of first half of FY25. Probably considering the whole year picture, it might turn net cash positive, but that's something to wait and watch. But for now, since cash flow from operations have improved, we've given a thumbs up when it comes to the cash flow metrics.
And that's probably the only reason why we're giving this company a benefit of a doubt in terms of the cash flows, because of the improvement in your cash flows from operations, and assuming that they are in expansionary phase, and that your net, under those circumstances, your net cash flows or your free cash flows won't be present at this point in time, assuming that the company is looking to grow. But that brings us to the matter of return ratios. It's not very encouraging. So firstly, the company was working with staggering return ratios back in FY 2022. In fact, very, very healthy return on capital at around 36%, return on equity at around 44%. But this actually took a dramatic turn for the worse in 2023, and it came down to around 15.5% for ROCE and ROEs at around 14.4%. And in FY24, this has come off even further to numbers which are well below 12%. Now, if you go by the thumb rule of around 20-25% for both the ROE and ROCE, well, the company is at a far cry from there. But I'd reckon that this once again will naturally be a consequence of certain challenges with respect to the entire sector, or for that matter, the company adapting to a certain change which may have led to these following ROEs and ROCEs. And the question then is that can these numbers improve? It's something that we'll take up with the management as well. But for now, this is how things stand. So this is as far as your very important financial statements go. Let's look beyond and talk about the shareholding. Mahima, what can you tell us?
Right. So since it's just a recently listed company, we have the shareholding data as of 31st December 2024. Strong holding when it comes to the promoters holding, around 78.6% is held by promoters. FI's holding is around 3.8%, DI's holding is around 8.9%, and around 8.8% is held by public. In terms of the total market cap of Sanathan Textiles, it stands at around 2,600 odd crores, out of which around 380 odd crores is the free float available right now.
Right.
So that's the view with respect to how shareholding goes, but strong promoter holding, which is why we've given a thumbs up to the counter.
And of course, the promoter holding is slightly above the minimum that we require, that's 75%. So naturally, over the 5 years, we will see this equity reduce because that's mandated by the SEBI laws. But it has plenty of time, and it's not significantly above the 75% mark. So that's something I reckon that investors can keep in mind. But like I said, the company has plenty of time to bring their shareholding, the promoter shareholding, from 78.6% to 75%. But in terms of street credentials, as Mahima mentioned, that it had a very strong listing. And since then, we have seen a deterioration in your broader markets as well, where your mid-cap and your small-cap indices have come off significantly. And this particular company is no exception. So we have seen a 25% decline since its listing price. From its listing price. In fact, it's trading near its issue price right now, a little bit of depreciation there. And it is also down around 14% on a calendar year to date. So there has been weakness here. That's as far as street credentials go. But I'd reckon that, two of the most important factors that we are watching out for is valuations and outlook, because a lot of things hinge on this. So, Mahima, valuations.
Right. So, when valuation comes into picture, Sanathan Textiles, as compared to its peers, the forward valuations look, attractive. And of course, this is on the back of the kind of growth also. So for Sanathan Textiles, we've taken the forward valuations from the ICICI Securities reports, in which they've said that by FY26, they expect the revenues to double for this particular counter, which is why, the valuations as compared to FY25 slightly rise to around 18.3. But when compared to peers, the valuations look attractive for Sanathan Textiles. KPR Mill, forward valuations as per Bloomberg stand around 32 times and will come down to 25 odd times. Vardhaman Textiles has slightly lower valuations as compared to Sanathan Textiles, but it is not as diversified as Sanathan Textiles is. So it has forward valuation of around 12.5 times and 11 times. Indocount has similar valuations as compared to Sanathan, and Garve Technical. Although this Garve Technical Fibers is has more contribution coming in from the technical fibers segment, and that's why the valuations there are much more expensive as compared to Sanathan Textile. So forward valuations as compared to peers look cheaper, and the growth that ICICI Securities is penciling in, compared to that, valuations look attractive, which is why we've given a thumbs up right now when it comes to valuations.
Yeah, but as Mahima mentioned, that Garware Technical in this case is a slight exception, which is why you may not want to consider that, but it is comparable to KPR Mill or Vardhaman Textile. Of course, the case for the fact that the company is going to look at a very, very strong FY26. So speaking of the outlook, Mahima, I reckon that's the reason why the company got such a staggering listing in the first place. So tell us about that as well.
Right. So, in terms of outlook, again, before I move on to that, ICICI Securities just day before yesterday came out with a report which have initiated a buy with a target price of 461.
Yeah.
They're expecting a 3-year CAGR growth in terms of revenue, which is 28%. In terms of EBITDA, it is 42%. And in terms of PAT, it is 24%. They're saying that strong growth will be driven by commissioning of Punjab unit in first quarter of FY26. Now, what they're talking about, the Punjab factory, the unit that they're talking about, they are expanding their manufacturing capacity there. They have advanced stages of commissioning a greenfield capacity in Punjab, and they're also anticipating commissioning cotton yarn operation of Unit 4 in Silvassa factory as well. In terms of capacity expansion plans overall, polyester as of FY24 stood at around 2,750 metric tons, which will go to around 4,56,000 metric tons by FY27. And for cotton yarn, which is around 14,000 metric tons as of FY24, will go to around 24,950 metric tons by FY27. This is the estimated capacity expansion that the company has planned. So this is the overall outlook. So outlook definitely looking strong. They are planning to add capacity, and plus we are also expecting the Bangladesh +1 strategy that will play its part, the UK +1 strategy also playing its part, which is where the growth will come in.
Right. So, well, we do have the management here with us, but I want to take you all through the overall ratings. And this is where the outlook and the valuations become extremely important. So, if you judge the company not by what it has done so far, but what it is expected to do, that's when things change completely and dramatically. Sure, a lot of the ratings that we've given the company are on the back of the history, but it does seem like the outlook is strong. It's not overtly expensive at the moment, which is why, maybe the ratings that we are giving to this company may not necessarily be something that you'd want to go by. That said, we're still looking at a 4 out of 8 as far as their overall rating is concerned. But on that note, let's get in the management of the company. We have Paresh Dattani. He's the CMD of Sanatan Textiles, and Samir Dattani. He's the Executive Director at the company. Paresh, let me start with you. I reckon that all the focus is now going to be on what the top line can look like in FY26, your greenfield expansion that you have planned for, and the kind of contribution that can bring. So my first question is that if you could give us timelines on your greenfield expansion, and when can that start coming into play, and at what point in time will it meaningfully start contributing to your top line and your bottom line?
Yeah, good morning. As far as the Punjab facility is concerned, we are in the advanced stage of the plant coming up. We will be commissioning in the first quarter, FY26. And we will be starting that in a phased manner and coming up to the full capacity in about a month and a half or 2 months from commissioning. So that by the end of the first quarter or a month more than that, we should be down to the full capacity. So if you look at the overall capacity of this plant in the first phase, we are putting up 255,000 tons of filament yarn, which would give us a top line of about 2,900 crores. In the first year, that's FY26, we should do about 70% of that, which should be close to 2,000 crores. This and the existing Silvassa facility, which is giving us 3,000 crores in FY25 also. So we should end the top line of FY26 at about close to 5,000 crores.
Okay. Samir, if you could give us an idea about, post-IPO proceeds, how they've been used, the impact it has had on your balance sheet, and what does your current balance sheet look like? So where does debt stand at right now, and if there are any plans to likely see this number change going forward, do you think that the gross debt could increase or decrease going ahead?
So in the IPO, we had clarified that the proceeds will be used to repay the debt. 400 crore rupees out of the primary will be used to repay the existing debt as well as the new borrowing for the new facility. We have completed that. We have repaid the 400 crores and reduced that burden on the balance sheet. All the other debt that you see on the balance sheet is only for the new facility, which is going to start up in the first quarter, like Paresh Bhai said. And going ahead, once the plant commissions, we're going to have strong positive cash flows to ensure that we continue to repay the debt in time in the coming years.
Right. Paresh, Mahima also joining in. I just wanted to understand that, there are huge targets when it comes to, increasing your capacity right now. What does the capacity utilization stand at right now? And what is the kind of capacity utilization that will take place once, in FY26, both your Punjab as well as your Silvassa Unit 4 capacity, is at its, full operation?
As far as the Silvassa is concerned, we are even today operating at full utilization, which we've been doing for the last couple of years. We've been stressing assets fully. As far as the Punjab facility, as I mentioned, FY26, we should do about 70% of the capacity. But the following year, we should be up to fully more than 95% utilization on the Punjab facility.
Samir, in terms of your product mix in FY24, polyester stood at around 80% and the balance was with cotton and other technical textiles. Is this mix likely to change as we move into the next couple of years? And does that also, what sort of an impact can it have on your operating margins?
So what's interesting about us at Sanathan Textiles is that we are, in three segments of the textile chain: in polyester, in cotton, and technical textiles. Now, if you've seen the current budget from the government of India or all the kind of push and incentives that the government is giving, it's keenly focused on all these three textile segments: the polyester, cotton, and technical textile. Our current breakup, as you mentioned, is 80% polyester, about 15% cotton, and 5% technical textile. And our business strategy, our plans ahead are to expand all these three segments, because we are very bullish on the kind of demand that India is going to see for all these three yarns in the coming years. With the growth in consumption, with the growth in e-commerce, brand, downstream, with the big brands coming to India and sourcing locally. And of course, let's not forget, globally, there's a Bangladesh +1 opportunity that India is poised to encash upon. All these things will require more yarns. So we are quite clear on our outlook in the coming years, and in sync with our outlook, we're expanding all three segments in a phased manner. The polyester facility starting first, where we'll be more than doubling capacity, after which we'll have an expansion in our cotton yarn facility, where we'll be adding at least 70% additional capacity from what we have currently. And then the technical textile, which is a small segment of about 5% currently, we'll be doubling capacities in that as well. So we are very well poised to ride this journey and this growth of the textile sector in India in the years to come.
And Samir, as you rightly mentioned, there's Bangladesh +1 strategy that will also play its role. Right now, your revenue mix in terms of domestic to exports is that domestic is around 96% and the remaining 4% is exports. Do you think this mix will change from a longer term perspective, let's say by the end of FY27, and how will that change and what will the margins be like then?
No, Mahima, if you see, in the last few years, our export has reduced a bit. And that's purely a business strategy, because the kind of margins and returns that we're seeing in the domestic market, demand is stronger. And I think that will continue because of the kind of geopolitical global scenarios that you're seeing. We feel like the India story is far more stronger, and our current business strategy is focused on about 90% revenue from our India domestic operations. Having said that, of course, we have a lot of customers who export our yarn products in the form of fabrics and garments. So those indirect exports will continue to grow because of the UK +1, Bangladesh +1, and all other such opportunities that the Indian textile industry will have.
Okay, so Paresh, just a clarification on your gross debt. At this point in time, what is your overall gross debt? And will this number come down in FY26 or FY27?
As on 28th of February, we have a debt of 947 crores on the subsidiary. That is the debt we have taken to put up this plant along with our contribution. We have totally put in about 1400 and odd crores already invested in the plant. And we long-term debt at the end of the project would be close to about 1200 crores.
Okay. All right. Well, there you have it. So there's a lot of clarity from the management that's been given, and especially when it comes to the outlook of the company. So not only are they looking at expansion, but they're also expecting demand to hold up, and that actually will play very favorably for the company. So a lot of tailwinds that the company is expected to look at, and of course we'll keep an eye on this one as well. But on that note, also thanking both Paresh and Samir for joining us and giving us that much more clarity, that much more insight into the workings of Sanathan Textiles. But on that note, we are completely out of time on this edition of KYC. But lots more lined up on the other side. Stay tuned in, and we'll be back in just a bit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on
Hello and welcome. Good afternoon. This is Markets at 12 and this is Malika Mishra. Let's first check how the markets are faring today. The markets look good. Nifty 50 is up close to 1%. BSE Sensex is also up close to 1%. The broader markets are doing well, above 2%. And all sectors are in the green. And this is better than yesterday's flow of chart with any regards. Now, I have my colleague Harsh joining us to give us a detailed sense of how the markets are currently doing. It's an optimistic chart that I'm seeing out there. What's working?
Well, you know, the word of the day today, Malika, is recovery. And we're seeing that across the board, as you can see on your screen. Pretty much all through, we're seeing green across sectors, across broader markets. I'd also be very interested and keen in knowing what the breadth looks like, because we've had a snapshot of pretty much all sectors as well as how broader markets are doing. But that's how the breadth is, and that's important because we saw a bit of recovery with regard to the breadth yesterday versus Monday. So as the week has rolled on, we've seen a bit of an improvement with regard to the breadth, and that's key because 2025 overall as a calendar year, the breadth has been very, very weak. So this is a welcome green that we're seeing on the screen. Let's look at the Nifty 50 in terms of contributors. And, you know, there are some big gainers. You have something like a Trent and M&M, which is flying away in trade. Power Grid doing well as well. And Adani Ports, Adani Enterprises, all up between 4 and 6.5%. So some of those stocks really moving. But those are stocks which have a lower weightage on the index and therefore are not index moving. So some of the heavyweights, like a Reliance, like an Infosys, also pulling their weight, at least on the index today. What's not doing well, a Bajaj Finance and HDFC Bank, some of the stocks which have done well, probably late last week as well as early this week, taking a bit of a backseat, but nothing materially lower except on a Bajaj Finance. And we'll come to that story. Let's also look at how the broader markets are performing. 2% up on the Nifty mid-cap index, the Nifty small-cap up nearly 2.5%. So good traction on both of those indices. We're very close to the day's highs. And it's been a steady uptrend when you're looking at the intraday chart in front of you. In terms of sectors, well, the Bank Nifty more tempered in that sense, 0.2% higher. But look at the Nifty Auto, which has seen a bit of, or which has been under a bit of pressure for quite a while now. 2.5%+ higher. The Nifty IT up nearly 3% as well. The Nifty Metal shooting up 3% after everything that's happening in China. Mind you, China has come out and suggested 2% inflation, 5% growth. That's the mandate that they've set themselves. And maybe metals finding some zing on the back of that as well. The Nifty Media doing well along with the PSU Banking Index. It's been a while since we saw that do 2%+. And the Nifty Realty also up 2.5%. So some real solid moves across sectoral indices. It's not a single sector or a single space which is doing badly. So overall, looks like quite a solid and robust move, at least in trade today. Recovery hopefully sustains. That's going to hold the key, Malika.
Wow, I would stick to the word recovery and keep reminding myself that we're recovering at the moment. Now, onto an NDTV Profit exclusive. The RBI has directed large NBFCs to stop new lines of credit, and this is especially in regards to concerns over perpetual lines of credit. I have my colleague Vishwanath Nair joining us to discuss this with Harsh. Vishi, I would first like to ask you if this is especially in regards to big corporates? Because some reports have suggested so.
Right, Malika. So it can't be big corporates, simply because big corporates are already doing this kind of a business with banks. And that is a licensed business that the Reserve Bank of India allows banks to extend lines of credit to companies who then use that for their working capital needs. This specific norm is focused toward your low-value retail clients, people who borrow anywhere up to maybe 5 to 10 lakhs outstanding. And then small business owners who also depend on the NBFC ecosystem to fund their small businesses, self-employed individuals who probably don't have access to bank credit as such. What's happening here? The perpetual credit line is an important sort of distinction. Credit line as a business is completely fine. That's a normal size of business that that banks and NBFCs do in lieu of their customer base. But perpetual essentially implies that there is no definitive repayment period for money that has been borrowed. There is an outstanding limit as to how much they can borrow from a particular lender, but they can repay it if they want to in 6 months, 8 months, 48 months. When I was looking at certain products out there in the market, the time limit goes up to 4 years. And you don't even need to repay everything in a specific EMI. You could just give them a certain part of the interest to keep the account active, and then as and when you get the money, you repay the entire amount.
Vishy, just trying to break this down a little bit further in terms of rationale. What could possible reasons be for this? Could it be that the RBI is seeing something in that space? Because we've seen this in the past as well, where microfinance was RBI was one of the early movers where the microfinance problem came up and surfaced. Likely, is there a problem that's kind of tilting the RBI to do this, in your view, basis your sources?
So the word that came up during my conversations with NBFCs was evergreening. So that is the core of this issue. Let me explain that with an example, right? Let's say I have borrowed 10 lakh rupees from an NBFC, a 10 lakh credit line from an NBFC, of which I use about 2 lakh rupees for my business needs, for whatever small business needs I may have. Now, I don't have the 2 lakh rupees to repay that outstanding due. So instead, what I do is I go back to the NBFC. My due date is coming up on the 15th of March. So around the 10th or 12th of the March, I will go and ask them for 3 lakh rupees as part of my 10 lakh outstanding, right? That 3 lakh rupees I'll take from the NBFC. I will repay 2 lakh rupees that was due previously, and the remaining 1 lakh I use for whatever needs. Now, what has happened in effect is that my outstanding dues have gone up from 2 lakh to 3 lakh. I am a standard account. I do not have money to repay 2 lakhs, so there is no way I can repay the 3 lakh rupees either. And I continue as a standard borrower and keep turning this cycle as much as I want to, because at the end of it, there is no default that has happened, and therefore the NBFC is not pulling back that loan from me.
So you keep borrowing to repay again and again, and then becomes a vicious cycle.
Exactly. And that's what the RBI wants to avoid, because that is not a business that NBFCs have any capability of running. At this point in time, banks have that ability because banks have the bank account of the borrower with them, and therefore all the funds that the customer owns is with the bank. So the bank have a visibility on their ability to repay that amount, which NBFCs don't.
So what is the action that RBI can take further going forward with regards to NBFCs?
So what I understand so far is that the RBI has asked them to go slow on this loan product. Existing loans can continue, but then don't go ahead and renew that loan. So if somebody is supposed to repay on the 15th of March, basically that's it. That's the end of the discussion. You repay that on the 15th of March and we close the loan product. Similarly, for future loans, I'm going to go slow. So I'm going to be very, very selective on who I'm going to give money to. And most likely, most NBFCs, the direct impact of such restrictions is that NBFCs stop doing their business.
Okay. And Harsh, do we have a few names, any information on which NBFC could be severely impacted, or which are those set of NBFCs that are most vulnerable to this kind of news?
So, I mean, great question. And you know what I'm going to do? I'm going to throw it at Vishy, because Vishy, before I come in and probably give some inputs there, are you hearing any names?
So as of now, no. What I do know is that certain large NBFCs, you've got your Bajaj Finance, you've got your Poonawalla FinCorp, all of these guys already existingly, they give out these loans. Not all NBFCs do this very business. So that's why when the RBI held the meeting with NBFC chiefs, only those who have this business have been called in. But the direct impact of that is that if any NBFC had it as part of their planning sheet, they would not touch that business any further.
Understood. But you know, frankly, Vishy, so in terms of stock impact, it's only been Bajaj Finance which is impacted by this. And we were just talking before the start of this, and we're talking about how many customers of Bajaj Finance opt for these type of loans, and they're called flexi loans, as Bajaj Finance terms it. And it's quite a few. 20% plus of Bajaj Finance's customers have at least a facility which enables them to do this. Again, how many of them are opting for this facility? We'll have to, of course, that is not available in terms of data. But in terms of, based on whatever commentary we've heard from Bajaj Finance in Q3, Q2, they're generally very quick at signaling early warning signs when they see pockets of stress. And I'm talking specifically of Bajaj Finance because the stock is down 2% today. Large market cap stock, Nifty 50 company, and therefore in focus. Outside of that, we're not seeing impact pretty much anywhere. I'm only seeing a Muthoot, which is down 0.33%, and a Chola, which is down 1.3%. So Chola is the other one, likely, which is getting impacted because of this. In your view as well, of course, this is my perspective basis all the con calls that we listen to. But your view, do you see a substantial risk here for someone like a Bajaj or a Chola?
So Bajaj, simply because of the size of the business. I'm not going to speak much about Chola because at this point in time, I don't think that this is their mainstay business as such, right?
Yes,
for Bajaj, it's a significant business. Having said that, as you pointed out, they are very quick at turning things around. They're already, they've just very recently come out of RBI restrictions, right? And probably the fastest turnaround amongst NBFCs who have faced similar restrictions in the past. They're very good at figuring out the problem and addressing it, sort of plugging that gap whenever necessary, and then coming out of the problem area. So they have the diversity to ensure that other loan products pick up the slack that is being left over by this flexi loan product. But they're also large enough in the business to be impacted as of now.
Right. You know, and one thing, Vishy, that really stands out is this is the new governor, under the new governor. This is the first set of restrictions that we've actually seen. We've only seen easing as of now. So not sure how large, but clearly there seems to be some rationale behind this. We'll, of course, wait and watch as to, you know, what, as and when this gets notified and the directions do come out. We'll, of course, understand this better. But for now, this is what we're hearing basis sources. Thanks so much, Vishy. Malika.
Thank you so much, both of you, for joining us and giving us such an impactful insight into what's happening. And viewers, the stock on our radar today is Coforge. The stock is flying in trade after this. It got mixed brokerage views. Puneet is joining us with more details. Puneet, why are these, what is happening with the stock?
Well, definitely. You know, they've signed a new 13-year deal with Sabre Corporation of roughly about $1.56 billion. Now, that's one of the biggest deals that they have done comparatively in the past as well. So there are two brokerages which have a positive view to maintaining the sale rating. Let's start with Morgan Stanley first. An overweight rating, 11,500 is the target, which was a 59% upside from the previous close. They essentially said that, of course, this is the largest deal that they've signed, and estimating an $80 to $120 million incremental revenue coming in FY26. They're estimating a 5 to 8% growth going forward into FY27 as well. And they mentioned that the management had flagged that some deals that the company is pursuing is disproportionately larger than they have in the past. So it's definitely a big positive going forward as well. They mentioned that it could pose an upside risk to their numbers and estimates for FY26. So watch out for this one. Jefferies again hiked the target price to 10,350 from 10,100 earlier. It mentioned that the deal will also improve its positioning in the travel space as well as open doors to more such large deals in the future. And they say that it can reflect its ability to gain share irrespective of the demand environment. That was one of the key points. The Macquarie note is they have maintained their underperform rating. Target price is 5,220, and they mentioned that while this is an existing customer and may not take incremental revenue in FY26 based on whatever the estimate was, it's still a large deal, but they're maintaining the negative stance on the stock. And Axis Capital as well maintaining a sell rating, target price of 7,900. And they mentioned that valuation is the only concern, but it's a big positive on this deal aspect. So the commonality across brokerages has been that this is a good transaction, good deal to win. And going forward, it'll be key on the comments in terms of the demand environment going into Q4 as well.
So positive view on Coforge. Now the next we're looking at is Vari Energies. Vari Energies announces various new initiatives and plans for capacity expansion in its Investor Day meet. And I'm now being joined by Mihika, who's going to tell us what exactly are these announcements.
So it did have its Investor Day presentation yesterday, made some key announcements in terms of different aspects. Regarding capacity expansion, well, Vari Energies has recently commissioned and started commercial production at their 1.4 gigawatt cell line, and their 4 gigawatt TOPCon solar cell line will also be commissioned in a few months, and this commissioning of this 4 gigawatt cell line will ultimately help faster commissioning of their 6 gigawatt integrated cell line in Odisha, and they are confident of expanding their solar cell capacity to 5 gigawatts by Q1 of FY26. They've also announced a series of new initiatives. One is electrolyzer manufacturing, which is a 550 crore capex, lithium ion advanced chemistry storage cell, which is a 2100 crore capex. Inverter stands at 130 crore capex. Acquisition of NL India will also help increase the customer wallet share for the company. Now, in terms of the inverter business and the NL acquisition, it will potentially aid earnings over the next 2 to 3 years, and the successful deployment of battery energy storage and electrolyzers will also aid future earnings as per quota. Lastly, regarding the policy uncertainty, well, the US policy does remain a key overhang for Vari. There is no further communication from the US administration regarding the IRA incentives as well, and the potential import solar tariffs on exporting countries is yet to be finalized. Therefore, there's a lack of clarity on the future of the US order book.
Okay, got it. We will keep a look on that clarity front that you said on Vari Energies. And now next focus is Trent. Trent is surging in trade after Westside witnessed strong store addition in Q4. And my colleague Mahima is joining us with more details on this. Mahima, it's a great day for Trent. How many stores and where exactly?
Absolutely, it's a great day for Trent, and it's one of the stocks to focus on. And as you rightly mentioned, it is on the back of strong addition of stores in Q4. The management has said that Westside store addition is highest, at least in the past 2 years, is something that they've observed this quarter. Overall, Westside today the stores stand around 269 odd stores versus that of 238 as of December 2024. The Zudio stores stand at around 672, implying a 37 stores addition in Q4 so far. Now, in terms of, just to give context to viewers as to how Q3 panned out for Trent, revenue growth was sub 50%, which has not been the case for Trent over the past few quarters. The last 2 quarters was sub 50% growth. Companies looking to upgrade smaller stores to larger formats and focus on stores with looks and with upgradation. Upgradation of stores could lead to near-term margin pressure, something that the management has said. And Fashion Concepts registered high single-digit like-for-like growth. Like-for-like growth at high single digits versus double digits earlier. That is something that was witnessed in Q3, and like-for-like growth at high single digits. Considering how the Q3 panned out, they opened 14 new Westside stores and 62 new Zudio stores in Q3, and overall they registered a volume growth of around 39% of 9 months FY25. Now, in terms of emerging categories, Westside and Star Bazaar, emerging categories contribute over 20% of the overall revenues. Online revenues year to date grew around 45%. This is of course as of 9 months FY25, and Star Bazaar operating revenues saw a growth of around 25% and a double-digit like-for-like growth as well. So this is the overall view of Trent, and of course store additions is the reason why Trent is buzzing in trade today.
So we might be able to see more stores of Westside and Zudio going forward. Now, speaking of pharma, viewers, Granules India is in focus as US FDA issues a warning letter for its Gagliapur facility, and Varsha is here to share us the details of this particular matter.
Yes, Granules is in focus. Now this is on the back of US FDA which made their warning letter public. Now please note that US FDA has issued warning letter to Granules on Feb 26 for its Gagliapur facility, which contributes almost 60 to 65% to the overall revenue. Now this is one of the main manufacturing units for Granules. Now let's see what are the issues that warning letter contained. So data integrity, quality and contamination issues were highlighted in the warning letter. Analysts do not expect a faster clearance. Now I have 3 points wherein USFDA has emphasized these 3 points. One is that granules had failed to establish and follow adequate written procedures for cleaning and maintenance of equipment, and significant contamination was found over there. So this was the first observation that granules had received. Second one, they failed to maintain buildings in the good state of repair, and it says birds, small animals and insects were actually entering the plant, and there were birds dropping and feathers found inside the plant. And lastly, if you see the third observation, these are the major 3 observations basically in the warning letter. The third observation was that granules failed to routinely calibrate, inspect or check according to the written program designed to proper performance of automatic or electrical equipment, and which is used in the manufacture, packing and holding of a drug product.
Now let's shift our focus to what's happening internationally. US President Donald Trump addressed the Congress for the first time since he returned to power. His opening words were, "America is back." During his address, he singled out India as an example of a country charging excessive tariffs to the US. So he remains firm on imposing retaliatory tariffs, which are to come into effect on April 2nd. But imposing 25% tariffs on Mexico and Canada, and as well as doubling additional tariffs on China is not all, because most of these countries are countering back with retaliatory tariffs on US goods. Canada retaliated to Trump's move by announcing a sweeping package of tariffs on $107 billion worth of American products. And Prime Minister Justin Trudeau took a confrontational stance in his statement as well. Mexican President Claudia Sheinbaum stated that her administration will take a decision based on what the US does in terms of tariffs. And while China plans to levy tariffs of up to 15% on some US goods, India's Commerce and Industries Minister Piyush Goyal is in Washington right now to finalize the bilateral treaty and to hold talks on the quantum of reciprocal tariffs. India has also lowered tariffs on some American goods in a preemptive move. Now, speaking on laying off several federal employees, he also said, Trump also said that our country will no longer be woke, further negating diversity measures in the federal government. He also commented on Ukraine President Zelensky's letter after the 2 leaders argued publicly during their latest meeting. Now that Ukraine is ready to negotiate to bring peace and has agreed to follow Trump's leadership to help the country, Trump said he appreciates his message. Now, as we speak about it, let's also hear from the horse's mouth. American President Trump says U.S. economy is the highest priority and that his government aims to make America affordable again.
Among my very highest priorities is to rescue our economy and get dramatic and immediate relief to working families. As you know, we inherited from the last administration an economic catastrophe and an inflation nightmare. Their policies drove up energy prices, pushed up grocery costs, and drove the necessities of life out of reach for millions and millions of Americans. They've never had anything like it. We suffered the worst inflation in 48 years, but perhaps even in the history of our country. They're not sure. As president, I'm fighting every day to reverse this damage and make America affordable again.
And of course, in the context of all of this, the obvious thought that comes to mind is, can the tariff war be settled, or it can go even uglier from here? Let's understand it from Global Investor President of Yardeni Research, Edward Yardeni.
Well, clearly, there's a lot of different messages coming out of Washington. Today, we started out the morning with a very tough message of 25% tariffs on Canada and Mexico, and a total of 20% on China, and all 3 of the countries announced retaliation. Market took a dive on that, then it recovered some, and then it took another dive. And then after the market closed, as you said, Commerce Secretary Lutnick indicated that by tomorrow, there might be negotiations that resolve some of these issues, which is mind-boggling. I mean, this is really creating a lot of uncertainty, a lot of chaos in the financial markets and in the economy. And I think we're all going to start learning to tune it all out. This is the art of the deal, but deals done in public, and it looks pretty messy. And I think we just have to kind of wait to see how all things settle out. I don't think that it's going to get much worse on the tariff side, but I don't know that for a fact. But I do think that Trump will get a lot of pushback from a lot of special interest groups, and that instead of seeing tariffs go up at the end of the day, we may actually see some negotiations that bring them down.
Dr. Yardeni, hi, morning. So if you tune out all of this, and there's so much to tune out, therefore, then what do you focus on? Because ultimately you'd be waiting for some time, and whether we like it or not, there are going to be implications for the United States, for its consumers, for its companies, because of these tariffs. So what do you focus on?
Yeah. Well, all I'm saying is, instead of starting out with the headlines of what's coming out of Washington, start out with the economic and financial indicators that the economy is generating. And admittedly, the latest batch of economic indicators for January looked quite weak, and there was a downward assessment of real GDP growth from over 2.5% to under to minus 2.5%. But a lot of that was January data. January was the coldest January month that we've had since 1988. So I think a lot of the weakness in the consumer was that related to that. And we will, in fact, see a nice rebound in retail sales and consumer spending in February and March. In addition, a lot of importers decided that before the tariffs are coming, they might as well bring in more of the goods that they typically order. So we had this huge surge in imports in January, and that, from a mathematical arithmetic standpoint, lowers the growth rate of real GDP. That was the big drag on real GDP in January. And I think a lot of that's going to be reversed in February and March. So rather than expecting a negative quarter for GDP, I'm expecting plus 1.5%, maybe even better than that.
So while global uncertainties intensifies, let's smile at how the markets have fared today and are recovering, as recovery is the key positive of the markets at the moment. Now, viewers, stay tuned to NDTV Profit for more news and updates as we keep getting you the best insights on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both
welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. This is Hiral Dadia. Let's quickly first take a look at what markets are doing at this hour. An interesting day of trade because clearly we've climbed above that 22,300 mark on Nifty 50. And what's promising today is a 800 points jump coming in on the Sensex. This is a domination by the bulls literally after 10 days on the Lal Street. Let's quickly understand what's happening in terms of Bank Nifty as well as we speak. We're nearly at the day's highest levels so far. You have Bank Nifty as well, which is up almost around 0.7%. And if you see in terms of Nifty 50 as well, let's just quickly pull up that one on the screens currently, because if you see in terms of the day's high and low, the gyration is extremely spectacular. 22,382 is where we are trading at. So we're nearing that 22,400 mark on that front. And at the lowest level, we were at 22,650. So almost a 300-point gyration in terms of today's day of trade. Let's understand the sectoral heat map and see, where is that uptick coming from and what is it that's supporting the market so far. The metal index is absolutely strong, the top sectoral gainer in today's day of trade. Energy is doing pretty well. IT as well as auto up above almost 2.5% in today's session. So it's a sea of green across sectors, not a single sector that is trading in the negative as well. So that's what the sectoral heat map is telling you. Apart from that, if you see in terms of Nifty 50, the advance decline ratio on that front is 44 advances versus 6 declines. And what is contributing to the gains, you have the likes of an Infosys, Bharti Airtel, Reliance, M&M. These are the top contributors. What's lacking today is the HDFC Bank, Bajaj Finance. In fact, Bajaj twins are taking a beating in today's session on the back of the RBI norms that are talking about the flexi loan product. Plus, you have a Grasim, which is slightly under pressure, which is contributing, as well as a IndusInd Bank, which is trading under pressure as well. So that's with regards to the large caps. But apart from that, the top gainer today being in Adani Ports on Nifty 50. Upwards of 5% is the kind of gains that we're seeing on this counter. Power Grid is another one. Adani Enterprises also up around 4.5%. NTPC seeing gains of nearly 4%. Grasim, we already spoke about. Shriram Finance is also taking some bit of a beating. In terms of broader markets, let's just pull up the mid-cap and the small-cap index as well, because interesting moves on that front. There you go, upwards of 2%. So clearly outperformance coming in from the broader markets vis-a-vis what's happening in terms of the benchmark indices in trade. And you have the small-cap index as well, which is seeing gains to the tune of little 2.2%. So again, at the day's highest levels as we speak. In terms of individual stocks, let's just look at a few of the names. Gabriel India, 11.5% is the kind of up move on that one. Coforge, on the back of an acquisition, is seeing some smart moves, as well as the stock split. That's what the street is cheering. IFL is in the positive. You have Signite Technologies, which is in the positive as well. Gensol, a 10% cut coming in on that one. Anand Rathi trading under pressure. You have a Tips Music, Jindal Worldwide, which is trading under pressure. BSE is also an interesting one. BSE, firstly, on the back of the move in terms of expiry from BSE, NSE, that stock is under pressure. In fact, you're seeing some fresh shots that are being built on BSE as well in terms of the F&O side of it. Adani Wilmar is also doing pretty well, and this is on the back of the acquisition. And overall, the Adani group of companies which are trading on the positive side. So that's what you're looking at in terms of the overall market action in today's session. But let's quickly shift to the key themes today. Firstly, you have retail NBFCs on RBI's radar, on the back of which you have the Bajaj twins that have been trading under pressure. We will tell you why. On 2, we have Coforge that has partnered with Sabre, and they have announced a stock split. Stock in good hands. On number 3, a lot of order wins that are in focus, from an RVNL to a Welspun and another company that we will be watching out for. On theme number 4, on brokerages of the day, you have a JP Morgan on M&M Finance, and you have a M&M that is in focus. So both M&M group of companies on brokerage radar. On theme number 5, your chemical companies are seeing some price stability that is coming in. What would this mean for quarters ahead? And you have global cues in terms of how will Trump tariff war impact India. Mika will get us more on the same. In terms of other stocks in focus, Trent and Biocom are the 2 stocks that will be on our radar, both of them trading in the positive. But let's shift to the first part of the theme, where we're talking about RBI, which is actually directing large NBFCs to actually go ahead and stop the new lines of credit. And this is the Flexi Loan product. This is an NDTV exclusive that Vishy is joining us to give us more details. Vishy, what are you picking up from your sources? And 2, what is the kind of impact and who gets impacted?
So sources are telling NDTV Profit that the Reserve Bank of India has raised concerns with how NBFCs are extending credit lines to some of their borrowers. So essentially, this is specific to perpetual credit lines, or credit lines where the borrower does not have a defined repayment period, has a certain limit available to them, and no such restrictions on how much they can borrow and when they need to repay these loan amounts. In fact, borrowers can borrow money through these credit lines and then repay them over years if they wish to, only paying certain interest amount to ensure that the account continues as a standard asset. Now it seems that the Reserve Bank of India, in a recent meeting with chiefs of NBFCs, has raised concerns with the quality of this product. The RBI is saying that these NBFCs typically do not have any visibility on the borrower's ability to repay their loan amounts and whether they're repaying money using more loans from this credit line, or if they're using funds from their own businesses that currently exist. So essentially, if a borrower has borrowed, let's say, 10 lakh rupees worth of a credit line, of which they have used about 2 lakh rupees worth of loans. So instead of taking money from their own business lines, they would borrow maybe more money from the existing 10 lakh limit and then repay the old loan. This ensures that their outstanding loan amount does not change, but the account remains standard for a longer period of time than necessary. The RBI has suggested to these NBFCs that they may want to slow down on these loan products and eventually stop them over time and not create any kind of any kind of disruption in the existing loan product, because currently about 50 to 60,000 crore worth of loans have been extended by NBFCs to borrowers. These borrowers could include salaried individuals. It may also include small business owners and self-employed individuals who might be borrowing money from large NBFCs.
Thanks, Vishy, for getting us the details. So 4 stocks that we are watching out for on the back of this is a Bajaj Finance, Bajaj Finserv, Aditya Birla Capital, Poonawalla FinCorp as well as Jio Financial Services. These are the ones that could get impacted as well. The biggest one taking a beating is the Bajaj Finance, but the others are still up and about in trade. So I think this is telling you something, because we don't have the breakup yet in terms of what is the quantum of the AUM, or the loans that are actually given out as a flexi loan product for all of these companies. So that is one of the crucial data points that will be required from the company's end as well to understand the overall impact. But media reports are indicating that the total exposure is around 50 to 60,000 odd crores in a product like this. And the major concern they have, as Vishy was mentioning, was with regards to a irregular repayment cycle as well. But also let's welcome in Gaurang Shah, Head Investment Strategist at Jio Financial Services, to understand his views as well. Gaurang, good afternoon and welcome to the show, and always a pleasure to speak to you. Clearly, I mean, from what you heard from Vishy as well and the stocks that we were talking about right now, how are you looking at this kind of a move? Because again, this is not something which is official yet. It's more of source-based information where they will be looking at this portfolio. And 4 companies that NDTV Profit has identified so far is Bajaj Finance, AB Capital, Poonawalla FinCorp, as well as Jio Financial Services. What is your view?
Thank you, Hiral, for having me on the show. Good afternoon to all of you all. So without going into specific names, because there is still no clarity, I think this is not the first time that the authorities have taken these steps to control the systematic risk which may evolve from a long-term point of view in case if this is gone undetected. With respect to unsecured loans also, there was guidelines a couple of months back. See, what happens over here, Hiral, is that when you go on giving flexi sort of line of credit, that can lead to a lot of complicated problems. First of all, a systematic risk in terms of providing a credit line to a borrower who is habitual to take one loan to repay another loan. And this can, over a longer period of time, if it is not detected and if it is not controlled and if it is not put in its place, can lead to a larger risk. We've seen these kind of unfortunate, misgovernance, if I can use that terminology, by certain NBFCs, not one, but one too many times. And every time that such instances have cropped up, I think the authorities have stepped in and taken appropriate step. So I don't think it is unviable for the authorities to control this unfortunate, larger than life, unsystematic risk scenario evolving. I think it is very appropriate, because this may also lead to a domino or a chain effect, not restricting itself to the NBFCs, but also to other entities and sectors.
Right. So that's with regards to the entire the financing space, which could be getting impacted as well with the kind of exposure they have to this category of loans. But moving on, you have a Coforge that is in focus. Smart moves on that one. Firstly, they've partnered with Sabre Corp. The company, in fact, has bagged its largest ever deal of $1.6 billion. Puneet joins us more. Puneet, the partnership, the biggest deal, and a stock split that has been announced. And that's what I think is keeping the street enthused, with gains of nearly 9% coming in there.
Well, definitely. They've signed a new 13-year deal with Sabre Corporation of roughly about $1.56 billion. Now, that's one of the biggest deals that they have done comparatively in the past as well. So there are 2 brokerages which have a positive view to maintaining the sale rating. Let's start with Morgan Stanley first. An overweight rating, 11,500 is the target, which was a 59% upside from the previous close. They essentially said that, of course, this is the largest deal that they've signed, and estimating an $80 to $120 million incremental revenue coming in FY26. They're estimating a 5 to 8% growth going forward into FY27 as well. And they mentioned that the management had flagged that some deals that the company is pursuing is disproportionately larger than they have in the past. So it's definitely a big positive going forward as well. They mentioned that it could pose an upside risk to their numbers and estimates for FY26. So watch out for this one. Jefferies again hiked the target price to 10,350 from 10,100 earlier. It mentioned that the deal will also improve its positioning in the travel space, as well as open doors to more such large deals in the future. And they say that it can reflect its ability to gain share irrespective of the demand environment. That was one of the key points. The Macquarie note is they have maintained the underperform rating. Target price is 5,220, and they mentioned that while this is an existing customer and may not take incremental revenue in FY26 based on whatever the estimate was, it's still a large deal, but they're maintaining the negative stance on the stock. And Axis Capital as well maintaining a sell rating, target price of 7,900, and they mentioned that valuation is the only concern, but it's a big positive on this deal aspect. So the commonality across brokerages has been that this is a good transaction, good deal to win, and going forward, it'll be key on the comments in terms of the demand environment going into Q4 as well.
Right, so that's a positive one coming in with regards to Coforge. Gaurang, how are you looking at a Coforge, taking into consideration, one, in terms of the deal size, and that they've announced a split as well? Because if you see in terms of the stock performance in the last 6 months, it's up around 20%, but overall, this year itself has been a downer with cuts of around 18% coming in 2025. So do you think a good opportunity to enter the stock as well with the prospects now?
Viral, subject to the prospects are big long term. Okay, I mean, not only Coforge, but I think your IT index and the IT pack overall has been under pressure. And rightly so. There are a lot of unconfirmed news flows that the Trump administration is also going to target the Indian IT sector. I don't know how far that is true or false, but that's the word that is doing the rounds in the market. So there is an overhang over there. In terms of the company, well, as a brokerage house, we at Geojit Financial Services have a coverage on the positive side on Coforge. My sense is, then every time that I have looked into the past history of strong companies at a particular price, management or the board announcing either a split or a bonus, augurs well for long-term investors, because after some time, after adjusting to the respective split or bonus proportionately, the stock prices tend to move up. So it can be a good wealth creator also.
Okay. So that's with regards to where Coforge as well as IT as a sector goes. But moving on, a couple of companies that are in focus in today's day of trade, and that is on the back of order wins. Let's just quickly look at names like a RVNL. Apart from that, you have a Welspun Specialty, which has again been a L1. And you have GE Vernova TND, which has again received orders. RVNL doing pretty okay in trade, but the other two as well. Let's just pull up those two on the screens and see what the counters are doing. A Welspun Specialty as well as a GE Vernova. And to talk to us more on these names, joining us is Anushi. Anushi, clearly, 3 companies on the back of order wins. In terms of priority, how are you looking at them?
Hey, so first I'll start off with RVNL, because this is one counter where we've seen a couple of order wins in the last couple of sessions. Now, firstly, they've received a letter of award for a 729 crore of a project from Himachal Pradesh Electricity Body, and this order is to be executed in the next 2 years itself. If you look at order book position of the company, in the recent conversations that we had with the management, the order book stood at about 97,000 crore, and they expect to increase this to 1.5 lakh crore by the end of FY26. Even in the guidance, now we've seen that the 9-month period has been comparatively, we've seen downtick in their numbers, but for FY26 they have guided for even better numbers than what the FY24 was. So it's not FY25 wherein they're expecting on a lower base to account for higher numbers, but on FY24 they expect better growth coming forward. So they expect 6 to 8% growth in FY26. Margins are expected to be higher in the next 1 to 1.5 years as well. Now moving on to something like a Welspun Specialty Solutions, they've emerged as a lowest bidder by Bharat Heavy Electricals, and this is for a series of supercritical thermal power projects that we are seeing, with the contract value being at 232 crore. Again, this pertains to a supply of 4,050 tons of stainless steel seamless boiler tubes. If you look at the latest order book of the company, that was at the end of Q3 FY25, that stood at about 422 crore. Last one in the focus is GE Vernova TND, and they have received 3 orders worth about 500 crore from Power Grid Corporation, and this pertains to supply and installation of transformers and rectifiers. If you look, the order execution period for this order, that's to be executed in the next 3 years. Order backlog of the company stood at about 10,780 crore. This is as of the December 24 figure that we are looking. So these are the 3 counters and focus on the back of their order wins.
Right, so order wins and all those 3 stocks in the positive. Gaurang, 3 companies, different segments, your preferred pick and your view.
So I think I'll give a company-specific view. I would give a buy, sell, and hold Hiral because we don't have coverage, and the company-specific view is limited to RVNL and GVTND. Uh, well, RVNL, as we know, connected with Indian Railways, government PSU, Indian Railway stocks related to Indian Railways perform well, and now they are a little bit under the weather because of profit booking. But the opportunity is huge for relevant companies which have got strong performance track record and order book. For GVTND, well, I think all those companies which are associated with manufacturing of power equipments which are used in transmission and distribution and power storage. I think all these companies are going to do extremely well given the entire roadmap of new power generating capacities coming up in India, largely focused in clean and green.
Right. So that's with regards to GBTND as well as when you talk about RVNL overall. But moving on, clearly apart from these stocks, what you can look at is the summer, right? It's the AC demand that will be in focus. And this summer, beating the heat actually might be harder because and pricier in fact than expected, and this is only on the back of the surge we are seeing in terms of demand, the supply chain hiccups as well as the geopolitical roadblocks that are coming in. You have air conditioners that could be flying off the shelves faster than they can be actually restocked. Sesha Sen, my colleague, will bring us more details on this. Sesha, what are you picking up and any company specific action that you would have on this front?
This summer, India may face air conditioner shortages again, like last year with early onset of summer that is expected to lead to a massive surge in demand, even as the industry grapples with supply chain disruptions. Manufacturers are struggling with delays in procuring critical components like compressor and copper tubes, particularly from China, which supplies about 40% of the parts needed for AC production. Now, that's because of three main reasons. One is that the Chinese manufacturers are prioritizing US shipments ahead of the expected tariff hikes. Second is the delays in BIS or Bureau of Indian Standards certification, which mandates sourcing of components from certified factories. And thirdly, import clearances are taking longer, hurting delivery times. Major companies such as Voltas, Godrej Appliances, Blue Star and Panasonic indicate that while they can handle a moderate increase in demand of around 25%, any spike beyond that levels could result in empty retail shelves by mid or end of April. Now, for consumers, they may not be, only facing shortages of AC models, but also price hikes, given that rupee depreciation has led to inflated imported bills for companies. The companies are expected to take about 3 to 4% price hikes going ahead. However, there is currently no fear of demand getting affected due to price hikes, with weatherman IMD forecasting an unusually high heat wave for this year. The AC sales are expected to surge like last year, and the sales figure is expected to reach 18 million units this year versus 14 million last year. However, a shortfall in the inventory could translate to a 1,500 crore in lost revenues for the industry.
That's an interesting number, Sesha, to watch out for from what you're saying, that a price hike of around 3 to 4% that could be coming in, raising the costs by almost 1,500 to 2,000 rupees, right? Overall, and a sales increase of 25 to 30% is what you're watching out for as well. So a lot of factors that do come in here. Gaurang, how do you look at the industry? And if you have to look at a Blue Star, Voltas, a Godrej, Amber from the listed space as well, what would you advise investors to do?
Well, so Hiral, we have coverage on Voltas and not an absolute AC player, but coolers, which is a very niche and market name called Symphony Limited. First of all, I think the temperatures are going to soar all across India. We've already started to feel the heat in Mumbai. Actually, if you go to see just the end of Feb that we saw in the beginning of March, and we have yet to see the severity of April, May, and maybe early part of June before we see any kind of cool off. If the rain gods have to be kind enough on us and have a decent amount of rainy season this year. Affordability and aspirations both have moved upwards. In the sense, the changes made in the budget will not impact directly, but I think third quarter this new financial year we should have more positivity in terms of affordability and the aspirations moving up north. We maintain a positive stance on the sector. And like I said, Voltas and Symphony are the two names that I currently recollect on which we have a positive coverage.
Okay, so those are positive calls coming in terms of the AC industry as well. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about
Welcome back. You're watching NDTV Profit and Profit Buzzers. Clearly, the markets are continuing to do absolutely well, nearly trading at the day's highest levels. But let's quickly look at the fourth theme of the day that we're focusing on is the big brokerage calls of the day. To start off with, you have a JP Morgan that has upgraded M&M Finance to an overweight. It has also gone ahead and hiked the target price. And you have a UBS which has gone ahead and upgraded a M&M but cut the target price. First, let's get across to what Jeffries is saying about M&M Finance. Joining us is firstly Harsh to talk about that. Harsh, over to you.
Three key factors which JP Morgan believes is swinging things in favor of M&M Finance at this point. One is with regard to ROA. Earlier, the ROA band was 2.2 to 2.5%. That has been cut down to 1.8 to 2% in this difficult credit or asset quality cycle. And essentially, why is that so? One is of course asset quality. The other piece was margins, and that's what they're focusing on. They're saying that cost of funds likely to get better going forward. And second is yields, which have been impacted because of the higher traction that PV is seeing versus farm equipment. Farm equipment, of course, garners better yields, and those are the two reasons why margins have largely been impacted. Now, given the fact that you've got good commentary coming in from M&M with regard to farm equipment, you might well see yields start to climb and therefore margins get better. So that's the first part of it. The second part is with regard to flow rates on asset quality. This is essentially an indication of what the forward asset quality is starting to look like. And in that space, the flow rates have started to improve, is what early indications from the Q3 numbers seem to suggest to JP Morgan. Credit cost expected now between 1.3 to 1.5%. JP Morgan estimates is 1.4%, and therefore likely to get better. Last off was with regard to growth. Disbursements have been weak, but now with rural pickup, we had M&M commentary talking about farm equipment. I did speak about that. And third point being the reservoir levels have been good, and therefore you're expecting a good pickup from rural, which should aid the disbursement numbers for M&M Finance as well. Poised, therefore, valuations being reasonable. The only possible overhang is the rights issue, which if done will well signal positive momentum on the stock according to JP Morgan.
Right, so that's with regards to where M&M Finance goes. In fact, also let me welcome in Brijesh L to the show. Brijesh, if you look at the charts of M&M Finance, clearly not done anything much in terms of the last 1 year. It did hit a high of around 343, and that was back then somewhere in September. Overall, it's a 5% downtick in the last 1 year performance, and it's just started to move from its 52-week low from a 246 to a 276 now. Do you think the charts are looking stronger from here on and an opportunity to buy comes in?
Hi, good afternoon. So maybe specifically from the trading perspective, I think there can be some positioning can be bought purely because the strike price of 300 is seeing some kind of long unwinding low. So sorry, short unwinding. So most probably there can be a trading opportunity of 25 odd points. So till 300, I think there can be opportunity, but nothing beyond that. So from the directional point of view, I would still be cautious. But somebody was to take a bet. The stop loss is quite small, like 275 is where the maximum pain and the put writers are making the position. So on a very immediate basis, maybe with very small stop loss, 3-4 points, one can take that bet, and then 300 can be the target.
Okay, so that's M&M Finance. Gaurang, how are you looking at M&M Finance?
Well, we have been positive on M&M Finance for a pretty long time now, and I think it is a very well-suited play if you want to invest into semi-urban, rural India related NBFC category companies. Has got a very strong backing from the parent. 314 is the approximate target from a long-term point of view on M&M Finance.
Okay, so that's M&M Finance. And from the same group, another stock that is in focus today is M&M, which is seeing some strong moves today, trading nearly at the day's highest levels. And a UBS upgrade that has come in. Puneet is getting us the details. Puneet, why is UBS upgrading an M&M?
UBS has upgraded Mahindra & Mahindra to a buy rating with a target price of 3,300, which is a 26% upside from the previous levels, although they've lowered the target price from 3,430 earlier. Now, they mentioned that the 19% correction in the stock price makes it a very lucrative buy at this opportunity, and they see that the Tesla's plans in India has not, and any kind of concern on the stock price is overdone. They've also mentioned that the SUV segment is expected to see a high single-digit growth in FY26 as well, and they're expecting that, while the industry volumes will be roughly about 2 to 3%, M&M will be outpacing that growth going forward as well. Apart from that, they mentioned that the recent EV bookings has been slightly underwhelming at 30,000 for the first day itself. That's roughly 6 months of sales in terms of the current capacity of 5,000 units per month for the electric vehicle capacity of Mahindra & Mahindra. And they see that it's still relatively strong in concern when you take the whole industry sales of about 98,000 for the previous fiscal year. Apart from that, in the calendar year as well of 2024, we saw roughly 98,000 to 1 lakh units sold. So in that aspect, the number is strong, but still, based on the benchmark, the Mahindra has said slightly underwhelming according to UBS. They mentioned that farm equipment business is also seeing a robust growth going forward. It's expected to be a 15% growth in Q4, and mentioned that it accounts for roughly 40% of the EBIT and 30% of the SOTP valuations of the whole Mahindra currently. Why Tesla's entry is not a concern is a very big part of the report. It mentions that it could be limited to imports of the Model 3, which is currently priced, at $35,000, roughly around 30 to 35 lakh rupees. And it couldn't be suited in terms of, because it's a sedan, it might see some demand pressure going forward. Apart from that, valuations currently at 15 times 12-month forward EB by EBITDA is at a 17% discount to Maruti according to their current target prices. So watch out for this one as well. But overall, it's a big positive report, and a few more updates from Mahindra in the EV side will be something to watch out for.
Right. So, thank you, Puneet, for getting us the details. Gaurang, let me come to you first. M&M, how are you looking at that company? Because clearly, it's absolutely become a game changer with the EV portfolio. Secondly, the waiting period has absolutely come down, right? So that's another major positive. And this is because the capacity additions have been done so far. How would you rate a M&M currently versus the other auto players in the four-wheeler space? And would you recommend a buy at current levels?
I would definitely recommend a buy, Hiral. And on the four-wheeler side, we have coverage on Tata Motors, M&M, and Maruti. Specifically speaking about M&M, on the fundamental side, approximate target of somewhere close to about 3,400. I very well remember not too long ago, about a fortnight back, because of Tesla coming into India, we saw what happened to all the three companies, including Hyundai. And now there is some amount of respite. I definitely agree with your colleagues' product-wise, segment-wise breakup and the outlook. And my only wish is that they also, like they've been focusing on PVs, SUVs, LUVs, UVs, a dedicated focus to revive the commercial vehicle for M&M will also contribute to a great extent on the top line and bottom line. But we have targets of 3,400 approximately.
Right, 3,400 tops is the target. Brijesh, what are charts indicating for an M&M?
So let me take it from a little longer time frame. So if I understand, if during the month of October, there was a very strong distribution, and even the same thing what we saw in the last month as well. There was almost 13% correction in the month of Feb. And now if I even look at from the technical perspective, the level of 2800, 2850 is likely to act as a resistance zone. Even though maybe from the long-term perspective, maybe the chart is looking good. But on the immediate, from the trading perspective, I think this will get resistance close to 2800, 2850 level. So one has to be cautious. One can play this move from the current level to 28, 2850. But then if it sustains and then we see some turnaround at those points, fresh volume coming at the level of 2800, 2850, if that things are observed, then I might take a positive view. Until then, I would like to have a cautious view because the month of February has been very disappointing and this can be treated as a pullback rally.
Right, a pullback rally probably could be on the cards with regards to M&M. And moving on, the chemical space is in focus, and this is despite the price volatility in crude oil, chemical prices have actually held firm. Now, what could this actually mean for the Indian chemical sector? Varsha joins us with more details. Varsha, over to you.
Chemical prices were mostly flat month over month in Feb 2025. Now, if I were to talk about the crude oil prices, they were between 71 to 75 US dollar per barrels, supported flat to slightly positive trends. Now, near-term chemical prices are expected to remain range-bound after COVID era highs. Now, select pockets within the pharma chemical sector are experiencing healthy growth. Now, this is as per IDBI Capital. Companies moving up the value chain in terms of scale and complexity will benefit long term. Now, if I were to talk about the chemical prices over here, so acetone prices increased 5% month over month, benefiting Deepak Nitrite. Phenol prices increased by 7% month over month, benefiting the SI group, and methanol prices saw a sharp 11% month on month increase, benefiting RCF and NFL, but impacting alkylamines and Balaji amines. Now, most other track chemicals exhibited a flat price trajectory. Now, according to IDBI Capital, they prefer Ami Organics due to expertise in advanced pharma intermediates and upcoming Ankleshwar unit expansion. They also like Neogen Chemicals for its bromination expertise and first mover advantage in battery chemicals. And lastly, the commodities chemical segment is expected to remain range bound due to steady domestic demand, according to IDBI Capital.
Right, so that's with regards to the chemical segment. RCF, NFL, two of the stocks that we are watching out for. Ami Organics as well as Neogen Chemicals are also that we look at. Brijesh, if you have to look at any of these chemical names, anywhere where you're seeing strength, or would you advise a sell-off at current levels?
No, I'll go with my fundamental team. So I do also from the technical perspective, ME Organics, something which is not given any, recently there was no sell-off and structurally it is looking strong. So in the near term, I can easily say that another 300, 400 points kind of a rally can be seen in ME Organics. So that remains one of the good trade setup. Corrections can also be viewed as an opportunity to take a fresh longs. So ME Organics is one trade. And Neogen is something which we understand that it's almost near to the demand zone. 1600 is a sizable level where I think there will be a strong demand. So yet technically there would be some confirmation would be needed, but then we have a strong bias in this counter. So maybe sooner or later we'll see a trade above 1800, 1850, and that will be a technical confirmation which will speak of again 2000, 2100 on the higher side. So from the long-term perspective, yes, and from the trading perspective, 1800, 1850 for the Neogen chemical.
That's a Neogen. Gaurang, how are you looking at it? Because near-term chemical prices are expected to remain range-bound. That's the word coming in so far. Feb has been stable. How are you seeing the impact, taking into consideration the kind of capacities that are already lying pretty vacant and the turnaround that the chemical sector that was expected to give in the third quarter, that has been delayed as well?
This might get a little bit more delayed, Hiral, because we have a sword hanging on specialty and agrochemical sector in form of Trump trade tariff, the triple T that I called, including auto also that we discussed. The 2nd April, we'll have more clarity by next month as to what's going to happen. But the sense is that if you eventually decide to invest in specialty agrochemicals, then your time horizon has to be a little bit more stretched compared to other sectors. The companies that we like are Pidilite, PI Industries, Vinity Organics, SRF, UPL. These are some of the names on the fundamental side where we have coverage.
Right, so that's with regards to where the chemical segment goes. But moving on, tariff war cloud that looms over India as Trump announces new tariffs from 12th March. Tariffs on steel and aluminium imports from all US trade partners will be set at 25%. Additionally, tariffs on imports from Mexico, Canada and China have been introduced with rates as high as 25% for Mexico, Canada and 20% on China. Now, as US looks to impose reciprocal tariffs from April 2nd, India stands at a crucial juncture after recording trade surplus of $46 billion in 2024. In fact, US remains a significant trade partner for India, accounting for 17.7% of India's exports. However, this has also put a spotlight on India's tariff policies. While the US imposes an average weighted tariff of 3% on Indian imports, India places a significantly higher weighted average tariff rate of 8.5% on US goods. So now all eyes will be on how these trade tensions evolve, particularly as India navigates its trade relationship with the US amidst these new tariffs. And how will this actually impact Indian companies and who stands to benefit from this? My colleague, firstly, Mihika, joins us with all the details. Mihika, overall impact on India Inc. Over to you.
So let's break it down. First, let's go sector-wise and the potential negative impact based on the trade deficit that we saw in 2024. Now, as per the data that we've gathered, it's the machinery sector that has the highest trade deficit with the US, the pharma products, then followed by your pearls and precious stones. This stands at 11.8 and $6.3 billion, and then nuclear reactors at $3.5 billion. There are also other commodities that do have a higher trade deficit and could be negatively impacted. You have your textiles, your knitted as well as your non-knitted apparels, organic chemicals, articles of iron and steel, as well as vehicles. Now, when you talk about sector specific, well, up first you do have the chemical sector, and the top 5 molecules that are imported by the US by value are these 5 molecules. And when you talk about who benefits, well, up first we do have PI Industries. Now, it is the exporter of one of the top molecules imported by the US. You have UPL, where tariffs on China will make the company more competitive in terms of their US manufacturing for 4 molecules that they produce. And then you have Jubilant Ingrevia, which is the only non-China prepared manufacturer and may see higher incremental volumes across different sectors. Now, talking about the auto ancillaries, well, customers are heavily reliant on Mexico manufacturing to serve US markets. Ford, GM, VW Group, BMW, Mercedes all have manufacturing units in Mexico and Canada. Direct impact is limited, but indirect impact is there because of the complex supply chains. Now, as company specific, well, you have SAMIL, 4% of their revenues come from Mexico, 11% from China, limited US exposure, however. Bharat Forge, on the other hand, 25 to 30% of our FY24 revenues did come from the US. You also have a Sona BLW, 43% revenues from the North America region, and they do also have a small plant in Mexico. And JK Tyre has 3 plants in Mexico. Then you have a Balkrishna Industries, 16% revenue coming from America, and Sundaram Fasteners, where 20 to 25% of the FY24 revenues came from the US. And lastly, you have Timken India, where 15% of their revenues come from the US. So these are the companies in the auto space that could be in focus. And then you have the metal sector. Tariff will have an impact on steel and aluminium prices. Limited impact because of our immaterial steel exports to the US, but there is some tariff impact on aluminium exports, which are 5 to 6% goes to the US. Company specific, Hindalco, the largest Indian entity that will be impacted and will have a direct neutral to positive impact. JSW Steel, their Ohio arm, will benefit because it's 4.5% of their revenue mix. Then you have Cummins. Tariffs on Mexico may create opportunities in the components and diesel engines for Cummins India. And then lastly, you have the IT space. Direct impact is mainly via nearshoring from Mexico and Canada, which is less than 5% of supply. Stocks that are most exposed is an Infosys, LTIMindtree, HCL Tech. Least exposed at KPIT Tech, Tata Tech, and Tata Lexi.
Right. Thank you so much, Mifa, to get us an exhaustive list to understand more. Gaurang, very quickly, your view with regards to, the impact in terms of tariffs, and the way Mika has broken this down for us gives us some bit of an idea. Any additions that you would have and any preferences?
So I think that was an exhaustive coverage that Mika has just put in front of us, and I think it is well studied and well done. The difference between India imposing tariffs and US imposing tariffs on India, 3% and 8.5%. So we need to bridge that gap down of 5.5% to have a meaningful dialogue with US and to soften the impact of any kind of uncertainty. What I'm given to understand, Viral, is that the respective representation from the respective ministry and the respective ministers are already in US to negotiate with Trump administration and to soothen the impact of tariffs on either side. I hope that there will be a meaningful outcome from the dialogue that the Trump administration and Modi administration will have, and it will possibly turn out to be a more growth-oriented opportunity rather than pulling each other down in terms of implementing tariffs. Retrospective tariff. Autos, IT, metals, pharma, and specialty and agrochemicals. These would be the priority sectors where I feel that there might be a resolution on the horizon between India and US.
Right. So that's with regards to the trade war. But another set of stocks that may be in focus on the back of some global cues is the metal pack. The annual session of National People's Congress has begun in Beijing, and the notable outcome is the Premier's announcement of the stimulus. Here's a report by Zoza Shen wrapping up the outcome. Let's listen in.
China's top legislature, the National People's Congress, has begun its annual session here in Beijing. The initial agenda for the country's lawmakers is to deliberate the government work report delivered by Chinese Premier Li Qiang. And the Premier said the world's second largest economy has set its annual growth rate at around 5% this year, the same as last year's figure. And the growth projection is slightly higher than the International Monetary Fund's forecast of 4.6%. The IMF has warned of potential impact stemming from tariffs that the Trump administration renewed this week. And Premier Li pledged that China will pursue a more proactive policy and exercise a moderately loose monetary policy in 2025. To better stabilize economic growth, the report said China will issue 1.3 trillion yuan, or about $178 billion in ultra long-term special treasury bonds this year, up from 1 trillion yuan last year. The report also highlights measures to develop new quality productive forces and to foster the development of emerging industries and future industries. And this includes commercial aerospace, the low-altitude economy, biomanufacturing, quantum computing, and embodied intelligence and 6G technologies. And Premier Li added that China will accelerate the digital transformation of traditional industries. Now, China's DeepSeek has already shocked the AI industry with its low-cost, open-source strategy and has already created opportunities for thousands of companies in vertical integration. And the initiative Artificial Intelligence Plus, which appeared in last year's government work report, has been materialized thanks to government's policy support. The government continues to encourage the digital economy to align with further technology innovation. And the report also mentions Beijing's opposition to unilateralism and protectionism in all forms. And this comes after the U.S. announced additional tariffs on several countries, including China. It said the country will uphold international fairness and justice, as it has already filed a lawsuit with the World Trade Organization against the tariff hikes. And while advocating for greater dialogue, China responded with an additional 15% tariffs on various imports from the United States. In an effort to safeguard its own economic interests, the report also touches on China's plans to develop a package of major projects for climate change response and actively engage in and steer global environment and climate governance in 2025. It is a priority area not only for China's development plan, but also for China's strong willingness to work together with the rest of the world.
Thanks, Zoe, for getting us the details. In fact, let's also understand, what is the kind of Indian impact that it will have, how it will impact and affect the Indian metal segment. Mika is again with us to get us more. Mika, if you could explain to us the metals impact.
Well, the sentimental impact has come into the markets already. That's for sure. You have the Nifty metal an intraday high of over 3% almost, and the index is up 5% this week. All constituents have gained 2 to 6% today. Top gainers include Hindustan Copper, Welspun Corp, Jindal Stainless, and Tata Steel. In terms of the key, it was because of the stimulus, announced during the meeting. Some of the things that are worth, mentioning is the focus on improving domestic demand, the aim for bringing stability for the housing sector, as well as a cut in steel output. Now, why China stimulus matters for metals? Well, China is one of the world's largest consumer of base metals. They are key influencer of global demand for metals, and Indian companies have struggled for several quarters now because of the weak pricing, because of low Chinese demand. So China's measures actually meeting success will aid overall global demand and then your prices globally, which does have a follow-through effect on India. And then you also have the steel companies in focus, gains of 2 to 4%, something like a Tata Steel, SAIL, JSW Steel, JSPL, all in focus today. And the latest update comes after China said that they're going to cut the country's steel industry output, and the lower Chinese steel output will put some relief on the Indian steel industry, which has been hurting because of cheap exports of China to India. And the industry also awaits safeguard import duties soon, and there are talks about it coming very soon.
Thank you for getting us the details, Mika. Tata Steel, SAIL, JSW Steel, and a JSPL. Brijesh, any of the charts that look interesting, what would you advise?
So if I speak, Tata Steel is something which is poised for some bounce back. So maybe like 150, 155 is the derivative trade one can look for. So Tata Steel, there is an opportunity. Plus, if you look at the NALCO, National Aluminium, there is one trade setup where the long build-up has been seen from the daily and the weekly time frame. So some positivity will flow in National Aluminium as well. And Hindalco, you didn't speak, but then I think Hindalco is something which has get up very strongly from the level. This is the exact resistance where the Hindalco is trading. If it sustains and it trades above this level, then I think Hindalco can move another 50 points on the higher side. So directionally, Hindalco Tata Steel is pretty good, and NALCO can be some option trades.
Right, so that's with regards to metal names are concerned. But thank you, Gaurang. Thank you, Brijesh, so much for joining us on the show and sharing your views with regards to the names that we've discussed. But one more stock, let's just pull up a Lupin on the screens as we speak. Citi has come out with a report. They've given a double upgrade to a Lupin, and that's the reason why you're seeing the stock, which has actually gone up to the day's highest levels. They've hiked the target price to a 2,260 from a 1,900. So that's an interesting one to watch out for. And in terms of any of the other highlights that we have with regards to Lupin, let's just see. They're saying that the base business margin expansion, that is something which is expected to sustain from here on. And 2,260, a fantastic number coming in terms of the upgrade as well. I think we'll get you more details by one of the researchers, but quickly, the stock trading at the day's highest levels as we speak. But completely out of time. With that, it's a wrap on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slump.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, it clearly seems that Nifty has bounced back from the 10-day losing streak.
Right.
But the key question here to ask is whether it will sustain or not.
Yeah, absolutely. Now, we are seeing a sea of green today in trade, and this is a much-needed relief after the continuous sessions of red that we are looking at. What's happening with the benchmark indices. Nifty 50 is up over 1.15% in trade today. Some of the key contributors which is leading to this kind of an uptick that we are seeing includes the likes of Bharti Airtel, Reliance back in green, M&M is in focus after the big upgrade from one of the brokerage notes, while some counters which are still under pressure include the likes of HDFC Bank, Bajaj Finance, IndusInd Bank and Grasim. But Nifty Bank also, if we see their strength there as well, we are seeing gains of around 0.46%, 0.4% now. So currently at the levels of 48,400 or so. In terms of where the sectoral indices are, that's where the interesting part is. We are looking at a overall, only all the sectors are in green. Nifty Metal in particular seeing an uptick of around 3%, and a lot has to do with the China stimulus measures also announced, which is leading to this kind of rally that we are seeing in the Nifty Metal. In fact, let's pull out some of the top contributors which are there in the Nifty Metal pack. If we can have that, yeah. So Wellspin Corporation, Hindustan Copper, Vedanta, some of the counters seeing about 4 to 6% of gains. So Nifty Metal, one of the counters in focus. Other than that, we have counters like others also in focus. So this is where in terms of the sectoral strength is building up in the index today. Even Nifty Media, now Nifty Media had been under pressure last week, but in the last two sessions, we've seen some strength building in this sector as well. But coming to the broader markets, clearly broader markets have been outperforming the benchmark indices in the last 2 days or so. If you look at where the broader markets, the Nifty Midcap Index is holding up, we have the likes of, we are seeing about a 2% of gains in trade today. And this is supported by counters like Coforge. Coforge is in focus after its partnership with Sabre Corporation, wherein they've signed up for a 13-year contract and with a significant over $1 billion contract that we are looking between the two. Other stocks in focus include Coromandel, something like Adani Wilmar. Adani Wilmar has also acquired another business in the sauce category, and Power India, which is in focus. However, there are a couple of counters which are still facing some pressure, which includes the likes of BSC, Policy Bazaar and UBL, which is seeing downticks of around 4%, and the other two seeing respective downtick of around 2%. Now coming to the small cap 250 index, what we are looking at is around gains of 2% or so more over here. And this is supported by counters like IIFL, Avanti Feed and Reddington, which is seeing gains of over 8% in trade today. While what is not supporting an index is something like Anand Rathi, seeing a 6% of a fall, while there are other counters like Spark, Go Digit and Bikaji also facing pressure of around 1 to 4%. So this is the overall themes, the overall sectoral breadth that we are seeing across the market. But Somit, over to you. What else? There's a lot to discuss today, right, in the show?
Well, yes, recently the upgrade that has come in for Lupin, if you look at it, it's a double upgrade that has come in from Citi. From Sell, they have upgraded the rating to buy, and they have also hiked the target price to 2,260 from 1,900 rupees. Now, they're saying that the base business will remain strong and margin expansion story will continue for Lupin. So that is the key thing to watch out for here. They're expecting that the US momentum would continue to remain strong. They are expecting many launches from the company going forward. And they also mentioned clearly that the non-US launches are also showing good traction for the company. Apart from that, they're saying that tariffs, if at all it is implemented, and if the company is not able to take a pass on this impact of the tariff the increase, then the maximum impact on the EBITDA will be just around 4 to 6%. So not much of an impact coming in for Lupin here. And at the end, obviously, valuations continue to remain quite cheap for Lupin. That's what the brokerage is saying, and hence this double upgrade has come in. And this is after a very long time I'm seeing a double upgrade coming in for such a large pharma company, Lupin. Apart from that, it's Trent that remains in focus. Now, do remember that in morning we did highlight that the store addition number, the store count number of Westside had increased to around 269. But there seems to be some error in that, given the fact that right now when we checked, the store number was shown at around 240. So keep an eye out for that. Stock has also come off sharply from days high after that change was made in the company's website. So that is another stock that we need to watch out for, Westside here. It has come off sharply because the number of stores addition was actually quite lower. They have just added technically just 2 stores so far in Q4, which is not that positive as far as the 269 number earlier was looking like.
In fact, let's take it across to our guest for today who's joining us, Mahesh Oja, AVP of Research and Business Development, Hindsight Securities. Hi Mahesh, welcome to the show again. So Somit was talking about Lupin and Trent as well. I want to take both the questions to you on side by side. What is your view for both these counters?
If you look at pharma, I think pharma is well balanced and fundamentally good placed. I think Lupin has been upgraded. Lupin has much more potential upside up to 2,300 to 2,350 zone. But I think it's a conservative target which were taken after the tariffs so I think Lupin has a much more potential for upside. Any downside could be used for buying opportunity. As well as if you look at Cipla is also well placed and value buy. I think from in level of Cipla is very good. So I think pharma is a pack where valuation are justified, and we can see some more upside in pharma pack. So Lupin definitely it's a good. From trend perspective, if you see, the trend is mostly down from upside level, and now it's something today was earlier up 6% and now downside by 2%. But trend has also much more potential up to 6,500 level at least. So both counter are fundamentally looks good, and we can say some more upside could come in these counters.
Okay, so positive outlook for both the counters that we are seeing, Trent and Lupin. Trent up around 2% in trade right now, while for Lupin we are seeing 2.5% of gains. But speaking of pharma, let's shift our focus to Granules India, as it US FDA has issued a warning letter for its facility. Varsha is here to share more details on this.
Yes, Granules is in focus. Now this is on the back of US FDA which made their warning letter public. Now please note that US FDA has issued warning letter to Granules on Feb 26 for its Gagillapur facility, which contributes almost 60 to 65% to the overall revenue. Now this is one of the main manufacturing units for Granules. Now let's see what are the issues that warning letter contains. So data integrity, quality and contamination issues were highlighted in the warning letter. Analysts do not expect a faster clearance. Now I have 3 points wherein US FDA has emphasized these 3 points. One is that Granules had failed to establish and follow adequate written procedures for cleaning and maintenance of equipment, and significant contamination was found over there. So this was the first observation that Granules had received. Second one, they failed to maintain buildings in the good good state of repair, and it says birds, small animals and insects were actually entering the plant, and there were birds dropping and feathers found inside the plant. And lastly, if you see the third observation, these are the major three observations basically in the warning letter. The third observation was the granules failed to routinely calibrate, inspect or check according to the written program designed to proper performance of automatic or electrical equipment, and which is used in the manufacture, packing and holding of a drug product.
Right. Thank you, Varsha, for that. Mahesh, coming to you first on granules. Do you think that this will be a major concern and clearance would take much more time, given that the observations that have come in the warning letter are quite serious?
I think the observation which I have seen, which is something is serious in nature, but if you see the strategy history of renewals, they are clearing much more in shorter time period. But it's a concern, and we can see some more downside could come in granules. It could be 420 and 430 zone. So it can take some more time. So slightly negative side trend could come in granules as well.
Right. The other stock that remains in focus is Angel One. Now, they have finally appointed the CEO, and it is a long-awaited thing that the company was there, and Street was expecting this for a very long time. And Ambarish Khenge has now been appointed as the CEO. He was earlier working with Google Pay, where he was involved with the company in expanding the footprint of Google Pay. So that is a very strong point coming in, given the fact that this new person has a very background on the tech side of the business. So that could be very helpful for Angel One, given the fact that they also want to expand more when it comes to tier 2 and tier 3 cities. Apart from that, he was also working with Myntra in the product side, and he's an alumni of IIT Kanpur. So a strong candidate seems like has been appointed by Angel One. So we need to watch out for that counter. Mahesh, how are you looking at Angel One as a stock, given the fact that there have been multiple regulatory actions which have also impacted the company's revenue as such? But do you think that there is value in Angel One at this moment?
I think it could be a range bound in upper side, because we current market situation is not favoring much. And if you see all the exchange turnover is slightly down, and all the MF is also slow down something in the nature in some buying and others. So upper side could be a range bound nearby 2,200, 2,250 zone. So I think not much more upside, but yes, this news is absolutely positive, and CEO coming from good background. So I think that's a positive sign for Angel, and market is giving already thumbs up to this. If it's a long-term impact, could be a good, but current cycle is from 3 to 6 months. If you see, then we can't see much more upside in Angel from a stock performance perspective.
Okay, well, that's the view for Angel One. But now we have a couple of order wins in focus. I'll start off with RVNL, which has been buzzing quite a bit in terms of where the new orders are concerned. They've received a letter of award from Himachal Pradesh Electricity Body, and this is a letter of award for 729 crore. Order is to be executed in next 2 years. If you look at the order book position of the company, that stands at about 97,000 crore, and they expect this number to go upwards to 1.5 lakh crores, citing that FY26 is going to be a much better year for the business as compared to FY24. Now, they also see a 6 to 8% of growth over the FY24 levels that are there. The another one in focus is Welspun Specialty. After it went in an order for 231 crore, they've emerged as the lowest bidder by Bharat Heavy Electricals, and this is for a series of supercritical thermal projects that we are seeing. Order book of this company at the end of Q3 stood at about 422 crore. Last one in focus is something like a GE Vernova T&D. They have received 3 orders worth of 500 crore from Power Grid Corporation, and this is for supply and installation of transformers and reactors. Order to be executed in next 3 years, and if you look at the order backlog of the company, that stands at about 10,780 crore. Mahesh, want to understand from you, from these 3 counters, any of particular ones that you are constructive on?
If you see Welspun Sol, so right issues concern is there, the stock is down from upper side. So Welspun Sol can be looking good from these levels, I think. If you see RVNL, it's already beaten down from higher level. I think RVNL could be a good fit from if your horizon is 1 year. I think 425 to 440 zone could come in 1 year horizon and less than that period. So both the RVNL and Welspun Sol our positive momentum could be. From GNP perspective, not much negative, but yes, slightly positive on that counter also.
Okay, well, that's the view for these three stocks which are buzzing on the back of order wins. But now moving to a NDTV Profit exclusive, Swiss headquartered ABB expects India to become its third largest market for its electrification division, said a senior executive from the engineering firm in a conversation with my colleague Neeraj Shah. Let's hear the management as they share their expansion plans and more.
Yeah, I think that the energy transition and the electrification of everything is the one that is growing the most. Everybody's talking about that in this space, and this is all connected also with the 2070 that also India was doing as a promise to reach the net zero and the net zero emission. And this is the energy transition is something that, in particular, in India, is very, very active in this moment. For example, India was setting a target to reach 500 gigawatt of power generated from renewable, in particular solar energy. And at the end of 2024, they were about 200 megawatts. So they need to build up another 550 gigawatt of power every year in order to reach this immense power generation. Just to give you an idea, 300 gigawatt power they need to build up in the next 5 years is like to build up 300 nuclear reactors. So it's an immense part of energy that they need to become sustainable in the near future. And this also is connected on the growth. All the world, including India, need more power with lower emission. And this is needed also for the data center, that with the artificial intelligence need more power, and there is a lot of data centers that are building up all over the world, but also in India.
Yeah. So okay, and I'll come to this whole energy transition piece within India too, but I would love to understand this ever since this whole DeepSeek R1 launch that happened, analysts tempered their forecasts, then said that, oh no, there might be wider acceptability and therefore there might be more need for models which might be cheaply built but might require large sums of power as well. How have you looked at the transition in the last 12 months for AI and other large language models, and what could it mean for data centers / power requirements?
Yeah, I think that, for example, DeepSeek, it was just, the news of DeepSeek came a few weeks back, basically at the end of the month. I think it's too early to say, it's too early to understand.
Okay.
It's too early to see what is going to be the evolution. Anyhow, even if it's going to be something that is going to use less power, so it's going to be cheaper, what somebody is looking for is that it's going to be used even faster, that it's going to be spread even faster. So at the end of the day, the sum of the electricity needed and the power needed, it will not change much. I think that one of the things that you saw also recently was 2 weeks ago, if I'm not wrong, where in US the new administration was launching, together with the CEO of SoftBank and the CEO of OpenAI, one of the biggest investments ever done in the history in the data center. We talk about $500 billion of investment for the next 5 years. So almost $100 billion of investment in AI, in data center that is going to build up in the next 5 years. Is an immense power that is needed. And there we need to try to build up this power, as we said, with lower emission, because otherwise we're gonna need to build up again fossil fuel power plant, and I don't think that is the case. So there will be a lot of new generation and of renewable energy that will come.
So where is the world on this path, and where is India on this path? You are in India currently. ABB does a lot of work in India across some of the segments that you're present in. How do you see India's place on the runway on the things that you just spoke about?
Yeah, I think that India for us is a big country. It is the third biggest country where we are people. We have almost 11,000 people, 25 factories. So we are present here since 75 years in this country. And also here the data centers start to grow in a significant way, in particular in the last 18 months. the growth before it was mainly in US. I'm going to give you a number for the numbers of data center, small and big, that are installed around the world. We are talking about that in 2024, we have had around 12,000 data centers installed around the world. Almost 50% of them, so almost 5,800 that were installed in US. In India, there were in 2024 around 170 data centers. So the potential to grow, if you think about, is immense. And you know, every country, and also India, they want to have that the data need to stay in India. And so there will be data center needed for cloud application, but there will be needed also data center to train language model that is going to be developed in the country. Because India will make a lot of investment also in AI, as most of the countries in the world.
So Mr. Frizio, sorry, just a micro question, if you will. Ever since DeepSeek came in, and I understood when you say that it's too early to gauge the impact, if at all, right? But I'm still trying to understand from you, if I can, that ever since that came about, there's a lot of skepticism around the quantum of demand that was earlier envisaged for data centers. When I hear you say, you sound constructive on the quantum of data center outlook or build up that could happen. So you are effectively telling me that you believe that the earlier envisaged growth rates for data centers might actually stay true. They will not necessarily be scaled down.
I think that for all the signs that we saw in the market, for all the hyperscaler and all the collocators that are our customer, we do not see sign of decline. We can think that the data center business will continue to grow at double digit. We are following projects with our customer in these days, and I do not see that there will be some scale down so far.
No, but that because double digit runs from 10 to 99. I was wondering if it's higher double digits or lower double digits. You believe it'll be?
It's gonna be in the mid double digits. It's gonna be around. This is, you know, it's gonna be around between 10 and 20% for the next few years.
Got it. The other aspect is when you say that the targets that India has is equal to building 300 nuclear reactors. Did I hear you right? My question is
equivalent.
Yeah, equivalent. Yeah. So one is to have a high target, and the second is to have a realistic target. Do you reckon that this is ambitious, or is this realistic within the time frames that India is talking about?
I think that is feasible, frankly speaking. If I saw India 2 years back, they were installed, if I'm not wrong, around 110 gigawatt of power in solar business. At the end of last year, it was 200. So it need to, of course, it is a rush to arrive to 500, making 50 gigawatt of power for the next 5 years, but it's feasible and is going on. We saw countries that are doing that. For example, China is growing in a big space, in a big pace on also for the solar power plants.
Well, that's all the time that we had on this edition of Profit Trade. Stay tuned for India Market Close coming up next.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
Hello and welcome. You're watching India Market Close here on NDTV Profit, and it's a golden word that we've been wanting to say, but we haven't had that opportunity. Seems like we're seeing a bit of a recovery across indices and across broader as well as the Nifty 50 market. You're seeing 1.1% higher on the Nifty 50. We're at 22,300 levels. Will be interesting to see where to from here, and we'll have our experts answer some of those questions over the next hour and a half of trade. But the Bank Nifty more subdued, 0.5% higher, but gains across the board. Let's pull up the sectoral heat map before I look at the Nifty 50 heat map as well. There you go. Except for the VIX, which is down 2%, all positive across the board. You're seeing good traction in metals, 3.3% higher. Everything that's happening in steel as well as China, all of which look positive and board positive for metal at this point. The energy index is up 2.5%, but among some of the larger cap indices, the PSU banking index is up 2.3%, the Nifty IT index is up 2.25%, and the Nifty auto index also making a bit of a comeback, 2.2% higher. So that's largely the texture, but look at the number of indices gaining 2% and more. You have at least 13 to 14 sectoral as well as small cap and mid cap index included, all of which are gaining 2% or more, and therefore there's positive traction and wind across the board, which is good. Let's look at the advanced decline before I look at the Nifty 50 counters, which are gaining, and the heat map as well. Look at that. That's what's really positive about the market today. The advanced decline, the breadth has turned well and solidly in favor of the advances. And it's interesting on a day like this to get views, and we will get you all of those views and perspectives on what next, because that's going to hold the key, right? But yes, we've seen a bit of a turnaround. Sustainable or not is obviously a question which the rest of the week will answer. So that's the last part. Now, in terms of the heat map on the Nifty, very quickly, look at the breadth, extremely strong even on the Nifty 50. Look at some of those names which are gaining, both the Adani twins up 4% and 5% each. Power Grid is doing very well in trade, and M&M is doing 4%. And then you have some steel stocks. Tata Steel is one of those which is doing well. FMCG also doing decently well. But Neeraj, overall, it's a very solid breadth. And are we seeing a recovery? So let me take it across to you.
Thanks a lot. I mean, difficult to say. And in fact, you're right, Harsh. Because we've got the perfect experts to talk about that, I think we'll do that. But just want to mention this piece of news on the screen. There was a big newsroom debate today on Trent, wherein the store count that was updating on their site was 269, and our math suggested 240, or a lower number than 269 effectively. We've gotten a clarification from Trent, because in their update, they put out the number at 269. We've gotten the clarification that the current store count is 240. What the number of 269 included the closed stores as well, and hence Trent, which had run up 6% in trade intraday, has cooled off a little bit. So just wanted to mark that. Okay, now a quick conversation first with Shivangi Sarda. She's analyst equity derivatives and technicals at Motilal Oswal. And Shivangi, thanks so much for joining in. How are you viewing this uptick today? Is this looking like something that will last, and are you creating fresh longs here?
Thank you, Neeraj, for having me. So, yeah, of course, the movement that we've seen in the Nifty indices is spectacular. The comeback of the bulls has given us some sort of a breather, in such kind of a market scenario. But of course, there are positive factors. There has been a good base formation here. Now we are looking at some sort of consolidation here. Not much of a pain point from these levels. But then, yes, of course, we'll have to cross 23,450 levels. For it to sustain well. So we are looking at a couple of factors now. Put call ratio has improved, IVs have cooled off, and apart from that, we've seen a lot of call unwinding as well, which has led to this trigger. Now, a good part is that RSI is also turning positive for the Nifty index on the daily frame, which is showing some signs of recovery from these levels. So negation as well as the buying interest which is emerging, which will continue for the index towards 22,750 marks, and with a close support of 22,150 levels. But of course, as rightly Harsh said, that let the rest of the week unwind for it to sustain well.
Right. Okay. Shivangi, thanks. Harsh also joining in. Quickly, your view with regard to, just give us your picks for this afternoon.
Yes. So on my radar is first up is Indigo. This stock has consistently, remained resilient in such kind of a market scenario as well. And of course, when the markets have, given a breather to the selling, this is one stock which is, running first ahead. Now, it has come out of its consolidation zone on the weekly basis, and follow-up is quite strong over here. Comfortably holding above its 50 daily exponential moving averages as well. Now, this stock, we've seen that Indigo has been consistently working on expanding its network, also adding a lot of destinations, working relentlessly to enhance its performance as well. So overall, with a great market share of around about 65%, this stock and this company is poised towards growing. So this is a buy from my side with a target of around 4,900 levels with a support of 4,620 zones. Now, the second pick on my radar is from the steel pack, which is Tata Steel. We've seen that all the steel names are actually doing quite well, but Tata Steel has been one such stock which has been less volatile than compared to others. And from the last 7 weeks, we've seen supports are gradually shifting higher. Volumes from the last 2 days are quite remarkable. Long build-up also can be seen over here, which is confirming the price up move. A good risk reward at these levels because we've seen a steady move and the fresh leg of rally is just beginning. So 150 is the targets that we're looking at next for this one with a support of 140 levels.
Great. Well, Shivangi, great to have your opinion first up on the show, especially on a day like this. Let's hope is this last, but clearly going by your judgment and the stocks that you've given, there is a bit of a bullish bias right now, and really appreciate you joining in and giving us the thoughts. Thanks so much for joining in today. That's the view from Shivangi Sarda of Motilal Oswal. Now, get in a fundamental view as well. Nimesh Chandan, Chief Investment Officer, Bajaj Finserv Asset Management, with us in the studios. Nimesh, great day to have you today. Did you plan it? That the markets?
I wish. I would have chosen the same day if I could.
Yeah, but a bit of a relief for sure, right? I mean, per se. Now, what's the view? Because if I try and look at what's happened in the last 24 hours, there has been a tariff conversation, and then the US saying that, hey, there might be a compromise as well. So how do you view that, and could that be one factor why the Indian markets are also rejoicing what the US futures are doing?
So there are few things to actually take in context for that, and something I have written about a couple of weeks back, that who actually pays the tariff. Suppose India decides that we will increase 25% extra duties on all our imports, including oil or electronics. Next day onwards, is India rich that we start producing all the oil ourselves? So who pays? Ultimately, it's the US consumer or a US corporate who has supply chains or who has consumer products coming into US. They end up paying for the tariff till the time they actually have, say, competitive manufacturing going there. And I think increasing duties on agricultural products and all that, I don't know if they can really change the seasons to produce them again. So I think the tariffs are being used more as statecraft rather than economic policy. That get the people on the table and negotiate a certain deal. I think that's what's been happening. The second, I don't know, probably it's just my opinion, that when you see Trump's conversation with various leaders in the world, I think India had the best conversation. So the kind of deals that we are looking for with them, I thought that Indian markets should actually be happy about it. Although markets don't like uncertainty, and that's what is creating this kind of a volatility in the markets. But valuations have definitely come to very attractive zones, especially for large caps. And there are good picks to be, quality companies to be picked up at this level. That's what my opinion is.
Okay, so where are these opportunities? Start giving us some views with regard to sectors or pockets where you're finding this opportunity, because you seem to suggest that opportunity is rampant, especially in the large cap space.
Absolutely. So a few days back, I was answering people that what's wrong with the market. Today, I'm answering what's right with the market, actually. So see, next year, let's look at the broad setup. The GDP growth of next year, FY26, will be better than FY25 because we lost that first half in terms of growth rate. The next year Nifty earnings growth will also be better than the growth rate of this year. At least that's what the estimates are saying. Even with some downward revision, we will see better growth. Valuation in many sectors have come down to, say, 5-year low, 10-year low, or much below their average levels. So there are opportunities to look at. Now, as a category, large cap looks most attractive. The risk rewards are best there because large caps didn't go up much. And they corrected almost equally. I mean, there is a small difference, but that's not really justified. The moves were very different in the small caps and mid caps. So the correction, there has to be more probably difference there. So large caps are more attractive. But doesn't mean that mid caps and small caps are not attractive. go by the business. There are quality business in these two categories. Now where the valuations have come down and that becomes something to choose from. So overall general observation, large caps have better fishing opportunities. Style-wise, quality has better fishing opportunity. There are a lot of good companies at good ROCs, good dividend yields, good cash flows available now at a much better valuation. So that's another. Quality is a style which we want to focus on here. In terms of sectors or themes, I would say healthcare and consumption look very attractive. Financials is kind of bottoming out. I think next year we'll see better growth in financials with better deposit growth and better credit growth. So these are the broad things. Then obviously there are some pockets in PSUs which are attractive. There are some now defense companies which have come to attractive levels. So those kinds of business by business on a more bottom up basis you can pick up. But I think for stock pickers this is a good market.
Okay. So it's an interesting mix because you're choosing, well, let's say for example, where you find favor, because it's bottom up, you said, right? That there are opportunities in the leaders of the last bull market, and there are then some themes that you're saying which were not quite there in the last bull market, right? So let me try and pick and choose. Consumption, let's say. Budget plus maybe the 8th pay commission, all of that. Is it the discretionary part that you like? Is it the non-discretionary part or staples that you like more?
Both.
You like both?
Both, because India as a consumption market still is at a nascent stage. We are crossing $2,500 of per capita income. We are yet to see a inflection point coming in consumption. And look at the fiscal policy and the monetary policy stance now. Fiscal policy, the budget, actually gave a lot of boost to consumption. Next year we'll see the impact of that.
Right.
There is a 8th pay commission which is expected from January 2026, where you see a revision in pay scales of government employees, and then that impact will come. RBI has changed the stance in monetary policy. Now we saw interest rate cut, we saw liquidity measures being taken. Yes, there are some issues of external volatility because of on currency and so on, which is probably still holding them back a little bit. But I think as an economy, we are now seeing fiscal policy and monetary policy and the changes more favorable towards consumption. And this basket typically has a lot of companies which have strong moats. They have good businesses, good cash flows, good returns. Even if you do some dividend discounting model of many of them, you will find them at an attractive valuation today and with a very long runway for growth. So consumption is definitely an attractive area for a long-term investor.
In discretionary though, what? I mean, a lot of people are betting on, let's say, for example, consumer durables in a meaningful way as opposed to autos. I'm trying to understand what within discretionary.
So, see, each segment within consumption will have its cycles.
Okay.
Some will be more rural driven, some will be more urban driven, some will be, say, more early players in a discretionary pickup, and some will be late pickup in a discretionary. There is one or two segments, say for example, real estate and building materials, which are connected with each other, where there are some good branded companies available at good valuations now. So those can be attractive pockets to look at. Auto, we would still segment it between two-wheelers, four-wheelers, CVs and everything, but selectively we are bullish on somewhere around electric vehicles or utility vehicles, SUVs, we are bullish on those areas. Again, depending on which valuation also that they are going with. If you look at the entire basket of, say, consumer services like QSRs, again, positive developments coming there, food delivery, those have now come to attractive levels to really start fishing for ideas here. So, I mean, I can keep going on. You should stop me, I think.
No, we love listening to you, don't worry.
Yeah, you've always been bullish on consumption. So, what I'd really want to understand is you have definitely got a growth problem of sorts, at least visibly, within the consumption basket. And does that concern you at all? Should that concern an investor? Because multiples are elevated and growth hasn't really kicked in a strong fashion. Of course, Trent, etc. are outliers, but in the space as a whole, barely clocking a double-digit growth rate.
So if I'm looking at the short term, say less than 1 year, then even I would look to time my entry into a particular sub-segment of consumption at a certain company, at a certain valuation all the time. But when I'm looking at long term, say 5 years or 10 years of opportunity within the consumption space, at least I get a huge set of universe of companies with good businesses and good management to choose from. Now, the thing about valuation is, you get the best valuation when people doubt the previous two.
Exactly.
Correct.
Right? When they doubt the business growth, when they doubt the management, you get best valuations.
Correct.
So that is where contrarian investing or picking up companies on a contrarian view becomes better.
Fair
So I think over the space from daily groceries till real estate, there are opportunities. Now, within this, sub-segments may have a cycle to choose from. Some companies will be available cheaper today, even though the business is going through a small trough. And I think if next year, there are these 2-3 visible triggers for consumption. As I said, the budget's tax spending, interest rates coming down, and pay commissions. I think with the visible triggers, I think there's enough to pick up today.
And what about financials? Seems to be the consensus buy on the street. Even you seem to be suggesting growth will come back likely, and valuations also aren't too expensive. So you will have likely a twin rating. One is you will see earnings growth and you will see a valuation re-rating as well. Likely. What's holding it back for so long, and what's really keeping it so subdued?
I think liquidity. It was mainly deposit growth for banks, liquidity being a little tight in the market. And see, when the way the currency is going, obviously the RBI had to act in a way that there was some liquidity suck out from there. But now things are getting stabilized, giving an opportunity to, say, ease liquidity back into the system. And I think in the last 2 months, RBI has announced many steps to help liquidity in the system, and they are still inclined to do more. So if, say, for next year, we start seeing better deposit growth and better credit growth. See, sometimes we miss that credit growth itself creates deposit growth. Both being down last year, and then because of elections and government spending being a little delayed, led to some kind of a liquidity crunch. By next year, we're not going to have again elections. So things are going to get improved from there, and the government looking to front end many of these expenditures. So I think things will stabilize there. Valuations again are attractive for many of the, say, private banks or so, are available at like 5-year lows maybe. And so you can select a good bank or a good finance company which has been kind of an underperformer. Either it's gone a time correction or a price correction over the last 5 years, say pre-COVID from now, so 6 years maybe. And still you can see a good runway of growth, good valuations with improvement in financial conditions next year.
Got it. Okay. So Nimesh, and then would I mean, and we can go on because we haven't asked you about IT, we haven't asked you about metals, safeguards, etc. But the one question that I have, and maybe we have management in case you want to ask them a question, but one question that I have is that, let's say until last month or last week or last 2 weeks, what have you, were you sitting on a large portion of cash in your AMC? And are you actively deploying that right now, or have you been actively deploying it in the last couple of weeks? Would love to know that demarcation, if you can.
We don't take cash calls actually.
So you are fully invested.
We are fully invested. We choose our investments better.
Okay.
See, now because we are conscious about valuations or so actually in the last 6 months or so, naturally by taking some profits where valuations are high, we have automatically reduced our small cap, mid cap exposures since the last 6 months. So we've been reducing. Now, it is a time to again reevaluate that, okay, now the prices have corrected in many of the cases by 30-40%. Is it still expensive? Now it's come into our zone, and that's where we evaluate. I will also clarify that we don't really look at market cap and then decide whether to buy or sell. Any good idea with a good business at a good valuation comes, we look at them. But unfortunately, because the market gets depressed and excited about small caps altogether, right? We have to act in a certain way to be conscious of what the market is doing. Otherwise, it's ultimately a good business and a good management bought at the right valuation creates wealth.
Okay. Well, we do want to ask you about order flows, right? Because they were drying up. And but Nimesh, in case you have the time, because we've got one company right now which got a very interesting order from Himachal Pradesh Electricity Body, and they have sounded very confident about their order book and the order inflow ahead. So should we have 5 minutes, please stay on, because I would love to for you to hear this conversation as well. Mr. Mrityunjay Pratap Singh, Director of Operations at RVNL Johnson, on bagging that 729 crore order and the commentary that they have given about the current order book, which is at 97,000 crores, versus the expected order book of 1.5 lakh crores. Mr. Singh, good having you. Thanks for joining in. Give us a sense of your of this order. I mean, 729 is not a very large number, but it's a decent sized order. Give us a few details about this order.
Thank you very much, Mr. Neeraj. Sir, Harsh is also there?
Yes, please.
Yeah. We have received an order from Himachal State Electricity Board regarding the revamped distribution support system, basically, which is for improvisation of the distribution system of the electricity, which will reduce the losses significantly, and it will give a reliable power to the all areas of the state, which will ultimately beneficial for the customers. So this is an order which we have received yesterday only, which is of roughly 730 crores to be executed in next 2 years' time. And I would inform you that earlier also in Himachal, we are executing the similar two projects. So with this project, our order book from RDSS sector in Himachal will be around roughly 1980 crore or so, roughly 2000 crores order book from this sector. And this is an important segment for us as far as growth is concerned, because it is a government of India's priority business sector, and we have one order in the similar sector in Madhya Pradesh and Gujarat also, taking our total order book for RDSS related project to roughly 3,800 crores. And we are quite upbeat that our current order book, which is roughly around 98,000 crore, so we'll be able to take in March to 1 lakh crore, and in coming financial year, that is financial year 25-26, we hope to take it to 1,50,000 crore.
Right, sir. So, when I'm looking at the big picture, when I'm looking at the last 3 or 4 years in terms of performance, your top line has roughly been in the 19 to 21,000 crore range. And your margins have largely been in around 6%. What's the case now that starts to go up, because you're sitting on such a large order book? How does execution go? And therefore, maybe over the next year and 3 years, both those timelines, if you can give us visibility on growth as well as on margins, how do they go?
Very true. Securing projects in another aspect, but execution is a different ball game. And with our strength in execution in past, we hope to continue this momentum in future also, and we hope to increase our top line gradually by taking it to 25,000 crore in next 2 years, and up to 30,000 crores in coming next 3 years to 4 years time. And along with that top line, we hope to increase our margins also by deploying a number of initiatives like better value engineering in many sectors, deployment of high-end technologies and latest practices in management as well as project execution. So we hope to improve our bottom line also significantly, which is roughly in the range of 5 to 6%, and we hope to improve it further.
Mr. Singh, I just have one more question. The order book, or the order inflow rather. Now I see that you said that the current order book is 97,000 crores. In FY26, you expect an order book of 1.5 lakh crores. I would presume this would be after you've executed your FY26 top lines as well. So where is the order inflow coming from? And would this be back-ended, or are you already seeing orders coming in thick and fast, conversations, that is?
Yeah, exactly. Basically, it has got two segments. We hope to secure some of orders where we already bidded in many sectors, be it in railway sector, road sector, and many other sectors. And simultaneously, we identified a number of projects, large value projects. It is in the irrigation sector, nuclear power sector, as well as road sector, and some projects abroad also, which we are having very much hopeful to we get the orders from these. So that will take our order book to roughly 1,50,000 crores in coming financial year.
Are order inflow conversations encouraging, or they are still at the beginning stage? I just want to get that sense.
No, they are very encouraging. In fact, orders not only from our country, but we are quite upbeat on our project in, we are actively pursuing projects in Peru also, a railway project, metro projects and railway projects in Turkey, and some of the railway projects in GCC countries also. So, where the order value is significantly higher. So we are quite hopeful that we will be able to achieve our target of total business of around 1,50,000 crore in current financial year, next financial year, sir.
Right, so maybe a question with regard to capital allocation. You're clocking around 12 to 1,400 crore of profit after tax. Capex, not huge, but you've made your investments wherever you've had to. What next with regard to all of the funds that are coming in? What's the plan?
Yeah, actually, the funds, the balance plan, we hope to deploy in some of the projects like SPV projects. We are already having some SPVs. They were in railway sector also. There were our old SPVs which are already operational. They are giving us revenue as a consolidated return. But in many other projects where the bids are, be it a road sector or irrigation sector, bids are coming in hybrid annuity model or BOT model, there significant capital deployment in form of equity infusion is required. So we hope to deploy our surplus funds there to have a revenue visibility for over the years.
Okay. Mr. Singh, congrats on this order. All the best for the quarters ahead. Thanks much for taking the time out.
Thank you very much. Thank you very much.
All right. Well, that's RVNL. And Nimesh, the idea of actually requesting you to stay back, I knew you wouldn't have a question for them, but we focused on that conversation around the order inflows and the mood around it, right? You probably heard a bit of this. You've probably spoken to a few others as well. Are you sensing that ordering activity is picking up, or is it still some time away?
So I think we'll have to split between public sector, government capex versus private capex. I think government capex will now pick up, or rather it's from December you are seeing signs of a pickup and closing of deals and order books that is happening. Private capex, I think once the capacity utilization in the industry starts moving up, then you see, on a more general basis that the private capex will come up, and that I expect maybe in a year to start happening. But in capex stocks, what we need to see is what is priced in versus what is being done, or what the numbers are falling currently. Because 2 years, when you have a capex driven rally and people are bullish on that segment, sometimes we've given them 2028, 2030 valuations today. So many of them, even though they execute the business as expected, may go through a time correction or a valuation correction for some time. Clearly, in the last few months, many of them have taken a dive. There are many interesting opportunities, especially in the power sector. That's what we find interesting, and power is one of our mega trends that we are focusing on. So we have to go again company by company, but for the capex companies, we need to really estimate the difference between our intrinsic value and what the market is expecting and pricing in, and then see whether anything has come up in terms of an attractive valuation.
Okay. And within power, you've given us a great cue, so I'll pounce on that. Gencos, would it be the financiers? Would it be transmission? Where is your interest lying? Or across the board, and then therefore, where does the value lie best?
So capital equipment and say mainly T&D side would be very interesting for us. See, every technology change is helping give a boost to the power sector actually, whether it is AI, machine learning, whether it is electric vehicles, data centers. So they are all power intensive, and frankly this space will see good times for a long time. And some of the MNCs in the space who are in the capital equipment have export opportunities also. So that's interesting. Again, I would come back to the point, we have to look at what is priced in. The journey is exciting, but what is already priced in versus what is available at a good valuation.
Okay. Available at a good valuation relative to future growth. Okay, but you outlined that T&D seems to be the first port of call for you.
Yep.
Okay. And that includes the whole ecosystem, I'm presuming. So transmission cable companies, it could be transformer companies, what have you, everything on the other side. Okay, selectively. But remember, he said, viewers, that it's a bottom-up story in a lot of cases right now, particularly at the broader end of the spectrum. Great. Okay, Nimesh, and thank you so much for taking the time out. Really appreciate your time.
Yeah, pleasure to be here. Thank you.
The pleasure was entirely ours. Okay, before we slip into the break, IRFC received the Navratna status from the Government of India during an exclusive conversation with the CEO of the company. My colleague, Sessa, questioned him about the expansion plans within the railway ecosystem. Listen in.
We are diversifying in the railway ecosystem with having backward and forward linkages. As you know, anything, as you mentioned, port, anything coming to port is coming to hinterland or to dry port through railways only. So anything which is going to augment the railway ecosystem, we are willing to fund them at a cheaper rate so that the whole gamut of logistics, having railway in the center, gets impetus and things are done in a fastest manner at a very cost-effective manner. That is the role that we want to play for the whole railway ecosystem.
Sir, in terms of your asset stability, asset quality stability, how confident are you to maintain that? Because now that you are diversifying, what is your take on maintaining the stability in asset quality?
So as I mentioned to you, we have got our own experience of the railway ecosystem, and we are targeting for next couple of years first all the projects which are coming to the railway. So if there is any agreement with the railways for any kind of proliferation, we know that those assets are already secure, and having a look in those manners only, we feel that funding to them will be a easy task in the manner that we will be able to maintain our zero NPA concept.
And sir, in terms of your margin profile, what are the targets that you have set for yourself for the next fiscal year?
So as you know, in the railways, we do the business at 35 bips and 40 bips margin only. So doing even 100 bips margin will be a 2.5 or 3x kind of margin that we'll get. Which is, for me, because I'm doing 40 bips margin, it's going to be a huge boost and impetus for my bottom line. And we expect that net interest margin for this company will be growing every quarter now, having more mix of this better yield projects apart from the railway projects.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Welcome back. You're watching India Market Close here on NDTV Profit. Now, of course, it's a positive day for markets, but it's also a great day to get perspective from dealing rooms. And Somit, as always, gives us that insight, all that's happening with regard to dealing rooms and the chatter there. Somit, what are you hearing? Is there now a turn with regard to the mood within dealing rooms? Is that what you're...
Well, yes, there are buy flows on both DI and FIDs. That is at least what the dealers are indicating. But the important thing to note here, and that's what the dealers are still awaiting and waiting to watch, is that whether this rally will sustain or not. And this could just be a dead cat bounce as well, given the fact that we have been down or consolidating for the last 10 trading sessions. At least the benchmark has been doing that. So that is one thing to watch out for. Yes, there have been strong buy flows in multiple counters, but three counters that stood out for me was Axis Bank, Cummins and JSW Energy. JSW Energy, I guess, is up around 5% in trade. But these three counters are seeing strong buy flows, especially from the FII desk. Apart from that, there is Dalmia Bharat, which is one counter that we need to watch out for. Large HNIs have been shorting or selling this counter is what I'm hearing from dealers. There's some negative corporate development expected when it comes to Dalmia Bharat. When it comes to IIFL Finance, yes, the stock is up 10% in trade, and what I understand and what I'm picking up from dealers is that a large FI, influential FI in fact, was a seller on this counter for the last couple of sessions, and that selling is now over. Hence, we are seeing this kind of an up move. Plus, there's overall flows in the market, which has also led to such kind of a move when it comes to IIFL Finance. Also, there have been a couple of block deals, around 7 lakh shares were traded on this counter. One of the perspectives that dealers are suggesting or giving in for IIFL Finance is the fact that the stock was trading at just 1 times price to book, and gold loan expansion is the key trigger for IIFL Finance that we need to watch out for from fourth quarter onwards. What's the management commentary coming in? So IIFL Finance, keep an eye out for that counter. Then Granules India. Morning we did that story when it comes to the warning letter which was made public by the US FDA. The stock was down around 3% in trade. But what I'm picking up from dealers is that large influential HNI plus multiple family offices have been buyers for Granules India at lower levels. So that is one stock to watch out for. The stock has moved up sharply. It's up around 1.5%. From days low, it's up around 5% in trade.
Okay. Well, Somit, I know you hear a lot. Tell us everything that you hear every single point of time. You know, it's very interesting because I think some of the things that we've spoken about from a brokerage note coming out to what dealing rooms are saying has turned out to be correct. So great to get this information, Sumit.
Thank you.
Thank you. Well, that's the Heard on the Street segment. Now, let's get in our experts on the show to try and understand whether they believe this is a dead cat bounce or whether this will last. And Kush Bora joins in with his thoughts on the technicals. Kush, good having you. Thanks for joining in. Are you going long, Kush, at these levels, or are you now waiting for a dip?
Hi, Neeraj. First of all, good afternoon. Well, yes, I am going long on these levels. In fact, if the markets were to sink a little lower as well, the bottom range that I have for this kind of a drop is 21,500. So if I were to see any kind of a dip closer to that level, actually I might just double down on my long positions. I'm usually not the one to average my long positions, but that's the kind of setup we are in. So I think that this rally perhaps might have some more room on the upside. The first hurdle actually comes close to the 2,500 mark. Once that is taken out, perhaps at 22,800 as well. So we've seen this this recovery or this rebound after a very long time. The data suggests that perhaps there could be near-term pressure around the 22,500 mark. But once that is taken out, you could see slightly higher levels as well. So yes, if you want to go long with 22,000 as your stop loss, not a bad idea to play for another 500-700 points of the upside on it.
So Kush, your picks in this market?
As was the case yesterday, and today also I'm going with both my positions or both the trades on the long side. First is Narayana Hrudayalaya, and we've discussed this stock multiple times in the last couple of sessions. It's shown great strength. It's shown some volatility, but nevertheless, the move has been in the right direction. The volumes have spiked up over the last couple of days. So Narayana Hrudayalaya continues as a buy call for targets 1620 and 1670 with a stop loss around the 1620 mark. The second one is Shobha Colorant. This stock too is consolidating with a positive bias. So if you put all of that, in context of what the markets have done, this is firmly trading above its 20th 50-day moving averages. The volumes have also picked up off late. So I think from a near-term perspective, you're looking at targets of 585, 600 with a stop loss around the 555 mark.
Okay. Kush, I wonder what your views with regard to the Bank Nifty are, because today as a relatively, I can't say slightly, but a relatively subdued move on that count.
So Harsh, markets are a funny place where if you give enough time frame, or if you give enough perspective, things start to appear very different. What do I mean by that? For the past 5 years, Bank Nifty amongst the top major sectoral indices has actually been a bit of an underperformer, and that's a bit of a euphemism. Right now, that's the reason you're seeing whatever we can call it right now as a bit of a relative strength, in Bank Nifty right now. While yes, if you look at it from a 1 month or a 5 month perspective or a 6 month perspective, it does look like an outperformer. But as I said, when you put it in context, it's not really moved as much to fall, as much as Nifty has in the first place. Now coming to a very near term perspective, there is a triple bottom formation near the 47,800 mark. Even yesterday and day before, if you see the low that the Bank Nifty has made, is very close to that. Now, if I were to go long on the Bank Nifty, that would be my stop loss. And on the upside, I am looking at levels of 49,900, and once that is taken out, 49,600 as the target. So yes, whatever may be the reason, right now the Bank Nifty is showing a bit of an outperformance. Not maybe today, but generally over the last month or so. So with that perspective in mind, with a very firm stop loss near the 47,800 mark, Bank Nifty can also be considered for a long trade for targets of 49,600.
Okay. Now, one of the stocks which is really flying in trade today is Coforge. And in fact, it's aiding the entire of the IT index. Of course, outside of the fact that it's anyway a good day for markets. But Coforge, look at that. Look at some of those numbers. 4% higher on Tech Mahindra, nearly 5% on Persistent. But Coforge standing out within that nifty IT index. Partnership with Cybercorp is what's keeping it in the news. Packed as the largest ever deal, $1.6 billion worth. And Puneet joins us to tell us more about this as well as the take from brokerages. Puneet, take it away.
Well, definitely. They've signed a new 13-year deal with Sabre Corporation of roughly about $1.56 billion. Now, that's one of the biggest deals that they have done comparatively in the past as well. So there are two brokerages which have a positive view to maintaining the sale rating. Let's start with Morgan Stanley first. An overweight rating, 11,500 is the target, which was a 59% upside from the previous close. They essentially said that, of course, this is the largest deal that they've signed, and estimating an $80 to $120 million incremental revenue coming in FY26. They're estimating a 5 to 8% growth going forward into FY27 as well. And they mentioned that the management had flagged that some deals that the company is pursuing is disproportionately larger than they have in the past. So it's definitely a big positive going forward as well. They mentioned that it could pose an upside risk to their numbers and estimates for FY26. So watch out for this one. Jefferies again hiked the target price to 10,350 from 10,100 earlier. It mentioned that the deal will also improve its positioning in the travel space as well as open doors to more such large deals in the future. And they say that it can reflect its ability to gain share irrespective of the demand environment. That was one of the key points. The Macquarie note is they have maintained the underperform rating. Target price is 5,220, and they mentioned that while this is an existing customer and may not take incremental revenue in FY26 based on whatever the estimate was, it's still a large deal, but they're maintaining the negative stance on the stock. And Axis Capital as well maintaining a sell rating, target price of 7,900, and they mentioned that valuation is the only concern, but it's a big positive on this deal aspect. So the commonality across brokerages has been that this is a good transaction, good deal to win, and going forward, it'll be key on the comments in terms of the demand environment going into Q4 as well.
Thanks so much for that, Puneet, for all of that perspective on the fundamental side of things. How's it looking from a technical perspective? Coforge, Kush in particular, and also give us some perspective on the IT space as a whole. Are there any other stocks that are on your radar?
Let me start with an overall perspective on the IT space. I mean, if you look at the IT index itself, right, badly beaten down, hit the oversold territories of 20 on RSI, and what you're seeing is that rebound from those levels. So that's where you are on the IT index, which suggests the kind of shape that the entire the sector is in. I'm not too convinced that the worst is over for the IT sector, especially if you look at the moves on something like a TCS or an Infosys. They've been beaten down quite a bit, and what you're seeing on these names is what I would clearly categorize as a dead cat bounce. The volumes have picked up over the last couple of days on the buy side, but that could just be just as I said, even these stocks had gone to oversold territories and rebounding from there. Now, as I said, not too convinced on the IT pack, but I don't want to paint everything with the same brush. So what do I like? I like a persistence in this space. I like FSL in this space. These stocks have not really broken below some of their key technical levels. In fact, something like an FSL has actually been consolidating within a broad-ish band. So I like these two names. Now, as far as Coforge goes, if you pull up the data for the last 3.5 months for Coforge, late December onwards, you'll very clearly see that the prices are actually moving in a downward sloping channel. And guess where the resistance comes, on that 8,000. The high for the day that the stock has made is 8,006. So that's where we are at, high point of the day, nearer the resistance mark, and we are already seeing some profit booking on it. So for me, as long as this 8,000 mark is not conquered convincingly, I wouldn't go long afresh on a Coforge. I would take this bounce as an opportunity to book profit and maybe lighten my.
Okay. Okay, so that's the perspective on IT. Of course, the Nifty IT index up 2% plus, so doing well for itself in trade today. But there are some stocks making headlines on the back of order wins. We spoke to RVNL, we spoke with the management, took perspective from them. But here are some of the others. Anushi is here with the list.
Harsh, so firstly, there's something like Welspun Specialty Solutions, which is in focus, and this is after the company has emerged as the lowest bidder by Bharat Heavy Electricals for a series of supercritical thermal power projects, and this is with a contract value of 232 crore that we are seeing. This pertains to supply of 4,050 tons of stainless steel seamless boiler tubes, and if you look at the order book of the company, that stood at about 422 crore. This was as of the end of Q3 figure that we are looking at. So Welspun Specialty Solutions buzzing on that order win, while we also have something like a GE Vernova T&D, which is in focus after it has received 3 orders worth rupees 500 crores from Power Grid Corporation, and this is regarding the supply and installation of transformers and reactors with the timeline for this order execution in the next 3 years. Order backlog of the company stands at about 10,780 crore, and this is as of the December 24 figure that we are looking at. So these are the 2 stocks which are in focus on the back of order wins.
Yeah. Thanks so much for that, Anushi. You know, one stock in focus, frankly, since quite a few days, question has been on our radar is BEL. It's been a rank outperformer this week, and it's not been an easy week by any stretch, frankly. Just give us your views with regard to this one, and you know, what are the levels you look out for on something like a BEL, a Nifty 50 counter. It's done fairly well for itself.
So Harsh, something like BEL is a buy. You know, it's actually, as you rightly said, it's been a rank outperformer this week. But if you put things in context in terms of what the entire defense pack has done, you know, we've spoken time and again how this stock stands out, right? It was consolidating in a broad band of 270 on the downside to about 300, 310 on the upside. It's briefly broken below that band, and that is only with what the markets have been doing, only in line with market. So you could give it that path. Now the strength of the stock is witnessed, or when very clearly evident when you see it rebounding faster than its peers, and much faster than what the markets are doing. So BEL for me has been a very clear buy for some time, continues to remain so. If you're looking at more of a positional build than the recent low that the stock had made, close to the 245 mark, that should be your stop loss. On the way up, don't be surprised to see the stock clock 295 and then a 315 as well. Momentum could be missing because the entire pack is not doing too well for itself. But other than that, if you've got a positional view 6 months and beyond, then yes, BEL should be considered as a buying candidate in portfolios.
Okay, thanks for that perspective, Kosh. Stay on because we have with us Mr. David Morrison, who's a senior market analyst, talk to us about everything that's happening in the global context and give us perspective on how should one look at India. Great having you, David. Good afternoon. In fact, good morning. But tell us, give us some perspective on what you make of everything that's happening with regard to global tariffs and how you're looking at the Chinese macro as well as commentary which has come out today. Just the global situation, how do you view it?
We are a bit on a knife edge at the moment. We've only got to look at yesterday's reaction in global stock markets, but those led by the US in particular, to the fact that the 25% tariffs went through on Canada and Mexico. They weren't watered down. They weren't postponed again. They're now in place. There's now a 20% tariff on Chinese exports to the US. And of course, we've also had retaliation from China. And we are also we're getting some pushback as well from Canada, and we are expecting retaliation from Mexico as well. Now, we heard Howard Lutnick, the Commerce Secretary from the US, say that he expects some kind of rapprochement possibly today from Canada and Mexico. And I think that's why we're seeing a bit of a steadying in US markets. Certainly, if we look at the US stock index futures trading this morning and overnight, they have bounced off their lows and they are steadier. But if we don't get any kind of watering down of the tariffs that came in yesterday, then I think that markets are quite likely to sell off again. And of course, the situation you asked about China, it's a very interesting one because it's quite evident from a lot of economic measures, and it's no use sort of just thinking about Chinese GDP coming out at 5% month after month on an annualized basis every single month. There are other measures which mean we should be concerned about the state of the Chinese economy. And one of those, of course, is the demand for energy products, which is down. So there are concerns there. There are long-term concerns on demographics. There are immediate concerns on the effect of the property meltdown that is still overhanging the whole Chinese economy and has really dampened confidence And these are things that are sort of ongoing now. So that's where we sit this morning, going into the main trading session and looking forward to the US Open.
And David, want your perspective. A lot of analysts are talking about how President Trump is largely using tariffs as a tool to get heads of states to the negotiating table and thereafter put across his views and points and negotiate. Is your view also the same? And at the end of all of this, let's say we zoom out a couple of years from now, do you believe largely we'll be at status quo? It'll just be a couple of geographies impacted, but outside of that?
That's a very difficult one to answer. I personally find it very difficult to think in sort of the long-term view over this, and not just President Trump's motivations necessarily, but how he intends to get to where he wants to go. I think, yes, I totally agree that tariffs are a negotiating tool. President Trump is using them not just a threat, but the follow through to try and negotiate to get the specific things that he wants from his partners in the North and the South, but also, possibly Europe as well. I mean, there's without doubt he has mentioned 25% tariffs on the European Union. So this is all ongoing. We'll see how it does play out. President Trump will certainly want something concrete that he can show and say, look, this is what I've done, this is what I've achieved through these tariffs, threats or otherwise. But it is, I think we are very much in a time of flux. His first few days or his first month or so of a presidency has really blown things apart to a surprising extent. I think most of us have been caught on the hop by a lot of this. And I guess we are hoping that through this as a negotiating tactic, we may all be in a better place in a year or two's time. And just bear in mind that just yesterday, when President Trump spoke to Congress, he said that he expects some disruption from tariffs, some minor disruptions as far as the US is concerned. He's prepared for that, and he's quite and expecting it, and so he's not particularly worried about it either.
David, the other question is, if indeed this is business being done at a geopolitical level, wherein you do announce tariffs and then say, okay, we can compromise a bit as well, be that as it may that it's happening only because of some FTAs between the Northern American region. But if that is the template that gets set, would risk assets be happy? Because then the worst dream is not coming true. I mean, the word compromise, literally the word compromise, got the US futures excited after a very bad day at the Dow. So is that actually a good outcome, if you will?
Well, no. I think the longer that this drags on for, the longer that the uncertainty surrounds tariffs, how much are they going to be on what? I mean, the whole mechanism of imposing tariffs on your neighbors, and especially when you consider sort of the auto industry in the States and sort of the parts that go backwards and forwards between the US, Canada, Mexico, implementing these tariffs is going to be very difficult. There is no doubt that the market is very concerned about possible inflationary effects of tariffs, and we are seeing bond markets react accordingly. We've seen a big drop off in bond yields. The US Treasury has, the 10-year has fallen quite dramatically over the past week or so. Now, that seems to be pricing in concerns about a slowdown in US growth going forward. And in fact, the Atlanta Fed has got a GDP now tracker, which is suggesting that growth could be falling very, very sharply. So that's going to weigh on the market. And I think for as long as the tariff threats continue, that will be it'll be very difficult for US equities to regain that rally. Now, they could snap back very, very quickly. We are at oversold levels currently. And there is a real hope that there'll be some kind of breakthrough on tariffs as soon as today. But if the market doesn't get that, then I do think that there's a danger that we get further weakness over the weeks and months.
Okay, David, we'll leave it at that. Thanks much for taking the time out and have a good day ahead.
Thank you. You too.
Thank you. By the way, Speaking of optimism, Amish Shah of BOFA, who had come couple of weeks back, maybe 15-20 days back, and was negative on the markets, after this corrective move, has turned constructive. Right? He's seeing returns, potential returns for our markets, which is to the tune of 14% for the Nifty. They believe that index target is 25,000 by December 2025. And of course, they believe that very few stocks will essentially drive the Nifty returns. They are not as constructive on the mid caps as yet, but it's interesting to see. Okay, slip into a break, back with more soon.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
welcome back. You're watching India Market Close here on NDTV Profit. With us joining Kush on the guest list today is Dharmesh Kant, Head Equity Research at Chola Securities. Give us perspective on what's happening. Dharmesh, the market seems to be in a bit of a recovery mode at this point. Talk us through what you believe now. Is this going to be a larger recovery? Are you buying at this point? Have you already bought? Do you believe the bottom is made?
Yeah, good afternoon, Harsh. Good afternoon, Kush, and to all of you.
Good afternoon.
See, the market was long due for a bounce back kind of a move, and that is what we are seeing in the market. And after Mr. Trump has announced the tariffs, I mean, the upper side of the tariff limit has already been freezed. So now there is no fear that what will be the rate of the tariff. Will it be 30, 40, 60? So that is done away with. Now you know the downside if the same rate of tariff is implemented. And from here on, only it can be a better things where the bilateral negotiations can bring the tariff down. So that is on the international count. As far as India is concerned, most of the stocks and index averages were trading below the mean multiple on the valuation metrics. Though I do feel that before a meaningful startup to the next leg of the bull rally commences, it's a distance away, 2 to 3 months it's away. Only when Q1 numbers can be guessed to a larger extent of a better probability. That is will happen only after the Q4 numbers and hearing to the management commentary and the likely monsoon environment. That is a time when the call can be taken whether this is just a pullback or a recovery or we are in for a sustainable longer term trajectory. As of now, valuation wise, it does look attractive. We have been dabbling into a few investment ideas from 23,500 levels, from where there we have seen a downside. The significant downside has come in stocks as well, but still we are recommending our clients to stay put, and new ideas, stock ideas or new money can be deployed at current levels, but have a horizon of at least for 2 years, not even 1 year or so. And the sectors which are looking good is, one is the public sector banking space. That is looking better. Defense space is looking much better. The numbers were good, but still the stock got a havering. And the third space where we are finding some value picking is again the railway space, which is debatable. Stock prices have seen correction, but we are finding good value out there. And fourthly is the metal space where you have to be stock specific and selective. It will have its own gyrations, but it's a good value buying at current levels. Other than that, most of the sectors, though IT today is seeing a good bounce back, but we are avoiding them.
Very interesting. Okay. Dharmesh, we'll quiz you more about some of those. But let me take a quick technical view from Kush. Kush, Hitachi Energy is up 8%. Now, there are fundamental factors to it, but give us the view from the technical side.
Makes for a good buy, not only because of the kind of moves that it's made today, and some might be a little skeptical regarding buying after an 8% up move, but you have to put it in context. The stock's actually down from what about 17,000 odd levels. So there is a bit of room on the upside still left. Good base formation, volumes also picking up. And today there was a convergence around the 12,500 mark of the 50 and the 20-day moving average. That's been taken out. So for a fresh buy, that resistance zone will now act as a support, and that will be my stop loss. 12,500 thereabouts will be your stop loss. On the upside, you're looking at 14,000, and once that is taken out, perhaps even a 15,000 kind of a mark is in play. So yes, the stock's actually shown good strength over the last couple of days, and the expected breakout has come about.
Just as that gets spoken of, and just as Dharmesh spoke about metals, the metal index is now up 4% for the day. But let's talk about Lupin, because there's been a double upgrade by Citi. Target price now 2,260. Stock is up 3%, likely on the back of that, as well as on the back of the way in which markets have behaved today. Varsha joins us with a perspective as to why the double upgrade. Varsha.
Yes, thank you for that. So as you rightly said, so this double upgrade reflects confidence
in Lupin's growth prospects. Now what they're saying this upgrade is driven by expectations of strong US launch momentum and continued traction in non-US markets as well. They foresee, so basically Citi foresee sustained margin expansion, estimating 150 to 200 basis points improvement over FY25 to 27, and this is attributed to loss reductions in agencies like diagnostics and the CDMO segment that they have, and also the successful launch of complex generics and continued growth in non-US markets are some of the reasons why Citi feels that there may be a margin expansion. And they estimated that 350 to 400 basis points of margin expansion in FY25 was due to non-recurring items. Talking about the US market potential, so Lupin's US sales are expected to remain strong, fueled by Gyra Q, which is a product used to slow kidney function decline, which could exceed revenue estimates. Complex injectables, biosimilars and other launches are projected to drive US sale above $1 billion by FY27. This is what Lupin's management has also an aspiration to take this US revenue to $1 billion plus. On the global performance outside the US, two products will actually drive growth in Europe, and Lupin is also outperforming the IPM, that is India pharmaceutical market as well. On the tariff impact analysis, a 10% tariff imposition could impact Lupin's US business EBITDA by almost 4 to 6%. However, they anticipate potential price increase in the US generics market, mitigating the long-term impact as well.
Thanks for that, Varsha. Interestingly, it's not a bad day for some of the pharma names. Granules, which had not the best of news, also is up about 2.5%, but Lupin certainly up 3%. Kush Bora, on the charts, trade on any of the pharma names?
So, because right now it's that saying, right? Rising tide, lifting boats, and all that. So most of the moves that you're seeing in some of these names could actually be because of the entire market actually being in that recovery mode. I would be a little skeptical on something like a Lupin or something like a Granules as well. However, Granules and Lupin both have got a fairly decent base formation, but the resistance levels seem to be acting up right now. Lupin is exactly at the convergence of the 20 and the 200-day moving average, which is close to the 2020 mark. Past that, there's a resistance around the 2060 mark. So a little skeptical on this move. Maybe some more momentum on the upside and might convert into a trade. Rather than pharma, I would stick to my call on Narana Hrudayalaya within the healthcare space. So still favoring some of these select hospital names.
Well, some of them have done well. Like I said, even Granules has recovered a little bit of lost ground. So keep that in mind. On to more news and updates. UBS has upgraded Mahindra & Mahindra to a buy, even as they've cut the target. But the buy call has revved the stock, in addition to the fact that, of course, like what we are saying, that the rising tide is carrying all boats. Puneet Johnson with the details of that note. Puneet.
UBS has upgraded Mahindra & Mahindra to a buy rating with a target price of 3,300, which is a 26% upside from the previous levels, although they've lowered the target price from 3,430 earlier. Now, they mentioned that the 19% correction in the stock price makes it a very lucrative buy at this opportunity, and they see that the Tesla's plans in India has not, and any kind of concern on the stock price is overdone. They've also mentioned that the SUV segment is expected to see a high single-digit growth in FY26 as well, and they're expecting that while the industry volumes will be roughly about 2 to 3%, M&M will be outpacing that growth going forward as well. Apart from that, they mentioned that the recent EV bookings has been slightly underwhelming at 30,000 for the first day itself. That's roughly 6 months of sales in terms of the current capacity of 5,000 units per month for the electric vehicle capacity of Mahindra & Mahindra. And they see that it's still relatively strong in concern when you take the whole industry sales of about 98,000 for the previous fiscal year. Apart from that, in the calendar year as well of 2024, we saw roughly 98,000 to 1 lakh units sold. So in that aspect, the number is strong, but still, based on the benchmark, the Mahindra has said slightly underwhelming according to UBS. They mentioned that farm equipment business is also seeing a robust growth going forward. It's expected to be a 15% growth in Q4, and mentioned that it accounts for roughly 40% of the EBIT and 30% of the SOTP valuations of whole Mahindra currently. Why Tesla's entry is not a concern is a very big part of the report. It mentions that it could be limited to imports of the Model 3, which is currently priced, at $35,000, roughly around 30 to 35 lakh rupees. And it couldn't be suited in terms of, because it's a sedan, it might see some demand pressure going forward. Apart from that, valuations currently at 15 times 12-month forward EB by EBITDA is at a 17% discount to Maruti according to their current target prices. So watch out for this one as well. But overall, it's a big positive report, and a few more updates from Mahindra in the EV side will be something to watch out for.
Thanks for that, Puneet. Dharmesh, let me come to you, because I didn't hear you say that there is a preference for auto. Or, if I were to even extend that, no consumer either, as part of the list that you're finding interesting. Give us a thesis, if at all you find any of these pockets interesting, and what within those.
Yeah, sure. I mean, definitely, I don't find any of these pockets interesting. Mahindra and Mahindra is an outlier. Let me be very specific to that, because the numbers are quite good, and the likely launches which are to be in future will boost the numbers going forward, and farm sector is picking up. So apart from that, automobile as a space, be it two-wheelers or passenger vehicles or even MSCV or LCV, we don't see it growing by say 4 to 6%. The volume growth is what we're expecting for the year, and that is in line with what the industry estimate is also there. Our dealer checks at all the counters across the pan India, 4, 5 major cities we have been talking to. They are also saying the same thing. At the same time, the inventory built up has been quite high. So inventory clearance will be another challenge for most of these B2C dealers to have their stock clearances out there. So that is one reason. As far as FMCG is concerned, the volume growth is anemic. I mean, 2-3% kind of a volume growth, and blended realizations, they are unable to take any price hikes, and the grammage, reduction is already in place. There also, I mean, tepid growth has been expected, and the reason for none of the pure FMCG play why we are not liking is because of the local competition and the local brands which are entering into the new growth opportunities. So valuations are again very expensive. I mean, they are not cheap at all in spite of the price correction which has happened. So if the growth opportunity is not there, this market after this correction won't give you a better price traction. So you have to stick with the sectors and companies where the growth opportunity is very visible, and that is 15-60% kind of a growth opportunity which we don't see. So these are the key reasons why we are not liking this sector, auto and FMCG per se. EMS is one good area where price correction has happened quite a bit, and there the opportunities are still at large. I mean, Dixon and all can still be important.
Interesting. Kush, your views with regard to M&M in particular, because this one's had a tough one for investors who've probably gotten in at 3,000 odd. They've seen a sharp fall, and now you're seeing a bit of a bounce back. So give us perspective. What should an investor do at this point?
Well, no, stay invested. Stay invested in something like a Mahindra and Mahindra. The broad range that that I can point out, or maybe a strong support zone that I can point out for this one is 2650. Even in this fall, the stock went below that only for a couple of days and then has rebounded smartly from there on. So I think that support zone will start acting up. In fact, for me, this kind of a dip on something like a Mahindra and Mahindra is actually a buying opportunity. So if someone hasn't bought it yet, not a bad idea to maybe start accumulating at these levels. So if you, and as you said, if someone's gotten in around the 3,000 mark, continue to hold. The only thing that you would perhaps have to do now is wait a little longer, for the markets to stabilize and thereabout. But I don't think there's too much of a risk. Rather, the margin of safety with something like a Mahindra and Mahindra is much higher compared to a lot of other peers, in this space. So Mahindra and Mahindra is a very clear hold for someone who's got it. If not, you could look at adding at the current levels also.
And Kush, while we're at it, BTST, STBT.
Sure, it's a BTST today as well, like it was yesterday, and it's in Blue Star. The stock's been galloping over the last 5 sessions. Started moving higher even before the markets did from that 1850 strong base that the stock has made. So despite the kind of upmove it's seen over the last few days, I think there is more momentum on the upside left. So for targets of 2200, 2270, and a stop loss around the 2060 mark, Blue Star is something that can be considered as a BTST. or perhaps even for a week or maybe slightly longer.
Okay, talking about metals and justifiably so, because the index is up 4% odd. You've also got the tariff war cloud looming over globally, but more so India, as Trump announces new tariffs from the 12th of March. Tariffs on steel, aluminium imports from all US trade partners will be set at 25%. Mihika joins to tell us how this is going to impact Indian metal counters on a day when the Nifty metal is up 4%.
Well, the sentimental impact has come into the markets already, that's for sure. You have the Nifty metal, an intraday high of over 3% almost, and the index is up 5% this week. All constituents have gained 2 to 6% today. Top gainers include Hindustan Copper, Welspun Corp, Jindal Stainless, and Tata Steel. In terms of the key, it was because of the stimulus, announced during the meeting. Some of the things that are worth, mentioning is the focus on improving domestic demand, the aim for bringing stability for the housing sector, as well as a cut in steel output. Now, why China stimulus matters for metals? Well, China is one of the world's largest consumer of base metals. They are key influencer of global demand for metals, and Indian companies have struggled for several quarters now because of the weak pricing, because of low Chinese demand. So China's measures actually meeting success will aid overall global demand and then your prices globally, which does have a follow-through effect on India. And then you also have the steel companies in focus, gains of 2 to 4%, something like a Tata Steel, SAIL, JSW Steel, JSPL, all in focus today. And the latest update comes after China said that they are going to cut the country's steel industry output, and the lower Chinese steel output will put some relief on the Indian steel industry, which has been hurting because of cheap exports of China to India. And the industry also awaits safeguard import duties soon, and there are talks about it coming very soon.
Active today are the metal names, so bear that in mind. Kush Bora, are you trading any? And particularly SAIL?
I am, in fact, Hindalco was, one of our calls in our advisory, this morning. The second target was hit, and hence I could not, share it here with the viewers. But I still am quite bullish on two names at least, which is JSW Steel and Hindalco. While Hindalco is now facing the 200-day moving average resistance, I think this could be taken out with the kind of momentum and the price action that the stock is witnessing. So JSW Steel and Hindalco are the two stocks that we continue to like. SAIL is now shaping up. I think 115 is a near-term resistance, so just a little skeptical on those lines. Plus, there's a falling trend line resistance also that comes about around that level. But if you've got a position in SAIL, I wouldn't suggest that you book out because the momentum is just picking up. Keep a trailing stop loss around the 109 mark and continue to ride. If 115 is taken out in the coming days, you could see a stretch towards the 119 mark as well. So there is strength in metal names. Some of these have already moved. Others are playing a catch-up rally. SAIL is one of them. Hold it with a trailing stop loss.
Okay. Okay, Dharmesh, very, very quickly, anything on metals? You were positive is what you mentioned at the start of this conversation. Why so, given all the uncertainty, just perspective?
See, India remains largely, unaffected from any tariff which the US will level, because we are hardly any exporters of metal to the US as far as that is concerned. And China is having its own set of issues lying out there. And see, the China dumping or say the Korean or Japanese steel dumping into the Indian market is around 8 million tons. The total consumption is more than 140 million tons of steel. So it's a very minuscule amount of metals which comes into India, and because of industry own interests around there, we cite that there creates a price distortion into the market, which is not the case to my mind. It's more to do with the demand supply, and our base case thesis for the entire aggression into the metal space is domestically the infra spending has started happening again. So the capex is picking up, and that is what is going to drive the domestic consumption. And then you have to focus on inward metal companies like Jindal Steel and Power or JSW Steel, vis-a-vis Tata Steel. So over Tata Steel, if one is preferring JSW or Jindal Steel Power, you are better off.
Okay, point taken. Certain things to watch out for in trade tomorrow. You've got US PMI as well as ISM services data. Both of those more of macro indicators of where the US economy is headed, and then you have certain data coming out of China, US total vehicle sales, as well as employment change. All of those will likely some form, nothing major per se, but might impact markets. But in a market wrought by sharp corrections, here is UTI Asset Management on cash call. So where is it finding value? Here's what UTI AMC's head of equities, Ajay Tyagi, had to say about that. Listen in.
Look, there are opportunities selectively. I can't get too specific, as you're well aware, but let's absolutely. If I take a 30,000 feet view, Neeraj, I was on your show about 6 months back, and I said that, look, we love private sector banks. I would say that yes, they've corrected the least in the last 6 months, and we still feel that relative to where the entire market is, there is value in these banks, and these are very well-run institutions, which basically, are not only primed for credit growth, but they are institutions which are well primed for the entire financial inclusion theme and financialization of savings theme. So therefore, our clear predilection and our clear comfort in terms of both growth and favorable valuation still lies in that camp. If I look at the auto OE camp, both in two-wheelers and four-wheelers, this is again one part of the market which may not deliver immediate growth, but from a valuation perspective and looking at their growth prospects in the fullness of time do give us comfort. So there are, of course, beyond these two themes as well, there are cases within different sectors, there are businesses within different sectors which are still making sense. It's just that if you stack up the whole thing, you'll say that, look, there are very few cases of comfort and still more cases of discomfort. Yeah.
In those cases of comfort, does IT figure at all, Mr. Tyagi? And if I just further that to say pharma, some sectors which are clearly going to be impacted one way or the other with tariffs and the extent of tariffs that come in. How would you look at that scenario, and where would IT stand? Because one would argue that, like private banks, even Indian IT has relatively been slightly more resilient.
Tamana, I would agree here, and I would say that the correction, albeit not a very significant correction, but the correction that we've seen over the last 15 days in some of the IT names, both large and mid, is definitely giving us that much more comfort. Rupee depreciation and dollar strength is always good news for this sector. As of now, it looks like that IT services or outsourcing of IT is not on the radar for the president and his team to basically target. In any case, we are extremely positive around the let's say the IT budgets improving in the coming years after taking a breather over the last 2 to 3 years. So yes, IT looks attractive to us. We just have to be a little more selective there. You spoke about pharma. Now, this is one sector which has done fantastic over the last couple of years. Valuations haven't still corrected meaningfully. And, I'll go back to my response to your very first question, which is that there is a bit of an imponderable element here in this sector. We are, worried about maybe tariffs coming up for some of these companies exporting to the US, either in terms of formulations or API, actually being penalized by way of tariffs. So this is an imponderable. We can't say anything for sure. Valuations aren't very attractive. In fact, they've run up compared to their long-term averages. So I would say that not one of those sectors where you certainly would want to pull the trigger right now.
Okay, so that's great perspective coming at this point of time. Let me thank both our guests, Kush Bora as well as Dharmesh Kant, for joining us this afternoon, giving us all of those views. Last minute to go in trade today, and let's pull up where the Nifty is shaping and closing in at 22,350-ish is where we are at, 260 points gain for the day, and the Bank Nifty up around 0.5% thereabouts. Bank Nifty underperforming, slightly more subdued. Let's pull up the heat map as well on the Nifty 50, and it's a good breadth overall. A couple of financial names languishing at the bottom, HDFC being the heavyweight amongst them. But outside of that, you saw a good carpet of green across the board. Adani Ports, Adani Enterprises leading the way, nearly 4.5 to 5.5% higher on both of those. Tata Steel having a good day as well. And the metal counters have had a fantastic day. In fact, Nifty Metal top sectoral gainer as well. Auto index also doing fairly well for itself. M&M, the UBS hike in terms of target price aiding the stock higher. You have Eicher Motors as well doing well within the auto space. NTPC as well as the likes of a BPCL also among the PSU names doing well for themselves. IT stocks also doing well. You have a Tech Mahindra which is up nearly 3.5%. But just looking at the breadth, 2% plus, over 20 stocks doing 2% plus in trade, and nearly 35 stocks doing 1% plus within the Nifty 50. So that's just the kind of day we've had. The breadth even within broader markets was very solid. If we pull up the advanced decline and pretty much through the day we've had a very, very strong breadth, and that's really been welcomed by the street. Positive flows also likely is what we've been told, at least basis whatever we've been hearing from our desk teams. Let's also pull up the sectoral heat map. Try and zoom in because we've got all sectors in the green and India VIX down 1%, so all positive cues across the board. Look at the number of sectors trading 2% plus higher. Outside of the Nifty mid cap and small cap, which both have close 2% higher, we've got a good number of sectors doing well in trade today. Nifty Pharma did 1.5%, FMCG also up 1.5%. The Nifty Bank was probably the only underperformer in that sense, 0.5% or so higher. Let's pull up the broader markets as well. The Nifty mid cap index closing in nearly 2.5% higher, near the day's high in fact. So positive there. The Nifty small cap gained 2.7%, nearly 400 points up versus yesterday. So positive across the board. Can this momentum sustain is essentially going to be the question. But we'll have to wait for tomorrow for that. And let's hope to also look at how the DI and FI flows shape up. That's something I'll be curious to know. But with that, we're out of time on this edition of India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hello and welcome. Good evening. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Headline indices gain over 1% each to end higher. The Nifty ends about 22,340, whereas the Sensex jumps over 700 points to end about 73,700. Strong show from broader markets continue. Both mid and small caps surge over 2% each. All sectoral indices rally. Metal jumps the most on optimism from China's stimulus. Media index follows with gains of 3%. Meanwhile, IT, PSU banks, realty, oil and gas all jump over 2% each. Rupee strengthens by 33 paise to 86.94 levels. The strength comes amid broad weakening of the US dollar and easing crude oil prices. Goldman Sachs maintains buy on SBI cards with a target price of 912 rupees. The management expects credit costs and portfolio quality to improve in the coming quarters, thereby increasing margins. SBI cards market share seems to be stabilizing too. Profitability is expected to see some respite next year. Another stock in focus is Coforge. The shares rallied 10% today as the IT company signs its largest deal ever. It signed a $1.6 billion deal for product delivery and AI solutions with US-based travel technology firm Sabre Technologies. Most global brokerages look extremely positive, expecting the deal to boost the company's incremental value and improve growth outlook. One of the largest beneficiaries of China's stimulus measures is the metal space. The index shines today. The stocks gaining are Hindustan Copper, Welspun Corp, Jindal Stainless, Tata Steel. One of the reasons is that China is the world's largest consumer of base metals. Remember, base metals is a key influencer of global demand. Indian companies have struggled with weak pricing due to low Chinese demand. JP Morgan upgrades weightage on M&M Finance to overweight. Now, this comes on the back of improving rural economy. Diversification of business is expected to help disbursements. Credit costs are projected to rise by FY26. However, rights issue remains a key pain point. The stock of Bombay Stock Exchange cracks over 9% after the National Stock Exchange shifted the monthly and quarterly expiry days of futures and options contracts of Nifty, Bank Nifty, Fin Nifty, Nifty Mid Cap Select and Nifty Next 50 to the last Monday of the expiry month. Goldman Sachs lowers target multiples on pharma sector. The target lowered by up to 12% is done to factor in lower visibility from US exposure. Goldman lists some investable buy themes, targets Torrent Pharma as a company that has secular domestic stories with low tariff risk. Along with it, Goldman is bullish on Syngene Newland. Now, these companies are CRDMO plays for structural shifts in global research and development. Granules is in focus today as US FDA makes warning letter public. The letter was issued on February 26th. It highlighted problems with data integrity, quality and contamination. Analysts do not expect a faster clearance anytime soon. The Reserve Bank conveys its discomfort with non-bank lenders who offer perpetual lines of credit to customers. According to people who spoke with NDTV Profit, the regulator has raised issue with products where customers have the ability to dip into credit lines without fixed repayment schedules. Now, a perpetual line of credit involves loan windows for borrowers where they can borrow as much as they like from the lender within a specified limit. Such borrowers can repay their dues in part or in full as and when they have the cash flow available to do it. They may also continue to pay interest dues for as long as they wish without the account becoming a non-performing asset. India's chemical sector sees price stability in February. Chemical prices were mostly flat month over month in February 2025. In addition to that, crude oil prices between $71 to $75 per barrel supported flat to positive trends. In fact, analysts believe the near-term chemical prices are expected to remain range-bound. Biocon receives final approval from US drug regulator for dasatinib and Revlimid. Now, both drugs treat cancer, while dasatinib has the potential to make 20 to 25 million in the first year for Biocon. Revlimid, on the other hand, could yield $50 to $70 million for the company. Adani Group stocks extend gains as the market picks up momentum. Adani Green leads the pack with over 8% gain. On the other hand, Adani Energy also rises nearly 7%. 7 out of 10 stocks increase more than 3%. In fact, the rise in Adani Group stocks add over 47,000 crore rupees in market cap. PSP Projects secures approval from the Competition Commission of India for the acquisition of up to 30.07% equity share capital by Adani Infra from one of its promoters. Now, this approval marks a significant step in the transaction, potentially impacting the company's ownership structure and influencing its strategic direction in the competitive infrastructure sector. Aurobindo Pharma's arm, Auro Vaccines Private terminates license agreement with Hillman Laboratories, Singapore. Now, the agreement, originally signed on September 27, 2023, was aimed at the development, manufacturing and commercialization of a pentavalent vaccine candidate used in children's vaccination. Lupin jumps on double upgrade from Citi. The stock is upgraded to buy from sell with a target of 22,260 from 1,900 rupees. Now, the company US launches may sustain margin strength, whereas Lupin's base business margin expansion may sustain. Citi hails Lupin's non-US market business as well, that is showing good traction. Morgan Stanley maintains overweight stance on ONGC with a target of 416 rupees. The company acquires 100% stake in wind farm assets from PTC Energy. Morgan Stanley says the company complements earlier acquisition of 2 gigawatt of solar or wind asset platform. The acquisition comes when global oil majors are refocusing back on hydrocarbon production. UBS upgrades M&M to buy from neutral but cuts the target to 3,300 rupees from 3,460 rupees earlier. The upgrade comes amid outperformance expectations from the company's SUV segment. The SUV space may see high single-digit volume growth. Not just SUV, the farm equipment business may also perform well too. Now, UBS says M&M's share price correction is on the back of EV-related news flow, and that is an overreaction. Trend stock gains after the company's store count jumps. The company reports strong addition of Westside stores in Q4, clocking highest growth in at least the last 2 years. The company's website shows 240 stores for Westside compared with 238 stores as of December 2024. Zudio stores count stood at 672, implying 37 stores added in Q4. India's millionaire population rises 6% in 2024 as per a report by Knight Frank. Number of billionaires reach 191. High net worth individuals with assets over $10 million rose 6% last year. HNWIs are expected to rise to 93,753 by 2028, reflecting India's expanding wealth landscape. Massive fire broke out at Neogen Chemicals in Bharuch, Gujarat late last night. Now, the fire incident was reported around 12:03 a.m. on Wednesday, March 5, leading to a temporary suspension in production. Fire tenders were rushed to the spot to control the fire. Zydus Life launches Anvimo, an innovative treatment for hematopoietic stem cell transplant and kidney transplant patients. CMV infection remains one of the most serious complications in transplant patients. With the launch of Anvimo, Zydus has successfully reduced the cost by an impressive 91%, making CMV significantly more affordable for Indian transplant recipients. Now, the company also assured that Anvimo has established bioequivalence with the reference drug, ensuring the same high quality at a fraction of the cost. Boosted by improving domestic and international demand, new orders placed with Indian services companies rose at a faster rate during February. The uptick in growth underpinned a quicker expansion in output and a substantial increase in employment. Although firms noted that cost burdens rose further, the rate of inflation receded to a 4-month low. Meanwhile, the rate of increase in output prices was broadly similar to January and therefore remained above its long-run average. The seasonally adjusted HSBC India Services PMI Business Activity Index rose from January's 26-month low of 56.5 to 59.0 in February, indicating a sharp rate of expansion that was well above its long-run average. The HSBC India Composite Output Index also rose from 57.7 to 58.8 in the same duration, indicating a substantial rate of expansion. Federal Bank announces Vidya Balan as its first ever brand ambassador. Bank plans to expand marketing initiatives including TV ads and digital campaigns. Macquarie says India's return outlook shifts from egregious in October 2024 to now above par. The brokerages note that within India's top 500 stocks, at least 70% have experienced a pullback of 20%. The Nifty mid-100 segment's aggregate valuations remain high at near 30 times PE multiple, and earnings expectations still need to be reset at lower levels. Citi maintains sell on ICICI Lombard as lower growth expectations could affect capital gains. Tepid auto sales and continued competitive pressure in B2B businesses adds to their worry. Retail segments could witness the weight of competitive pressure. Limited ways to improve profitability may hurt investor sentiment. Jefferies maintains a buy on Varun Beverages. It says aggressive pricing led to the recent correction in the stock and calls the correction exaggerated. The brand is gaining strength against regional offerings. Valuation at 45 times one-year forward PE appears attractive. Strong summer serves as a key short-term trigger. HSBC maintains buy stance on Dhanuka Agritech. The brokerage firm cuts target to 1,550 rupees from 1,700 rupees earlier. HSBC says that the company's sales momentum remains muted, but the management expects a pickup in March. Higher import costs due to rupee depreciation drives the rationale behind the target cut. Tata Steel Europe Arm's underperformance drives the company's recent stock price movements against its peers. The company's Europe arm has high costs for maintaining and operating the company's operations. Now, these high costs are aging blast furnaces. Additionally, 2008 crisis slashed demand and prices tightened liquidity around the world. China has been dumping cheap steel in other countries. UK's exit from EU made exports costly, impacting demand. India may face AC shortage this summer over supply constraints. AC production is likely to be impacted in April due to compressor delays. The demand surge beyond expectations could lead to out-of-stock situations. Ongoing geopolitical tensions worsen supply chain issues, leading to demand surplus. Remember, India still imports roughly 40% of components from China. Chinese manufacturers are prioritizing shipments to the US ahead of expected tariff hikes. Major white goods companies may hike prices by 3 to 4% in April-May, raising AC costs by 1,500 to 2,000 rupees. The Commerce Ministry has a new member. Ajay Bhadu has been appointed as CEO of government's e-marketplace. He will assume this role in addition to his existing responsibilities in the Department of Commerce. This comes at a pivotal time as the platform transitions to a next-generation digital marketplace powered by Tata Consultancy Services. Currently, GEM has recorded a gross merchandise value of 4.58 lakh crore, reflecting a 28.65% year-on-year growth. Disney is planning to reduce headcount by roughly 6% of the total workforce of ABC News Group and Disney Entertainment Networks, as per Reuters. Now, this comes as the entertainment giant grapples with declining TV audience. The layoffs, which would affect less than 200 staff across both the units, are expected to be announced soon, with a majority of the impact on ABC News. Rescue operations in Telangana's Nagar Kurnool district enters day 12. 8 persons are trapped under the debris after a portion of the tunnel collapsed on February 22, 2025. The teams trying to trace the 8 people trapped inside faced a challenge in clearing slush, debris including metal, as the conveyor belt was dysfunctional. Now, the slush and debris pose a huge challenge to the rescue work. Millions of residents along Australia's eastern coast are preparing for the impact of the most southerly cyclone to threaten the region in more than 5 decades. Tropical cyclone Alfred, with strength the equivalent of a Category 1 Atlantic hurricane, is expected to cross the coast just south of the Queensland capital of Brisbane, home to 2.5 million people in the early hours of Friday, potentially at high tide, complicating the days ahead for emergency services. Chief Minister M.K. Stalin leads an all-party meet unifying Tamil Nadu parties against the delimitation exercise planned by the BJP. They believe that it is unjust and will reduce parliamentary representation of Tamil Nadu. The all-party meeting outlines certain demands. First, that the 2026 delimitation process be conducted on the 1971 census and continued for the next 30 years. Second, the number of parliamentary seats be increased. And third, that the necessary constitutional amendments be made. External Affairs Minister S. Jaishankar meets UK Prime Minister Keir Starmer during official visit. Now, their talks involved the progress of the free trade agreement between India and the UK. They also discussed taking forward bilateral economic cooperation and enhancing people-to-people exchanges. Farmers holds protest over alleged arrest of farmers against Punjab government at a Golden Temple. Now, farmers were also seen burning effigy of Punjab Chief Minister. Canadian Prime Minister Justin Trudeau accuses Trump of launching a trade war on Canada. Trudeau promises to bombard the US with retaliatory tariffs worth $100 billion. In a post on Truth Social, Trump spoke about increase in reciprocal tariffs, and angry Trudeau proclaims that Canada will never be the 51st American state. In his first address to Congress, US President Donald Trump lists out his priorities and first decisions. His highest priority is to rescue the American economy. To curb the inflation, he has called for permanent income tax cuts for all Americans. Now, he also plans on dramatically increasing the production and extraction of critical and rare earth minerals. These are essential for electronics, clean energy, technology, and some weapon systems. He reiterates his stance on reciprocal tariffs, announcing that they will take effect on April 2nd. During his address, President Trump clarifies that India will not be exempted from the reciprocal tariffs. The US will now impose tariffs equivalent to those charged by other nations. India has been charging auto tariffs higher than 100%, he says, citing India as an example. Efforts to soften the impact are ongoing, with Commerce Minister Piyush Goyal's US trip, as well as India boosting US imports by slashing tariffs on a number of products. China ramps up stimulus to guard economy from unseen changes. The GDP growth target for 2025 is set at around 5%. This comes after Trump's decision to double tariffs on Chinese imports, aiming to boost domestic consumption. China implements 10% to 15% tariffs on certain agriculture imports from the US. South Africa and New Zealand go against each other in the second semi-final of the Champions Trophy 2025. Victory for either side will see them take India in the final on Sunday in Dubai. New Zealand won the toss and chose to bat. Considering their head-to-head stats, New Zealand have won 7 of the 11 games against South Africa. One of the greatest cricketers of his generation, Australia batter Steve Smith, has announced his retirement from ODI cricket after the team's elimination from ICC Champions Trophy on Tuesday. Smith has named the captain of the national team for the tournament after primary skipper Pat Cummins was ruled out due to an injury. Smith led his troops all the way to the semi-final of the tournament before his team was eliminated by Rohit Sharma-led India. Before IPL 2025 edition starts, BCCI decides to tighten noose for the players. Now, India's cricket board extend its recently imposed SOPs on the Indian team to the IPL franchises. In these SOPs, players are barred from bringing their families in the dressing rooms even on non-match days. It follows after the BCCI comes up with a set of rules that barred personal managers from travelling in the team bus. In the same note, BCCI mentions that the team will travel in 2 different batches. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up.
The Nifty Sensex end in the green with Nifty snapping its 10-day losing streak. Adani Ports emerged as the top gainer, surging over 5%. All sectoral indices rose with Nifty Metal and Nifty Media in the lead. Whatever they tariff us, we tariff them. Whatever they tax us, we tax them, says Donald Trump about India during his first joint address to the Congress. India was also highlighted as Trump calls the nation one of the highest tariff imposers. Trump also says that US economy is their highest priority and that this government aims to make America affordable again. Also calls Joe Biden's term as an economic catastrophe. The Reserve Bank of India conveys discomfort with non-bank lenders who offer perpetual lines of credit to customers. The concern is around products with loan windows where customers borrow as much as they like from the lender within a specified limit. Beating the heat might be costlier this summer due to supply shortage in ACs. Surging demand, supply chain hiccups and geopolitical roadblocks could lead to a dip in ACs in the market this summer. New Zealand and South Africa go head-to-head for a place in Sunday's ICC Champions Trophy final against India. South Africa's Ngidi breaks the opting partnership by taking Young out. Despite that, the Kiwis are off to a good start after opting to bat first. Good evening, you're watching Profit 360. I'm Sanjana. Let's take a look immediately at how the markets fared. Benchmarks ended in the green and Nifty actually snapped its record 10-day losing streak. All sectoral indices rose with metal and media in the lead. Now we saw broader indices also closed higher, and my colleague Anushi joining in with a wrap of all the action today.
Well, a couple of highlights. Firstly, as you mentioned, that Nifty 50 benchmark indices have ended their 10-day losing streak and have ended with gains today. In fact, with over 1% of gains in Nifty 50 that we've seen clocking in. Some of the top sectoral gains, some of the top stocks which have gained include the likes of Adani Ports, which was the top gainer in Nifty 50 index, added over 11,827 crore in market cap. Even Adani Enterprises was another top gainer, which saw about 11,663 crore in market cap addition in today. However, we had something like a trend which did end up with gains, but it fell 4% from its intraday highs after the revised Stowe addition count that the company posted later on. Do note that firstly, when they had posted their Stowe count addition, it had seen an intraday high of 6.4%, but after the revision, it closed to 2.1% higher at the session's end. In terms of where the sectoral action is, all the sectoral indices have ended in green. This is not something that we've seen in the last couple of days. Nifty Metals was the one which was the top sectoral gainer. This was especially after the China stimulus measures which were announced. Amongst that, Nifty Metals has seen gains for the third consecutive session now. Even Nifty Media remained in focus. Nifty Media also remains in green for the second consecutive session. If we just include the top Nifty Metal gainers, we have the likes of Welspun Corporation, Hindustan Copper. But coming to the main action, that's the broader markets. Now, broader markets have continued to outperform the Nifty benchmark indices as we see. Nifty Midcap 150 ended in green for the third consecutive session. The top gainers here included the likes of Coforge and Hitachi Energy, while Nifty Small Cap 250 ended in green for second consecutive session with the top gainers including the likes of Craftsman Automation and IIFL Finance. In terms of where the market cap movement is, large caps added over 4.12 lakh crore in market cap. Top contributors being Bharti Airtel and Reliance Industries. Mid caps added about 1.89 lakh crore in market cap today. Top contributors being Adani Total Gas and Bharti Hexacom. In small cap space, we saw an addition of over 1 lakh crore. And this includes the likes of Hindustan Copper and Reddington. So this is the overall picture that we are seeing in terms of where the benchmark indices are, where the broader markets are, and which were the top sectoral gainers and losers in trade today.
Right, Anushri, thank you so much for bringing us that update. All sectors closing in the green today. And Ajay Tyagi of UTI Assets spoke to NDTV Profit about the sentiments of domestic investors. He also weighed in on FII selling, and let's hear more from the conversation.
The one very predictable nature of the stock market is that human behavior and investor behavior doesn't change. And if you talk about the retail investors in particular, as they say, they all think in herds. They get excited in herds and they panic in herds. So we've seen the excitement over the last 1.5 years. There were many professional, experienced investors who were calling out that markets are overheated. Certain segments of the markets are terribly overheated. Mid and small caps don't make sense. But yet, these were the categories where we just saw a deluge of money month after month. Now, markets have turned around. If you look at the data on a one-year basis, most parts of the market have turned negative, in fact, even large caps, and mid and small caps a little bit more. So obviously, to that extent, this is the next few months and quarters are going to see a reversal of the typical retail investor behavior, which is starting to panic. I hope not, but possibly stop their SIPs, maybe even redeem to some extent. So I won't be surprised if the same old script plays out once again.
And moving on, US President Donald Trump delivered his first joint address to the Congress, which quickly turned into a shouting match between the Republicans and Democrats. However, here are some of the key takeaways. A big focus was on the US economy in President Trump's first joint address to the Congress. Trump said rescuing the economy and making America affordable again is his top priority. Trump continued his tough stand on trade, saying that the system has never been fair to the US, even calling out India as one of its highest tariff imposers. Therefore, from April the 2nd, new tariffs kick in, and whatever tariffs are imposed on the US, America will match them. As for countries that don't lower trade barriers, Trump warns they'll be kept out of US markets.
Among my very highest priorities is to rescue our economy and get dramatic and immediate relief to working families. As you know, we inherited from the last administration an economic catastrophe and an inflation nightmare. Their policies drove up energy prices, pushed up grocery costs, and drove the necessities of life out of reach for millions and millions of Americans. They've never had anything like it. We suffered the worst inflation in 48 years, but perhaps even in the history of our country. They're not sure. As president, I'm fighting every day to reverse this damage and make America affordable again. Are about making America rich again and making America great again, and it's happening, and it will happen rather quickly. There'll be a little disturbance, but we're okay with that. It won't be much. No, you're not. Oh. India charges us auto tariffs higher than 100%. China's average tariff on our products is twice what we charge them. And South Korea's average tariff is 4 times higher. Think of that, 4 times higher. And we give so much help militarily and in so many other ways to South Korea. But that's what happens. This is happening by friend and foe. This system is not fair to the United States and never was. And so on April 2nd, I wanted to make it April 1st, but I didn't want to be accused of April Fool's Day. That's not, just one day cost us a lot of money. But we're going to do it in April. I'm a very superstitious person. April 2nd, reciprocal tariffs kick in. And whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth. Whatever they tax us, we will tax them. If they do non-monetary tariffs to keep us out of their market, then we will do non-monetary barriers to keep them out of our market.
As per the data that we've gathered, it's the machinery sector that has the highest trade deficit with the US, the pharma products, then followed by your pearls and precious stones. This stands at $11.8 and $6.3 billion, and the nuclear reactors at $3.5 billion. There are also other commodities that do have a higher trade deficit and could be negatively impacted. You have your textiles, your knitted as well as your non-knitted apparels, organic chemicals, articles of iron and steel, as well as vehicles. Now, when you talk about sector specific, well, up first you do have the chemical sector, and the top 5 molecules that are imported by the US by value are these 5 molecules. And when you talk about who benefits, well, up first we do have PI Industries. Now, it is the exporter of one of the top molecules imported by the US. You have UPL, where tariffs on China will make the company more competitive in terms of their US manufacturing for 4 molecules that they produce. And then you have Jubilant Ingrevia, which is the only non-China preparedin manufacturer and may see higher incremental volumes across different sectors. Now, talking about the auto ancillaries, well, customers are heavily reliant on Mexico manufacturing to serve US markets. Ford, GM, VW Group, BMW, Mercedes all have manufacturing units in Mexico and Canada. Direct impact is limited, but indirect impact is there because of the complex supply chains. Now, as company specific, well, you have SAMIL, 4% of their revenues come from Mexico, 11% from China, limited US exposure, however. Bharat Forge, on the other hand, 25 to 30% of our F524 revenues did come from the US. You also have a Sona BLW, 43% revenues from the North America region, and they do also have a small plant in Mexico. And JK Tyre has 3 plants in Mexico. Then you have a Balkrishna Industries, 16% revenue coming from America, and Sundaram Fasteners, where 20 to 25% of the FY24 revenues came from the US. And lastly, you have Timken India, where 15% of their revenues come from the US. So these are the companies in the auto space that could be in focus. And then you have the metal sector. Tariff will have an impact on steel and aluminium prices. Limited impact because of our immaterial steel exports to the US, but there is some tariff impact on aluminium exports, which are 5 to 6% goes to the US. Company specific, Hindalco, the largest Indian entity that will be impacted and will have a direct neutral to positive impact. JSW Steel, their Ohio arm, will benefit because it's 4.5% of their revenue mix. Then you have Cummins. Tariffs on Mexico may create opportunities in the components and diesel engines for Cummins India. And then lastly, you have the IT space. Direct impact is mainly via nearshoring from Mexico and Canada, which is less than 5% of supply. Stocks that are most exposed is an Infosys, LTIMindtree, HCL Tech. Least exposed at KPIT Tech, Tata Tech, and Tata Lexi.
And an eye for an eye will make the whole world blind is what Dr. Ajit Ranade, a noted economist, has to say about reciprocal tariffs. Also tune in at 6 p.m. for a detailed analysis and discussion on the impact of these tariffs in India.
The world we are in, though, is moving towards higher and higher tariffs, with the US taking the lead. Now, what happens if reciprocal tariffs come in, and how can we avoid that kind of situation? Clearly, this will be a bad thing for us, isn't it, Dr. Ranade?
It would be a bad thing. It's not just bad thing for India, it's bad for the world, because this tit for tat strategy, if I may use another metaphor, not quite appropriate, an eye for an eye will just make the whole world blind, right? So this tit for tat mercantilist thinking is not appropriate for the 21st century. This was something we have seen in history, and it just ended up very badly. What happens is that the tit for tat tariffs, reciprocal tariff escalation, not only increases the cost and the prices and it actually decreases volume of trade. And that is a double whammy. So in fact, that will hurt us very badly. In fact, here we are trying to sustain high economic growth of at least 8%, inclusive and sustainable. It is not possible if we don't also have export as a driver of growth. And to be exporting to the rest of the world, we need to have a world which is not acting on these mercantilist tendencies. And this is what Mr. Trump has started. And it seems, that big resounding applause he got in the Congress, Senate or Congress, is not a good sign, because this is going to hurt Americans as well. Remember that high import tariffs on goods imported into America will cause inflation to go up. Already there is, high inflation. And in fact, there is one theory that one of big factor leading to President Trump's victory over Biden was the inflation. And this is just going to worsen inflation. So Mr. Trump's idea is to compensate for the high import tariffs by decreasing income taxes to Americans. But that is not possible, because the fiscal deficit just is so large already. They don't have room to cut taxes.
So Dr. Ranade, very quickly, so what can we do? What can we do?
I think we have to aggressively start moving towards lower tariffs. We have to negotiate the average tariffs that Indians charge is 13%, as you said, 12%. And our manufactured goods face about 4%. So I think there is room for 7-8%. There is room to talk and reduce our import duties. We don't have anything greatly to fear by a flood of American manufactured goods imports into India. I don't think it's a big threat to Indian industry. So, when Trump said 100%, he was referring to Harley Davidson motorcycles. Surely, we shouldn't be threatened by Harley Davidson motorcycles, flooding India. By the way, on agriculture, the difference is that our duties are 39% and US is 4%. There, I think we have an opportunity, because one of the major exports of the US is corn, maize. If it comes into India, already we are diverting to ethanol production, and which is causing high cost to the poultry industry. So maize coming into India at lower duties may not be a bad thing. And cotton is something we need to, calibrate. We can lower duties, but we can also impose some quotas. No discussion has happened about quotas. So we can say we will allow you low import duties for American goods to come into India, both agriculture and non-agriculture, but we will also agree on quotas. And that's what the BTA, the bilateral trade agreement details will be in that.
And on to an NDTV Profit exclusive. The Reserve Bank of India has directed large non-banking financial companies to stop and not renew the practice of extending lines of credit to companies. Now, this decision comes from concerns that these repayment structures in these particular advances often disguise the stress that's faced by borrowers. A line of credit, put quite simply, is a flexible loan from a bank or a financial institution similar to a credit card, but with a set credit limit. My colleague Vishwanathan joins to explain the impact on NBFCs.
So sources are telling NDTV Profit that the Reserve Bank of India has raised concerns with how NBFCs are extending credit lines to some of their borrowers. So essentially, this is specific to perpetual credit lines, or credit lines where the borrower does not have a defined repayment period, has a certain limit available to them, and no such restrictions on how much they can borrow and when they need to repay these loan amounts. In fact, borrowers can borrow money through these credit lines and then repay them over years if they wish to, only paying certain interest amount to ensure that the account continues as a standard asset. Now, it seems that the Reserve Bank of India, in a recent meeting with chiefs of NBFCs, has raised concerns with the quality of this product. The RBI is saying that these NBFCs typically do not have any visibility on the borrower's ability to repay their loan amounts and whether they're repaying money using more loans from this credit line, or if they're using funds from their own businesses that currently exist. exists. So essentially, if a borrower has borrowed, let's say, 10 lakh rupees worth of a credit line, of which they have used about 2 lakh rupees worth of loans. So instead of taking money from their own business lines, they would borrow maybe more money from the existing 10 lakh limit and then repay the old loan. This ensures that their outstanding loan amount does not change, but the account remains standard for a longer period of time than necessary. The RBI has suggested to these NBFCs that they may want to slow down on these loan products and eventually stop them over time and not create any kind of disruption in the existing loan product, because currently about 50 to 60,000 crore worth of loans have been extended by NBFCs to borrowers. These borrowers could include salaried individuals. It may also include small business owners and self-employed individuals who might be borrowing money from large NBFCs.
And it's another NDTV Profit exclusive. Ola Electric has decided to process vehicle registration in-house to cut costs. That is significant because the EV maker could register only a third of its sales in February. My colleague Tushar now joining us with all of the details. Tushar, give us some context. Why is this actually important, and what does this news, what is the impact of this now?
Good evening, Sanjana. So what Ola Electric is now doing, and sources are telling us, is that the company is looking to do the vehicle registration process in-house to cut costs. It believes that the in-house team can reduce the cost of registering a vehicle, which is about rupees 1,500 to 1,800 rupees, to about 300 rupees. So by a fifth almost, they can reduce the cost of vehicle registrations. That was the amount that it was paying to vendors like Rosmerta. Now, Rosmerta Digital Services. Now, the company has severed its ties with Rosmerta Digital Services, but it has not paid the dues owed to this vendor, which is about 17 to 18 crore rupees. So still that's pending. Now, the crux of the matter is still to save cost. Remember, if you are registering a vehicle at about 1,500 to 1,800 rupees, companies claiming they can do it at 300 rupees, a fifth of the cost, at a fifth of the cost, so considerable savings there. But what we have to also see that this also means that it will have higher sales in the month of March. Remember, as you already said, that the company could register about a third of its vehicles, so of its vehicles sold in February. So the company sold about 25,000 scooters in February, but only about 8,300 were registered. Including these unregistered vehicles, the company should clock sales of 42,000 units in the month of March. So the crux of the matter is still to save costs, but it also means that the part towards profitability is going through so small or granular details for the company.
Absolutely, Tushar. Thank you so much for putting that in perspective. Ola getting in now to some registration issues and more exclusive stories coming up. The government has concluded public consultation on forming regulations for the Digital Personal Data Protection Act. Now, Rishabh joins in from what he is picking up.
Right, this is coming in from the Ministry of Electronics and IT. Our sources are telling us that the public consultation process for the DPDP rules has concluded. This comes after the government had already extended the deadline from from February 18th to March 5th. And today is when the deadline is exempted, and there will be no extensions to this. Remember, the initial draft of the DPDP rules came in after about a couple of years. It took about 18 months for the DPDP rules to come out on January 3rd this year, finally. There were a lot of concerns coming in from the industry, following which Union Minister Ashwini Vaishnav had also held a public consultation session and addressed these various concerns. Some of these concerns were the fact that in the DPDP Act, the data breach reporting timelines were very unclear. Another concern that came in was on international data transfer. So transfer of Indian data to other countries, to servers based in other countries. That was another issue that industry seeked a lot of clarity on. And another concern was the compliance burden that would now fall on social media firms, as well as on a lot of Indian firms which are not probably ready to have their own sort of data regulation framework in place. So these concerns have now been addressed. We will soon have the DPDP Act. That is what sources are telling us, and we will continue to track that as well.
I wanted to ask you, so what was the need for actually taking these public consultations in the first place? And if you could just give us some context and background for this.
Right. So public consultations are a procedural thing. They are taken for any sort of bill that is taken, that is passed by the government, and then the ministry then takes it on itself to consult all the public stakeholders that are involved. That includes investors, that includes large social media firms such as Meta, such as Instagram, such as YouTube, as well as companies like Zomato and Swiggy, which will also have, which also harbor a lot of data in terms of addresses, personal information. So the way they the way they will govern the data that they already hold of these Indian users, that is what was required. A framework was required for these companies to sort of hold, store and process this data, and the DPDP Act will now give a way forward on how this will happen.
Right, Rishabh, thank you so much for bringing us those updates, the protection for digital personal data soon. And that's all the time we've had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today we have with us on our radar a company which has in fact seen initiation in coverage. This is from the textiles sector. Sanatan Textiles also recently listed, and we thought it would be a good idea to take this one up, considering we've had a handful of brokerages initiate coverage on this particular company. So, well, as the name suggests, it is in fact in the business of textiles. It has presence which spans across sectors, which would include something like polyester as well as technicals, technical textiles. And it has three yarn verticals essentially: polyester, cotton, and yarns from technical textiles and industrial uses. So as you can see, it's a classic textiles company out there, and well, it does see a lot of traction in terms of these three largely well divided verticals. As far as the products are concerned, as on June 24, 2024, the company manufactures more than 14,000 varieties of yarn products with SKUs in the excess of, well, around 190,000. So it is significant in terms of the kind of traction that we are seeing for this particular company. And we're going to talk about the fundamentals of the company, sure, fair enough. But, at least as far as this particular company goes, well, like I said, mostly deals in polyester yarn, along with cotton and, some of the other technical ones, where, well, my colleague Mahima, when she joins us, will also give us a better idea of how the split comes through. Well, speaking of which, let's take a look at all the factors that we're going to talk about and judge the company on the base of what it has in fact done in the past. So naturally, we rate the company on the income statement, and then we talk about the balance sheet. The income statement will give you a fair idea of how things have panned out for its revenue growth, its operating profits. And of course, along with the balance sheet, we also talk about the cash flows. And based on that, the kind of return ratios that we are seeing as well. And we move beyond that to take a look at your shareholding, street credentials, valuations, and outlook. And that would give us a better idea of how things could potentially pan out for the company. But on that note, let's get in my colleague, Mahima Vachrajani, who's also joining us, and to give us more insight into the company. So Mahima, welcome back. And thanks for taking the time and tell us about the top line and the profitability of this particular company. I'm really surprised that it did list at a very opportune time, especially given the fact that, well, what you're about to tell me.
Right, absolutely. It got listed on 27th of December, and that's when it did see good amount of listing gains as well.
Yeah.
But we'll talk about the stock performance a little later, in the show. But 9 months FY25 performance have improved quite a bit. The revenue stood at 2,266 odd crores. EBITDA stood at 195 crore. Margin stood at 8.6 crores, and net profit stood at 116 odd crores. Margins have improved from around 7.9% to 8.6. This 7.9 figure was 7.9% figure was in FY24. FY24 revenue stood at around 2958, and EBITDA stood at around 227 odd crores, and net profit stood at around 134 odd crores. So while the 2-year CAGR picture is a little down the road, but overall 9 months FY25 performance has been strong, and in terms of YY growth also, EBITDA saw a growth of around 32 odd percent, and net profit also saw a growth of around 43 odd percent.
So, that's as far as your top line goes. And of course, a lot of these numbers are from the DRHP, which also gives you an idea about how things have panned out for this particular company. And remember that if we are going to see a decline, it's really surprising that we've seen so much traction in its IPO, which means that the prospects of the company could potentially be much better. But I'm going to move and shift focus to the balance sheet there. And again, in terms of the balance sheet, it does have a significantly high gross debt. In fact, its net worth stands at around a little less than 1,400 crores, and its overall gross debt stands at around well over 1,600 crores. So it's well over 1:1 in terms of its debt to equity. Sure, textile companies in general do have some amount of debt. A lot of this debt is required for working capital, and to a certain extent expansions if they have that in plan. And we'll take this up with the management as well with respect to why this gross debt is still high, especially when they have in fact gone ahead and done the IPO, or whether or not the proceeds from the IPO have been used to a certain extent to reduce that debt. Because do remember that the company listed back in December, and we're going to wait for more details and updates on that. But at the moment, we're going to give this a thumbs down, because even the balance sheet is looking at a slightly higher debt number, which in turn has led to higher finance costs, which in turn has led to lower profitability number. So there's another factor that can weigh down on the profitability of the company. So that's as far as your balance sheet is concerned. Mahima, what about cash flows?
Right. Just before I move on to the cash flows, just a brief about the IPO. It was a fresh issue of 400 odd crores,
right,
and an offer for sale for 150 crores, out of which they had said that around 160 crores will be used for repayment of borrowings,
right,
and around 140 crores for investment in subsidiary, and of course there also repayment of borrowings. So just to give viewers that context. In terms of cash flow, well, the cash flow from operations picture has improved for this particular counter. In first half of FY24, the cash flow from operations stood at around 16 crore, which has improved to 64 crores now in first half of FY25. But overall net cash flows position has weakened a bit from around 5.7 odd crores in first half of FY24 to 14 odd crores in first half of FY25, and this is because of two main reasons. Cash flow from investing activities has seen an outflow of around 36 odd crores, and this is for the purchase of property, plant, equipment. So they might have made some investment when it comes to their manufacturing capabilities, and the other major investment was in their subsidiary, which was for around 77 odd crores, which is why overall net cash flow position has been negative 14 crores. But this is just the picture of first half of FY25. Probably considering the whole year picture, it might turn net cash positive, but that's something to wait and watch. But for now, since cash flow from operations have improved, we've given a thumbs up when it comes to the cash flow metrics.
And that's probably the only reason why we're giving this company a benefit of a doubt in terms of the cash flows, because of the improvement in your cash flows from operations, and assuming that they are in expansionary phase, and that your net, under those circumstances, your net cash flows or your free cash flows won't be present at this point in time, assuming that the company is looking to grow. But that brings us to the matter of return ratios. it's not very encouraging. So firstly, the company was working with staggering return ratios back in FY 2022. In fact, very, very healthy return on capital at around 36%, return on equity at around 44%. But this actually took a dramatic turn for the worse in 2023, and it came down to around 15.5% for ROCE, and ROEs at around 14.4%. And in FY24, this has come off even further to numbers which are well below 12%. Now, if you go by the thumb rule of around 20-25% for both ROE and ROCE, well, the company is at a far cry from there. But I'd reckon that this once again will naturally be a consequence of certain challenges with respect to the entire sector, or for that matter, the company adapting to a certain change which may have led to these following ROEs and ROCEs. And the question then is that, can these numbers improve? It's something that we'll take up with the management as well. But for now, this is how things stand. So this is as far as your very important, financial statements go. Let's look beyond and talk about the shareholding. Mahima, what can you tell us?
Right. So since it's just a recently listed company, we have the shareholding data as of 31st December 2024. Strong holding when it comes to the promoters holding, around 78.6% is held by promoters. FI's holding is around 3.8%, DI's holding is around 8.9%, and around 8.8% is held by public. In terms of the total market cap of Sanathan Textiles, it stands at around 2,600 odd crores, out of which around 380 odd crores is the free float available right now.
Right.
So that's the view with respect to how shareholding goes, but strong promoter holding, which is why we've given a thumbs up to the counter.
And of course, the promoter holding is slightly above the minimum that we require, that's 75%. So naturally, over the 5 years, we will see this equity reduce because that's mandated by the SEBI laws. But it has plenty of time, and it's not significantly above the 75% mark. So that's something I reckon that investors can keep in mind. But like I said, the company has plenty of time to bring their shareholding, the promoter shareholding, from 78.6% to 75%. But in terms of street credentials, as Mahima mentioned, that it had a very strong listing, and since then we have seen a deterioration in your broader markets as well, where your mid cap and your small cap indices have come off significantly, and this particular company is no exception. So we have seen a 25% decline since its listing price. From its listing price. In fact, it's trading near its issue price right now, a little bit of depreciation there. And it is also down around 14% on a calendar year to date. So there has been weakness here. That's as far as street credentials go. But I reckon that, two of the most important factors that we are watching out for is valuations and outlook, because a lot of things hinge on this. So, Mahima, valuations.
Right. So, when valuation comes into picture, Sanathan Textiles as compared to its peers, the forward valuations look, attractive. And of course, this is on the back of the kind of growth also. So for Sanathan Textiles, we've taken the forward valuations from the ICICI Securities reports, in which they've said that by FY26, they expect the revenues to double for this particular counter, which is why, the valuations as compared to FY25 slightly rise to around 18.3. But when compared to peers, the valuations look attractive for Sanathan Textiles. KPR Mill, forward valuations as per Bloomberg stand around 32 times and will come down to 25 odd times. Vardhaman Textiles has slightly lower valuations as compared to Sanathan Textiles, but it is not as diversified as Sanathan Textiles is. So it has forward valuation of around 12.5 times and 11 times. Indocount has similar valuations as compared to Sanathan, and Garve Technical. Although this Garve Technical Fibers is has more contribution coming in from the technical fibers segment, and that's why the valuations there are much more expensive as compared to Sanathan Textiles. So forward valuations as compared to peers look cheaper, and the growth that ICICI Securities is penciling in, compared to that, valuations look attractive, which is why we've given a thumbs up right now when it comes to valuations.
Yeah, but as Mahima mentioned, that Garware Technical in this case is a slight exception, which is why you may not want to consider that, but it is comparable to KPR Mill or Vardhaman Textile. And of course, the case for the fact that the company is going to look at a very, very strong FY26. So speaking of the outlook, Mahima, I reckon that's the reason why the company got such a staggering listing in the first place. So tell us about that as well.
Right. So, in terms of outlook, again, before I move on to that, ICICI Securities just day before yesterday came out with a report which have initiated a buy with a target price of 461.
Yeah.
They're expecting a 3-year CAGR growth in terms of revenue, which is 28%. In terms of EBITDA, it is 42%. And in terms of PAT, it is 24%. They're saying that strong growth will be driven by commissioning of Punjab unit in first quarter of FY26. Now, what they're talking about, the Punjab factory, the unit that they're talking about, they are expanding their manufacturing capacity there. They have advanced stages of commissioning a greenfield capacity in Punjab, and they're also anticipating commissioning cotton yarn operation of Unit 4 in Silvassa factory as well. In terms of capacity expansion plans overall, polyester as of FY24 stood at around 2,750 metric tons, which will go to around 4,56,000 metric tons by FY27. And for cotton yarn, which is around 14,000 metric tons as of FY24, will go to around 24,950 metric tons by FY27. This is the estimated capacity expansion that the company has planned. So this is the overall outlook. So outlook definitely looking strong. They are planning to add capacity, and plus we are also expecting the Bangladesh +1 strategy that will play its part, the UK +1 strategy also playing its part, which is where the growth will come in.
Right. So, well, we do have the management here with us, but I want to take you all through the overall ratings. And this is where the outlook and the valuations become extremely important. So, if you judge the company not by what it has done so far, but what it is expected to do, that's when things change completely and dramatically. Sure, a lot of the ratings that we've given the company are on the back of the history, but it does seem like the outlook is strong. It's not overtly expensive at the moment, which is why, maybe the ratings that we are giving to this company may not necessarily be something that you'd want to go buy. That said, we're still looking at a 4 out of 8 as far as their overall rating is concerned. But on that note, let's get in the management of the company. We have Paresh Dattani, he's the CMD of Sanatan Textiles, and Sameer Dattani, he's the Executive Director at the company. Paresh, let me start with you. I reckon that all the focus is now going to be on what the top line can look like in FY26, your greenfield expansion that you have planned for, and the kind of contribution that can bring. So my first question is that if you could give us timelines on your greenfield expansion, and when can that start coming into play, and at what point in time will it meaningfully start contributing to your top line and your bottom line?
Yeah, good morning. As far as the Punjab facility is concerned, we are in the advanced stage of the plant coming up. We will be commissioning in the first quarter, FY26. And we will be starting that in a phased manner and coming up to the full capacity in about a month and a half or 2 months from commissioning. So that by the end of the first quarter or a month more than that, we should be down to the full capacity. So if you look at the overall capacity of this plant in the first phase, we are putting up 255,000 tons of filament yarn, which would give us a top line of about 2,900 crores. In the first year, that's FY26, we should do about 70% of that, which should be close to 2,000 crores. This and the existing Silvassa facility, which is giving us 3,000 crores in FY25 also. So we should end the top line of FY26 at about close to 5,000 crores.
Okay. Sameer, if you could give us an idea about, post-IPO proceeds, how they've been used, the impact it has had on your balance sheet, and what does your current balance sheet look like? So where does debt stand at right now? And if there are any plans to likely see this number change going forward? Do you think that the gross debt could increase or decrease going ahead?
So in the IPO, we had clarified that the proceeds will be used to repay the debt. 400 crore rupees out of the primary will be used to repay the existing debt as well as the new borrowing for the new facility. We have completed that. We have repaid the 400 crores and reduced that burden on the balance sheet. All the other debt that you see on the balance sheet is only for the new facility, which is going to start up in the first quarter, like Paresh Bhai said. And going ahead, once the plant commissions, we're going to have strong positive cash flows to ensure that we continue to repay the debt in time in the coming years.
Right. Paresh, Mahima also joining in. I just wanted to understand that, there are huge targets when it comes to, increasing your capacity right now. What does the capacity utilization stand at right now? And what is the kind of capacity utilization that will take place once, in FY26, both your Punjab as well as your Silvassa Unit 4 capacity, is at its, full operation?
As far as the Silvassa is concerned, we are even today operating at full utilization, which we've been doing for the last couple of years. We've been stressing assets fully. As far as the Punjab facility, as I mentioned, FY26, we should do about 70% of the capacity. But the following year, we should be up to fully more than 95% utilization on the Punjab facility.
Samir, in terms of your product mix in FY24, polyester stood at around 80% and the balance was with cotton and other technical textiles. Is this mix likely to change as we move into the next couple of years? And does that also, what sort of an impact can it have on your operating margins?
So what's interesting about us at Sanathan Textiles is that we are, in three segments of the textile chain: in polyester, in cotton, and technical textiles. Now, if you've seen the current budget from the government of India or all the kind of push and incentives that the government is giving, it's keenly focused on all these three textile segments: the polyester, cotton, and technical textile. Our current breakup, as you mentioned, is 80% polyester, about 15% cotton, and 5% technical textile. And our business strategy, our plans ahead are to expand all these three segments, because we are very bullish on the kind of demand that India is going to see for all these three yarns in the coming years. With the growth in consumption, with the growth in e-commerce, brand, downstream, with the big brands coming to India and sourcing locally. And of course, let's not forget, globally, there's a Bangladesh +1 opportunity that India is poised to encash upon. All these things will require more yarns. So we are quite clear on our outlook in the coming years, and in sync with our outlook, we're expanding all three segments in a phased manner. The polyester facility starting first, where we'll be more than doubling capacity, after which we'll have an expansion in our cotton yarn facility, where we'll be adding at least 70% additional capacity from what we have currently. And then the technical textile, which is a small segment of about 5% currently, we'll be doubling capacities in that as well. So we are very well poised to ride this journey and this growth of the textile sector in India in the years to come.
And Samir, as you rightly mentioned, there's Bangladesh +1 strategy that will also play its role. Right now, your revenue mix in terms of domestic to exports is that domestic is around 96% and the remaining 4% is exports. Do you think this mix will change from a longer term perspective, let's say by the end of FY27, and how will that change and what will the margins be like then?
No, Mahima, if you see, in the last few years, our export has reduced a bit. And that's purely a business strategy, because the kind of margins and returns that we're seeing in the domestic market, demand is stronger. And I think that will continue because of the kind of geopolitical global scenarios that you're seeing. We feel like the India story is far more stronger, and our current business strategy is focused on about 90% revenue from our India domestic operations. Having said that, of course, we have a lot of customers who export our yarn products in the form of fabrics and garments. So those indirect exports will continue to grow because of the UK +1, Bangladesh +1, and all other such opportunities that the Indian textile industry will have.
Okay, so Paresh, just a clarification on your gross debt. At this point in time, what is your overall gross debt? And will this number come down in FY26 or FY27?
As on 28th of February, We have a debt of 947 crores on the subsidiary. That is the debt we have taken to put up this plant along with our contribution. We have totally put in about 1,400 and odd crores already invested in the plant. And we long-term debt at the end of the project will be close to about 1,200 crores.
Okay. All right. Well, there you have it. So there's a lot of clarity from the management that's been given, and especially when it comes to the outlook of the company. So not only are they looking at expansion, but they're also expecting demand to hold up, and that actually will play very favorably for the company. So a lot of tailwinds that the company is expected to look at, and of course we'll keep an eye on this one as well. But on that note, also thanking both Paresh and Samir for joining us and giving us that much more clarity, that much more insight into the workings of Sanathan Textiles. But on that note, we are completely out of time on this edition of KYC. But lots more lined up on the other side. Stay tuned in, and we'll be back in just a bit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hi, we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. My name is Alex Matthew, and today I'd like to talk to you about booking losses. I know you've probably heard that it's a bad idea to convert notional losses into actual losses when it comes to your equity portfolio, but we're here to tell you that that might actually not be a bad idea because you'll be able to set off the tax that you might have to pay on capital gains even years from now. Joining me to talk about this is Arvind Rao, who is the founder of Arvind Rao and Associates. Arvind, first question. Is it not always a bad idea to book losses?
Not at all. In fact, as funny as it may sound, but there have been occasions where people have had these impressions that income tax is always payable on profits. And whatever losses that you make or book in equities, that's a separate account. You regardless of the losses, you still have to pay taxes on the profits. But when we tell them that it's not the case like you sounded, but it's actually the net of this on which you have to pay tax. So we've got those those aha moments from certain investors as well. So at typical occasions like the point in which we are now, which is almost the year end, and given the kind of fall that we have seen in the markets, I'm sure many portfolios are sitting on losses. So there is a concept which has been more in vogue over the last 2-3 years, what is also called as tax harvesting. So this is a good time when one can make good use, if I can say so, of these losses. So the concept is very simple, that you convert your notional losses into actual losses, and you get to offset these losses against whatever gains, if there are any, that you might have made during the year. And you then pay tax only on that profits. And when we say book losses, it does not mean that you need to get rid out of your position or whatever you were holding. You can always buy that back within a certain time frame and continue holding it as your portfolio component. But by converting the notional into book losses, what it also helps you is to leverage and manage your taxation on the gains for this year in a better way.
Okay, so help me understand a couple of aspects here, because this is not evasion of tax. This is management of tax. It needs to be spelled out very clearly because the law provides for this to take place. Now, I need a few clarifications. Are we talking about short-term capital gain, capital losses, which is less than 1 year of holding, or long-term capital losses? And
what is the provision that allows me to set it off against not just this year's gains, but future gains as well?
Okay, fair. So if I understand it right, and Alex, you can correct me if what I'm answering is not helping your query. So let me spell it out this way: is that short-term losses, if there are any, and you book them, can be adjusted only against any short-term gains that you might have made, or short-term losses can even be adjusted against any long-term capital gains that you might have. So short-term works both ways. I'm still talking about losses that you might have incurred during the year. Okay. And if there are any long-term losses that you have in your books, if you book them, those can be adjusted against long-term gains only. So short works with both long and short, whereas long will work only with long-term gains. This is as regards the position of losses for the ones that you incur in the current year. Now, let's say that you do not have any